If action-packed was anything to go by, welcome to today's trading session. You're watching Power Breakfast here on CNBC TV18 in the Mumbai News Center. I am Hormas Fatakia. Let's first take a look at how the Asian markets are starting off before we get to the big developments of last night. Well, it's a fairly mixed picture, if you could call it that. The Hang Seng currently trading with losses of over 1%, and the South Korean markets too are trading with gains, but not substantial ones, after the US announced a deal with South Korea on the trade front, and a 15% tariff was imposed there. So 1% lower for the Hang Seng. The Kospi trading with gains of just 0.25%. The Nikkei is the outperformer today, 0.8% higher, and the Shanghai Composite is trading lower. So Hang Seng and mainland China's indices are trading lower, and that is because the manufacturing activity in China has contracted more than expected, and it has declined for the 4th straight month today. But the big development for last evening and for today's trading session is the big story that can have ramifications for our own markets as well. US President Donald Trump has said that imports from India will face a 25% tariff, and also announced an unspecified penalty over India's purchases of Russian weapons and energy that could be imposed on the 1st of August. However, at a press conference later in the day, he said that the US continues to negotiate with India, quote unquote, right now. Listen to what he had to say.
Well, we're negotiating right now, and it's also BRICS. You know, they have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. It's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. It doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country, because money is going to pour into the United States like we've never seen before. Well, we're talking to them now. We'll see what happens. Again, India was the highest, or just about the highest, tariff nation in the world, and one of the highest, 100 points, 150 points or percentages. So India was one of the highest in the world. They had won 175%, and higher than that. You know, there's another higher one is Canada. They've been charging our farmers 200%, 300%, 400% for years, and nobody did anything about it. But India is one of the highest, so we're going to see. We're negotiating with India right now.
Meanwhile, one of Donald Trump's top trade advisors, Kevin Hassett, has said that he hoped that India will open up their markets to the US, and called the trade situation with India very asymmetric.
Their tariffs have been so high on us that there's not a heck of a lot of trade. That's right. No, it's a very asymmetric situation. I think that we're hopeful that India will open up its markets to us. That's the really big headline, I think, of the EU deal and as the Japan deal and the other deals in Asia, is that they're opening their markets up to our farmers, to our producers, to our small businessmen, who can now sell their stuff there without lots of red tape. And if we could do that in India, that would be an absolute game changer for the global economy, because it's such a large and growing economy.
Meanwhile, the Indian government has issued a measured response to Donald Trump's announcement of a 25% trade tariff on Indian goods. Abhimanyu is joining in with more details on this. Abhimanyu.
The Indian government is studying the implications of the US president's statement on tariffs which have been levied against India from the 1st of August. The government has issued a statement and has said that it remains committed to the objective of a fair, balanced and mutually beneficial bilateral trade agreement with the United States. It has also reiterated that it's going to attach utmost importance to the interests of farmers, entrepreneurs and MSMEs, and is going to take all necessary steps to secure India's national interest. It remains to be seen what kind of further action would be initiated by the Indian government, even as the tariffs are going to apply from the 1st of August. Also, negotiations are going to continue for the first tranche of a mutually beneficial bilateral trade agreement between both the sides, for which the US trade delegation is slated to visit New Delhi on the 25th of August for the 6th round of negotiations. No details yet have been issued by the American government as far as any penalty on import of oil and gas from Russia is concerned. It remains to be seen whether there would be any change in the sourcing of imported oil and gas as far as India's import basket of these products is concerned.
Abhimanyu, thanks a lot for that. And Parikshit is now also joining in with more details on the tariff announcement and what White House officials told CNBC TV18 exclusively. Parikshit, good morning. There are a lot of issues that still need clarity here. What are you picking up?
Well, the most important point is the tariffs will come into effect on the 1st of August. So this is clear as of now until there is any kind of deal struck. In the next 24 to 48 hours, the 1st of August deadline is sacrosanct. This is what White House officials told CNBC TV18 exclusively. Number two, the reciprocal tariffs currently in place have exemptions for certain goods, as we have seen, such as semiconductors have zero tariffs. Pharmaceuticals have zero tariffs. Steel, aluminum, autos, they are exempted from these tariffs because they are being treated under Section 232 of US's Trade Exemption Act. Now, this means that Donald Trump can change tariffs on these goods on grounds of national security. The status of these goods, such as pharmaceuticals, such as semiconductors, steel, aluminum, and autos, does not change. What does this mean? They will still, after the announcement by Donald Trump for India on 25% tariff, pharmaceuticals, semiconductors will continue getting zero tariff treatment. Steel, aluminum, which attract a 50% tariff, that continues as it is with no additional 25% tariff. Autos, for example, are charged a 25% tariff under Section 232 on grounds of national security. That stays it is. There is no additional 25% because of Trump announcement. The final paper on tariffs, meaning the tariff lines, will be released in the next few days. For the moment, it has not been released. Only a top-line rate of 25%, which is an across-the-board tariff, has been announced. No additional details on the penalty. So this means this is a warning tactic, a negotiating tactic by Donald Trump. He's acting tough. He's telling you to come to the negotiating table and agree to the US's demands.
All right, Parikshit, thank you for that very important update. And as Parikshit was also highlighting, there are certain sectors that still continue to count under an exemption from the reciprocal tariffs, including semiconductors and pharma as well. But we also spoke to a slew of experts over this tariff announcement by Donald Trump and how the government could possibly respond. Here's what they had to say.
He talks about our monetary barriers being strenuous and some other language he has obnoxious. Look at this word. You don't use that word in diplomacy. You know, the thing is, he's strong-arming India. He has really won a decisive victory in negotiations with the EU as well as with Japan. So his tail is up. He thinks he can get his way, and India is relatively a softer target, he thinks, and he can bludgeon India into submission. This is part of his bullying and domineering nature. But what I'm worried is that he's in the process of wrecking the India-US relationship. Some pushback by us is necessary. Otherwise, a man like Trump, who's used to bullying and getting his way, and also he's shown the capacity to step back when he's challenged.
Everything will be seen as an affront to his supremacy. So this is not really going to be the end. Suppose you say, okay, let's not take on Trump because he might do something more irrational. Fine. Today you give in, tomorrow he will go a step further on something else. What is the guarantee that this is going to be the last of his, I'm sorry to use that word, but maverick actions? It is indeed anarchical. I don't remember a case in history where such a thing has happened. in the multilateral trading system.
I think that this is a very unfortunate development. The U.S.-India relationship has been strong and growing under Republican and Democratic presidents for the past 30, 35 years. These two great democracies are key to solving world problems, whether it be in regard to China, whether it be in regard to climate. And this approach of my way or the highway is not the correct one.
I'm saying still I'm in that uncertain situation, though I know that 25% at least is going to be imposed. But how do I do my calculation unless I know the penalty amount? Whether the penalty amount is 5%, whether it is 15%. Unless that is known, it's very difficult for the Indian side or from that matter, the US side to start doing the business. We have to wait for some more time to have better clarity on these matters.
Now, the US president has also confirmed a 15% tariff on imports from South Korea, although he described it as part of a full and complete trade deal between both the countries. The South Korean president is expected to visit the White House for bilateral talks within the next 2 weeks, with tariffs likely topping the agenda. The US has also concluded a deal with Pakistan, whereby Pakistan and the US will work together on developing their massive oil reserves, according to what Donald Trump wrote on his Truth Social. We'll take a short break. We'll tell you how will all of these developments impact our own markets. Stay tuned. We'll be right back. Welcome back. On to our research team now with the trade setup, the stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. You know, we're just coming on the back of a 2-day recovery, but the GIFT Nifty currently is pointing to a gap down start of almost 200 points is what the implied open is suggesting, courtesy of the overnight developments on the tariff announcement along with the penalties, where clarity is still awaited. You know, and that will keep sectors in the spotlight. Of course, as Parikshit just mentioned, that the pharma sector exemption still stands and is still under investigation. The tariffs are yet to be announced, but also keep an eye out on names like textile stocks, the auto component manufacturers, the shrimp feed exporters. They are the ones that were the most hit when the reciprocal tariffs were announced earlier in April. So we'll keep an eye out on all of these names. Of course, you can also keep an eye out on the IT names, especially because of the fact that it's a beaten down sector. It's been an underperformer so far, and the fact that the Nasdaq rallied overnight, and the fact that these 25% tariffs apply only to goods and not to services. So you may keep an eye out on the IT names as well. Of course, there are multiple other triggers that you need to watch out for today. There's the monthly FNO expiry that comes into play. We are under threat that this might be the first negative expiry after 4 positive ones. That is one trigger. Of course, there are 6 Nifty stocks. There are 10 FNO names that are reporting results today. So it's yet another earnings heavy day. There are earnings reactions to watch out for. And of course, the market sentiment that will have an impact on the ongoing IPOs as well. Remember, there are 6 mainboard IPOs also that are open for subscription. So keep an eye out on all of this. 24,900 on the upside remains the key hurdle. And of course, 24,598, which was the recent low, becomes an important level to watch for the Nifty. So for now, the implied open suggesting a 200-point downtick. It'd be interesting to see if we find a floor at the market open. We are still continuing to recover from the opening ticks. It'd be interesting to see how the monthly expiry pans out. Over to Upasna now for the stocks you need to keep an eye out for today. Upasna, good morning.
Good morning. Well, a lot of stocks on our radar on the back of result reaction. First up, let me start with Tata Steel. It has reported good set of numbers. Revenue above pole, margins stood at 13.9% versus 12.2% on year-on-year basis. Next up is M&M. Revenue and PAT above pole while it's a margin miss. Net profit up 32% year-on-year basis and revenue up almost 26% year-on-year basis. Next up is Interglobe Aviation. Number misses the estimates. Now revenue is up just about 4% on year-on-year basis. EBITDA margin stood at 28%, down about 170 basis points on year-on-year basis. Next up is IGL. If you look at the numbers, it's a slight miss versus the poll. Net profit up just about 2%, and we are seeing a flat revenue growth just about with a downtick of 0.2% on sequential basis. Hitachi Energy is the next one. It's a miss across the board. Revenue up 11.4% on a year-on-year basis, while margins stood at 10.5% versus the poll of 11.1%. Keynes Tech is the next one on our radar. The revenue is a miss, but it's a margin beat. Now, company is guiding for a 60% FY26 revenue growth, but it has reported a revenue growth in Q1 at just about 34%. EBITDA margin stood at 16.8 versus the poll of 14.6%, but still, it's a beat of about 350 basis points. Next up is CAMS. Net profit up just about 1% and revenue is up just about 7% on year-on-year basis. And lastly, Navin Fluorine has reported a good set of numbers with a revenue growth of 38% and margins stood at 28.5% versus 19.2% on year-on-year basis. So all in all, we'll be tracking all these stocks on our radar today.
Upasna, thank you for that update. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning.
Good morning. It's a very news-heavy session today. In fact, you had the Donald Trump announcement that came in 25% penalty, tariff plus penalty. And then after that, you have Microsoft and Meta, which gained about 9 to 10% overnight after hours, after good set of numbers coming in. Back home, you have the numbers of HUL, Maruti, Sun Pharma, Coal India, all in all, 5 Nifty companies reporting their numbers along with a lot of FNO companies as well. And then you have the July series expiry. So all of that coming together in today's trading session. And if you look at the Nifty series moves, July would probably be the first in the last 5 series that we will end lower. And more importantly, the first in the last many Julys that we will end lower. So for the last 4 series, the Nifty is put on gains. July, we're down almost 694 points and the GIFT Nifty is indicating a 200-point downtick at the open itself. So those data points come up for you on the screen. Cash market volumes, the FI sold about 850 crores. DI has bought 1800 crores. In index futures, the FIs continue to sell 445 crores yesterday as well. Their long exposure is 14%. But all that isn't as material today given the GIFT Nifty. Today's low will be very crucial. Why do I say that? Because, historically, over the last month or two, the Nifty has bounced back from lows of 24,502 on June 3rd, 24,473 on June 13th, and last 2 couple of trading sessions as well, between 24,600 to 24,650 is where the market found support. Though on the way up, we might find some congestion around 24,950 and 24,900. That's what the call writers are, expecting. So 24,900 call comes up for you, as does the 24,850 call. But at the lower level, 24,650 thereabout is where support is expected because the 24,750 put is fairly active in trade. RBL Bank is one stock I'll be watching out for among others because this one on expiry day is out of FNO ban.
Mangalam, thank you for that update. And of course, the US market action of last night almost becomes redundant considering the numbers that were put out by Meta and Microsoft after hours. But of course, it was an intraday dip for the Dow Jones ending near the lows of the day. And that is after the central bank led by Jerome Powell said that they are not ready to cut rates just yet. The S&P 500 also ended below the flat line. The Nasdaq ended above the flat line, but the Nasdaq futures are currently trading with gains of almost 300 points after strong results from both Meta and Microsoft after hours. Let's in fact get you Steve Leisman of CNBC to take us through the key highlights from the FOMC announcement.
A somewhat divided Federal Reserve, leaving rates unchanged at the 4.25% to 4.5% range, with two governors dissenting as expected, Governor Bowman and Governor Waller, who preferred a quarter-point rate cut. It's the first time two governors have dissented since 1993. 9 votes were there to keep rates unchanged on hold, including the chair, 3 Fed governors, and 5 presidents. That's to say the dissenters didn't really get too much additional support over the 6 weeks they've argued for this cut. Swings in exports, the statement says, continue to affect the data. Growth moderated in the first half of the year, they note, which is from data we got this morning. And here's the line that didn't change, that people thought might give a dovish signal. It does not. It simply says uncertainty about the economic outlook remains elevated. That's the same line they used last time. They actually removed a word where last time they said uncertainty has diminished but remains elevated. They took out the diminished part. So they still see high uncertainty. That was an area where if there was a change that was going to maybe signal a dovish move or a dovish move ahead, that would have changed. It did not. The Fed said inflation remains somewhat elevated. Same language as last time. Unemployment is low. The labor market is solid, the statement says. And the committee is attentive to risks on both sides of the mandate.
Steve Leisman, thank you for that update. Let's now listen into what the Fed chair had to say on the outlook on the rate decision for the next meeting.
This is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting. Those estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come. As well, looking ahead. We haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the commodity updates. Manisha, good morning. What are you picking up today?
Harmal, thank you for that. I'll start with the copper prices because as we've been talking on, things could change from 1st of August and we've seen that happen. There is more clarity on what the tariffs of 50% would be applicable from US, and we do understand that the refined copper imports will not attract any tariff, and that is the major part of it because 50% of refined copper is what U.S. imports, and we already have a lot of copper imports already sitting into the U.S. markets there. And with this one exclusion, you've seen that premium from 30% go down to almost 7 to 8%. So very sharp decline in copper there. But it's not just about copper. When you look at gold prices, we've seen a 1% decline. It's trading at 1-month lows right now. Silver fell 2% to a 3-week lows. Platinum prices have declined 5% to a 4-week lows as well. Well, the U.S. has kept interest rates unchanged as expected, but much of this pressure on these metals is coming in from dollar index, which is holding at a 1-month high, almost inching towards 100 right now. And even as the U.S. has raised tariffs on Brazil and India, it's hinting at adjustments to deal with China and European Union. So it's still up in the air right now. The markets, after the U.S. Fed is done, are looking at the China PMI data. That comes in a few minutes right now. And then you also have the Bank of Japan monetary policy meeting today. So a lot to focus even at this point.
Manisha, thank you for that update. With that, we take your leave on this edition of Power Breakfast. But Bazar Morning Call sets you up for today's trade on the other side. Stay tuned.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazar Morning Call. It's a Thursday morning. And if you were thinking that maybe as we wind down the week, things are going to get a little slower with all the earnings madness, well, it's not. It's getting quicker. It's getting fast-paced. And news has been at a frenetic pace since last evening. We're coming to you from the CNBC TV18 Moti Oswal studios. There is the FOMC, which is a non-event. There are tariffs and there are earnings. I'm Prashant Surbi. Nigel with me. Guys, good morning.
Guys, good morning. 25 is the new number. Yeah. That seems to be our number. Let's see how we'll digest it.
Well, indeed, and add to all the cues that Prashant stated, today is the monthly expiry as well. So add to the volatility. We've got some green on the screen. That's Prashant. Let's see whether or not there is some pullback, because otherwise it could be a pretty much a red-looking screen to kickstart trade. But don't rule out a bounce back. Let's see. Let's see how it goes.
Can you guys make out on air that it's green?
Yeah. It's there. The sky, everything.
I'm
it's the biggest support the bulls can hope for, at least at the start.
All of us know that the 25% tariff has been announced on Indian exports to the US. But then there is a soundbite as well, which I think is important to note. Actually, it's very important to note, because the soundbite which we will play now suggests that there is still room for negotiation, talks, and this is President Trump himself indicating that, well, we will decide by the end of the week. That's essentially tentatively where he left off. Listen in.
Well, we're negotiating right now, and it's also BRICS. They have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. It's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. And it doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country, because money is going to pour into the United States like we've never seen before.
Okay, well, the tariffs are here, and this is essentially what I want to start with. The simple table, I think, is the crux of why this feels bad, right? 25% is what President Trump is saying that Indian exports will be hit with in terms of tariffs. Plus, there is an unspecified penalty for buying oil from Russia and military equipment, which we've done for decades from Russia. Now, that unspecified, forget it. We don't know what that is. Maybe it's just a threat, sort of being dangled to bring India down to what President Trump wants to. We don't know if it may materialize as well. Let's just work with what we know, 25%. And the reason why I'm saying the 25%, of course, and we'll sort of, discuss this in greater detail, impact to the economy expressed as a percentage of GDP could be between 0.2 to 0.5%. These numbers are not new. In April, when President Trump in that White House garden, handed out tariff rates to countries, it was 26% for India. So these estimates were calculated back then. And now it is 25%. So that number is surprising, but it's not a shocker. But I think where the disappointment comes in is that when we started all of this in March and April, the expectation, the real expectation in India was that we will actually have a competitive advantage. We will be able to leapfrog by making a good deal with the US and be able to sell to the largest consumer market in the world, which is the United States of America. And we'll be able to sort of, negotiate a lower tariff rate while selling into the US as compared to Asian peers, as compared to even some of the Western countries, et cetera, et cetera. That has not happened, and I think that is the disappointment here. So just look at this. India, 25% plus penalty. Forget the penalty for now. And look at the other rates. I mean, I think I don't need to sort of explain this. EU 15, South Korea, I think, has come out this morning, right? 15%, Vietnam, Philippines, Indonesia, Japan. And if you remember, President Trump and his first term, China plus one was a big theme back then as well. But back then, it was Vietnam, Cambodia, etc., which emerged as winners out of that 4-year President Trump's first term. And expectation was that we will sort of get our foot in the door as well. We still may. This is still, what has been issued on Truth Social. Let's move along. there is no letter which has been sent out. There is no executive order yet. You heard that soundbite from President Trump, which says that, we will know by the end of the week, and we are still talking to them. There is that bilateral trade agreement which we are negotiating, which seems to be in an advanced stage. But at this point in time, I think that is the disappointment which we'll have to sort of contend with. The Indian government officials' response has been very clear that they will not compromise. We will not compromise on sectors like agriculture, etc. And I'm only sort of putting this out because the statement makes it very clear that, we're not going to back off and we're not going to give in terms of open access to agriculture, etc. So that's the tariff bit that I want to put out. And of course, we'll get you lots of opinion as we go along. But prima facie, near term, this is, of course, can't be read as positive unless something quickly is negotiated. Now, markets, of course, on the FOMC front, read the decision as hawkish. The commentary is hawkish. I mean, actually, Chair Powell did not say this or that. He said we'll be data dependent, which the Fed always is. The market, though, was perhaps hoping for an explicit direction from the Fed that September there is a cut coming, which was not the case. And hence, if you look at market pricing, about 10 basis points of cut has been removed from the pricing for 2025. Market reaction is on your screen. The 10-year was up. You had the dollar, which is almost back at 100. Oil prices are at about 74. Very quickly, they've moved up over the last 3 days or so, 1.5% higher. Equities were flat. Post-close, Microsoft and Meta both reported solid earnings beats. And, this is the other story, the AI story, 8% after hours in Microsoft. The Meta stock up 10% after hours. So just the levels, right? Just putting the levels together. For the Nifty, the low that we saw day before yesterday, 24,598 is in focus. Will we break it? Right at the word go, will we sort of close below it? If that goes, the 24,450, 24,500 levels come into sharp focus once again. Resistance, the 40-hourly exponential average, 24,877, and the 40-day exponential moving average, which is 25,005 on the upside. For the Nifty Bank, the low, similarly, is 55,843, which is a support. If that goes, the 13th of June low is 55,149, and resistance is at the 40-hourly exponential average, 56,405. GIFT Nifty will give you a quick sense of how we're likely to start. 200-odd points lower, so wham bam, straight up is what the indication is at this point in time. Surabhi.
Absolutely. So the thing is, and I guess Prashant, Nigel, you'd concur that for the market, in terms of market capitalization, sectors like textile are not that big. Pharma, of course, is, but for now, pharma has been exempt. But this is a sentiment blow, and it's coming at a really, really bad time. The timing is really off for the market. And obviously, in terms of GDP, and in terms of the real economy, this is an issue. So just to put the numbers in perspective, the US has been India's largest trading partner for the last 4 consecutive years. The value of US-India trade is a little over $130 billion. And we continue to run a big trade surplus with the US, which is in excess of $40 billion. So that's why this is really important. Now, India reacted. Let's just quickly put out the Commerce Ministry statement on the screen. We reacted by saying that India is committed on concluding a fair, balanced and mutually beneficial bilateral trade agreement. And the government attaches utmost importance to protecting and promoting welfare of farmers, entrepreneurs and MSMEs. It's a strong sort of, it's not a pushback, but it's a very clear indication of India's stance that we're not backing down, at least not from the looks of it. There's a commentary coming in from Kevin Hesed. So is there something, so there's the post, but are the back channels indicating that there could still, be some sort of an arrangement in the next couple of hours? Let's hear out what Kevin Hesed, the economic advisor to the White House, had to say. He talks about how Trump is frustrated with the pace of trade talks with India.
Their tariffs have been so high on us that there's not a heck of a lot of trade. That's right.
No,
it's a very asymmetric situation. I think that we're hopeful that India will open up its markets to us. That's the really big headline, I think, of the EU deal and as the Japan deal and the other deals in Asia is that they're opening their markets up to our farmers, to our producers, to our small businessmen who can now sell their stuff there without lots of red tape. And if we could do that in India, that would be an absolute game changer for the global economy because it's such a large and growing economy.
Okay, so that's as far as the big headline is concerned. Now let's look at, Asian markets, and things are a little mixed out there. Cautious trade happening, though of course the big headline comes in from South Korea, with South Korea also getting that 15% tariff deal. But markets are a little all over the place. In the Hang Seng, the Chinese markets are under pressure because the numbers that have just come out on the manufacturing PMI side, they're weak. There's contraction in Chinese manufacturing PMI. Now and there's the Bank of Japan meeting as well, by the way, which is also going to be important to watch. No change in rates expected from the BOJ. Now for the Indian market, we're dealing with three-pronged woes. There's obviously the trade deal blow that's come in this morning. There is a continued slowdown in earnings, and there is consistent FPI selling. So it's sort of an unholy trinity of sorts that's kind of come together. Speaking of FPI selling, yesterday's number, net sell of about 850 crores. So that's what we saw yesterday. Domestic institutions offset that. Plenty of DII buying, 1900. But the impetus of FPI selling has accelerated in July. In the month of July, we have seen 17,600 crores of selling happen so far in 31 days of July. Let's talk about earnings. I mean, though that will be sort of for the second and third gear today, once we get over the opening perhaps gap down. M&M pretty solid. You can, maybe quibble on the margins. Margins have fallen 100 basis points. That's more than expected. We'll see. Tata Steel, Nigel tells us, is a pretty strong set, so no problems over there. Interglobe Aviation, the revenue, EBITDA, etc., they're below the pole. The weakness was anyway expected. It was a tough first quarter, but it's slightly below pole. And unfortunately, Hitachi Energy from that entire space, remember GE, Vernova, T&D's numbers were so good, but Hitachi has not been able to follow that up. So we'll see how the market reacts to this. But there's a silver lining, and the silver lining came in from Shireen's conversation with Mr. Salil Parekh of Infosys yesterday. The conversation was just after market hours, and the big takeaway is that Infosys is not giving any indication, at least right now, that it's looking at cutting jobs. In fact, he's saying that AI is opening up new revenue streams for the company. So no fresh negative seems to be the positive. And let's see if money gravitates towards IT, given the market environment that we'll see today. Nigel.
To add to the excitement today, we have the monthly expiry that will play out. And the big question is, can the bulls defend the 24,550 to around 25,000, which will be the series low, but you'll want it to defend that 24,550 to around 24,600 odd mark. But the Trump shocker definitely is disappointing. You can't slice and dice it anyway. Whichever way you look at it, it's disappointing because India was expecting a favorable outcome. But of late, you saw pressure in the markets. And yesterday, it seemed like, the street was sensing there is going to be some news that's going to be coming in there. Because the rupee, well, that weekend, it fell close to around 70 paise in trade. It ended closer to the low point of the day. If you look at the equity markets as well, there's been an underperformance. Compare the Nifty with the Chinese market, the emerging market, the Dow Jones. India has been a relative underperformer in the last 1 month or so. So that's telling you that, maybe the street was sensing there is going to be some bad news. And finally, the FIs, the flows in the cash market have been very, very subdued. And they've added shorts. In fact, from the start of the series, the net short positions are up by close to around 5 times to around 1.7 lakh contracts. Moving to what they did yesterday, no prizes for guessing. They added shorts yet again. Short positioning at around 86% or thereabouts. And from the start of the series, the FI net short positions have gone up by nearly around 5 times. Even the client long positioning has gone up multiple times. So that's normally a combination that we look at. Clients normally get like FI is net short in the system. That's not such a bad thing, but we'll have to see whether or not they cover out. So today, given that it's a monthly and weekly expiry as well, we'll have a fair bit of volatility. But there's plenty of action actually in this series because the rollovers are relatively lower, both on the Nifty as well as the Nifty Bank. On average, the Nifty rollover getting into the expiry day is around 70 to 73%. So there's plenty of action still left in this series itself. Moving to the options data, 24,900 call as well as put were fairly active. These option writers, who were playing a strategy out there, they were hoping that the 24,700 odd mark does hold out. For the time being, the GIFT Nifty is suggesting that we start below that level. So it'll be important to see where we end. But you don't want the recent low to get breached. So support comes in at this mark of around 24,599, 24,550, 24,599. And resistance comes in at around 24,950, going by the options data that we're looking at. The sector I'll be looking at today is tech. As of now, it doesn't come under any of these tariffs. It's been a relative underperformer. There'll be some depreciation that we're seeing on the Indian rupee as well. So interesting to see whether tech could be the place to hide just in the near term. Macro struggles continue, but otherwise, let's see whether or not tech can outperform. And the Nifty Bank, if the Nifty needs to fight back, then both these two levels are important. The 20 and the 50 DMA become the resistance zones that we're looking at. So disappointing stuff coming in overnight, but it appears the street sniffed it in the last month or so.
Can the bulls somehow work a miracle? Can they prevail by the end of the day? We'll see. But we have a very packed lineup and we'll be going down full throttle, giving you a 360-degree perspective on what this latest tariff announcement could mean for India. We start off with Nilesh of Kotak Mahindra AMC, Nilkant Mishra of Axis Bank, Anand Shah of ICICI Pru AMCs, all of them joining in to discuss how the market could be reacting and interpreting what has been announced by the US President yesterday. We'll get your reactions from India Inc. Pearl Global Industries joins in. They're, of course, pretty big in textile exports. So what could the impact be for textile and apparel segment? We'll talk about that. Then we bring you reactions from some of the top diplomats in the trade sector, like former Finance Secretary S.C. Garg, Ajay Shah of FIO, Anjali Prasad, former envoy to the WTO, former Foreign Secretary Kavan Sibbal as well. We also have Dr. Amitendu Palit of ISAS, Jayant Das Gupta, former envoy to the WTO again. Former Commerce Secretary Anup Vadhavan will also join in. Ajay Srivastava of Global Trade Research Initiative and Raymond Vickery of CSIS. So that's plenty of very deep opinion coming your way. And in just a moment, we'll be in conversation with Ed Yardeni, get your global perspective as well on how India will deal with 25%, whereas a lot of other countries have gotten 15%. And of course, Samir Narang of ICICI Bank also weighs in. So pack lineup coming up.
Okay, well, absolutely packed, right? And Ed Yardeni is with us. He's president at Yardeni Research. Samir Narang is head of economics research group at ICICI Bank. So two excellent voices right at the top of the show. Ed, that graphic will come up on your screen, and that's the point. 25% plus penalty for India, 15 to 20% for most others. And that's to my mind the disappointment in that sense, and maybe this will be negotiated lower, hopefully. But what's your sense?
My sense is that this is Trump's art of the deal. He's frustrated with the way the negotiations have been going, and he's just trying to put more pressure on India to give in on some of the points that he's been pushing for. And so I think it's still an ongoing negotiation. This is the way that the president negotiates. And even if you get to August 1st, even if you get to Friday and it's still 25%, that doesn't mean it can't change. I mean, nothing is fixed in Trump world. Everything can change. Everything can be renegotiated. None of these things are treaties, you know. They're all just kind of very loose agreements that could always be amended the following day.
That's true. Nothing is cast in stone. That's a positive way of looking at Mr. Yardeni. The thing is that we're at 25%, whereas a lot of other countries in the last 2 weeks have gotten a 15% deal. Would that perhaps make foreign investors look at India, a little more negatively? Or will it be taken in the stride? Because, I mean, the GDP impact, and, we've been doing the numbers here, asking economists as well. The GDP impact, most people say, is ranging between 0.3% to maybe 0.6%. So 0.5%, give or take. So it's not huge in that sense.
Well, I think ever since April 9th of this year, when Trump postponed his reciprocal tariffs, investors have come to conclude that, as I said, this is an ongoing process of negotiating trade deals. There's no fixed final conclusion here. And so, no, I don't think that investors are suddenly going to turn off to India because the president today said 25% plus a penalty. Again, that could very well still be intact on August 1st, but depending on how negotiations go, that could be amended pretty quickly. It could still be 15%. I think the problem that India has compared to other countries is as the president's advisors, the president views that India is being much tougher about letting American products into India, while India enjoys a pretty wide open market in the United States. And then the other point of contention is the concern that India continues to buy oil from Russia and military equipment. And so these are all items in the ongoing negotiations. These negotiations aren't done behind closed doors. They're very much done in public. And it's not much fun, and it can be very unsettling to watch these negotiations going on. But as we've seen in other countries, they do at some point settle down. Investors have already kind of figured out how the game is played. And so I don't think this really has any major repercussions for India as far as I can see.
All right, Ed, stay with us. Let's get Samir as well into the conversation. Hi, Samir. Thanks a lot for joining in. Well, so if you could tell us, what kind of impact will this tariff have on the Indian GDP? According to your estimates, what could the hit be?
Well, our exports to the US are around, 88 billion last year, though they've been growing over the last few years. But that's around 2.1, 2.2% of GDP. Now, exports to the US are growing quite good. So if that growth moderates from, say, 22% to this flattish, then to that extent, that will have an impact of 20, 30 basis points. Could be even lower because exports to other geographies have not been picking up. And as we can see that once the trade tensions are sorted or they come down, exports to other geographies may pick up or rerouting may happen. And in particular, our exports to the US are driven by mobile phones, textiles, we have pharmaceuticals. Some of them perhaps may not be also getting substituted by other countries like pharmaceuticals, where we have a large share in generics. And, some of them are also were excluded till such point in time. So my sense is the impact will not be that high, it will be marginal. And any which ways, some of it was expected because a lot of front loading into the US exports have happened. And we are more or less a domestic driven economy. So I think the impact on the economic front would be marginal, but it would be there if the tariffs sustain at 25%.
Got that, Samir. But, there was hope that, various sectors like the electronics, textiles, they could be favorably placed. Now, those sectors get hit. Could you tell us what is your read-through of that? Pharma, as we know, continues to remain exempt for now.
No, so you're right. Actually, if you look at India's export basket, it's largely driven by petroleum products, energy, then you have textiles, you have chemicals, excluding pharmaceuticals and other organic chemicals, gems and jewelry, as you pointed out, and, engineering goods. But when you look at our export basket to the US, it's largely driven by electronics or mobile phones. It's driven by textiles, driven by gems and jewelry, and it's driven by pharmaceuticals. So energy exports and other engineering goods, including transport equipment, is not what we export to the US because US itself is an energy exporter, and it's a lot of activity happens on the auto front any which ways, and we are linked to the auto supply chain, but not as a final, car producer, but through other, ancillary auto activity. So the hit would be largely, if tariffs remain at these levels, would be on textiles, would be on electronic goods, including mobile instruments, gems and jewelry, any which ways have been degrowing this year to the US. Though exports to the US are growing in excess of 20%, gems and jewelry have been moderating because of, lab-grown diamonds, as well as the fact that discretionary demand in the US has been relatively weak. So some of these sectors is where you will see maximum impact. However, we should keep in mind that if tariffs on Vietnam and other Asian manufacturing countries are at very similar levels, so there will be an absolute contraction in demand perhaps going forward, and that will impact all Asian economies at the same level as it would impact India.
Okay, got that point. Just stay on, Samir. Mr. Yardeni, if you could just hear the other panelist, Samir Narang, that's exactly what he was saying, right? So if you calculate, the impact is, 30 basis points, 40, 50 basis points. But to your point that you made, that now this whole tariff negotiation is a bargaining tool for a much wider, geopolitical relationship that we have. This is about perhaps buying Russian oil, buying Russian defense equipment. So to that extent, could it cast another shadow in investors' mind on India? I mean, would they look at the US-India equation itself? Would that be a new impediment, or you think that'll not really be a big issue in foreign investors' mind?
I think President Trump several times in discussing the importance of India's relationship with the United States has indicated that he'd like that relationship to be even closer, and he'd like to see India not really side with Russia or Brazil or China on issues like the dollar in the international system and and simply be kind of closer geopolitically to the United States. Well, that's what Trump would like, but obviously India has its own national interests, and it's geographically much closer to China and Russia and Iran. And so naturally, India is going to want to try to have good relationships with people that are in its neighborhood. But that's going to create some frictions. But I think, again, at the end of the day, Trump, well, wants deals. He doesn't want to see these things kind of fall apart. And so I think he's just going to push until he gets the most he can out of India. And I think India will give him some more. But I guess there are domestic limits in terms of how much these markets will open in India. But some of them will open.
Okay. No, I think that's a point taken, and I think you began by saying, right, that this is out of the deal as far as Trump is concerned. Samir, just last question, and something that I asked Ed right in the top, which I want you to respond to as well. You know, we are at 25 plus penalty. Most others are 15 to 20%. When we started this in March, April, it looked like we perhaps will have an advantage. You know, it's not an advantage, it actually is a disadvantage, because just purely sheer absolute tariff rates. That's something that sort of bothered me. I don't know what you make of it, Samir. Go on.
Very good question. When we started this discussion, our hope was that relatively we'll be better placed because we also have a much lower trade surplus with the US compared to some of the Asian peers. I think we are still in a negotiation phase, Prashant. We should not forget that. Ultimately, the tariffs which may come into play would be a bit different from what we are seeing today. But the baseline tariffs have increased from 3%, as I was speaking earlier. For most of the countries like Japan and the European Union, it's around 15%. For Asian manufacturing, it's around 25%. With China, it's slightly higher. Now, if we are able to do a good deal, perhaps we'll see tariffs slightly lower than the other Asian peers. But I think where it hurts most is the fact that it impacts incremental investment decisions to be taken by corporates, where to invest capacity in terms of supply chain creation in the world. As we have seen that over the last 3-4 years, we have seen incremental capacity creation in India in terms of electronics. And setting up an incremental capacity takes at least 3-4 years, if not longer, in any geography, given these spate of approvals that are required. So to that extent, yes, it is marginally negative in terms of tariffs where they are, and it may have an impact on investment decision making. But I think these are still, negotiations that are going on, and we may see eventually tariffs being a little bit different from what they are today. And we should not forget that services exports is what is the key, element for India's exports as well as goods. And there, as of now, though IT services firms have been reporting muted earnings, but Q1, we have seen net services exports stabilizing around $15.7 billion, which is around $2.5 billion higher than the same period last year. So despite goods exports being relatively flat at around 2% higher compared to last year's same period, services exports are still doing fairly well. So you have, this duality between goods and services exports in India, and that perhaps will continue for some more time, but it inevitably raises the uncertainty. Yes.
Appreciated Samir as well as Ed for joining in and giving us your take on this overnight development with regard to the United States imposing 25% tariff on India. We look forward to chatting up with you all in the coming days as things will remain very, very volatile. By the time to slip into a short break, on the other side, we focus on all the stock-specific action in our special Top 10 segment, looking at Tata Motors, Tata Steel, Jio Financial Services, Mahindra & Mahindra, Navin Fluorine, and Keynes Tech. All of them will be reacting to positive news flow, while you have IndiGlobe Aviation, IGL, Hitachi, and Indus Stars that will be reacting to negative news flow. Take that break, come back, get into further detail on all these names.
Welcome back. So we're bracing for that gap down. The implied open is telling us that the start will be 200 points lower. There are, of course, a lot of individual stocks that we need to take stock of as well. So let's straight away get to our team. 185 points now on the implied open. Let's straight away get to our team. Guys, morning to all of you. Tata Motors, the news is official. They're indeed looking at that Italian acquisition. Sudarshan, morning.
Good morning, Surbhi. So I would say it's not a bad deal for Tata Motors because it's going to help company diversify and increase its exposure in the global market. So the deal has been announced. Tata Motors is going to acquire Italian company that is Iveco Group, and this deal is only for the auto part, not the defense part. Iveco Group is going to delist and demerge the defense part, and after that, auto part will be sold to Tata Motors, and this deal is for 3.8 billion euros. In rupee terms, it comes around rupees 38,000 crore. So if you just try to know about Iveco Group, so currently in the Europe, it has a market share of 12 to 13% in LCV segment, 8 to 9% in M&HCV segment, and 50.5% in intercity bus market. That's in Europe. Also, it has an exposure in South American market where it has doubled its bus market share from 4% in 2023 to 8% in 2024. Why it would be positive for Tata Motors? Remember, Tata Motors has already announced that it's going to demerge, and basically PV would be a separate business and CV would be a separate business, and that is going to happen by the end of this fiscal. And JP Morgan believes that once the demerger process is done, mostly CV business would be net cash. So on the debt part also, this 38,000 crore would not be a big deal. So overall, I think it's positive for Tata Motors.
Okay, all right. Thanks a lot for that, Sudarshan. Positive for Tata Motors is what Sud's call is. Going across to Gaurav, he's here to tell us about Jio Financial. Morning, Gaurav.
Well, good morning. Now, promoter group Reliance Industries is going to increase its stake in Jio Financials almost by 4%. So let's understand how. Yesterday, board of Jio Financial, they have approved issuance of warrants. 50 crore warrants will be issued at a price of around 316.5 rupees, which is just about 1% discount to its last trading price. And this will be used to raise around 15,825 crores. Now, these warrants will be issued for two companies, Sikka Ports and Terminals, where the stake will be increased to 4.65%, and Jamnagar Utilities and Power, where the stake will be increased to 5.52%. Now, both these companies belong to promoter group Reliance Industries, and with this, on an adjusted basis, Reliance Industries will increase its stake almost to 51%. Now, remember, these will be warrants which will be convertible into paid-up equity share on or before the time of expiry of 18 months. So definitely it shows that Reliance Industries, the promoter group, definitely has some positive plans for Jio Financial as they are increasing their stake.
For that, Gaurav, well, I'm looking at Tata Steel, and global uncertainty continues, but these numbers look good. It's an improved performance that they come out there, and the EBITDA, consolidated EBITDA number was better than what our polls threw up. How was that possible? The European business turned EBITDA positive after 10 straight quarters of losses, and the India business as well. There was relative outperformance that we saw out there. So let's get straight to both those two verticals. As you can see, the India EBITDA per ton did beat estimates. And that, keep in mind, is despite the fact that they had a shutdown in the past quarter. So that was encouraging. And Europe turns into the green, $8 per ton, a little better than what most on the street were anticipating. And that's because the Netherlands business, well, the profitability went up to around 600 crores for the quarter, which means that they did close on $48 per ton of an EBITDA per ton. And the losses in the UK business came down by half. That's encouraging. How is this possible? Well, they had a cost transformation that they had outlined for the year. They had laid out close to 11,500 crores. Ballpark around 2,500 crores have been achieved in the first quarter itself, which is good. So these numbers look good on the whole. So going with a tinge of green out there, though the market is going to be a little bit jittery. Only problem is the debt continues to remain elevated. Capex of around 3,500 crores. That's what added on to the debt. But these numbers go down as a beat. Going back to Sudarshan, Mahindra & Mahindra, how are the numbers, sir?
So for Mahindra & Mahindra, earnings for Q1 of FY26 were largely in line with estimates. What has worked for the companies? First, on the volume front, both SUV and tractor segment continue to see volume growth. Volumes were up on a sequential basis. And even in the market share, for SUV, market share has crossed 27.3%. It's the revenue market share. And the tractor segment market share has increased to more than 45%. That's the highest ever. And company, even going forward, the launch pipeline that company has laid out is looking very strong. What are the negatives? First, raw material cost, that continue to see an increase, and that is impacting margin. Another thing that's going to impact margin is that going forward, low variant EV that company will start selling, that might drag margin. Now talking about the headline numbers, profit was up 32%, revenue has increased 26%, EBITDA 2 was higher 18%, and margin has come in at 14% versus 14.9%. Brokerages, Jefferies maintains by target here is 4,000 per share. MS also maintains overhead call and target is 3,668 per share. So overall, it's positive for M&M.
All right, so thanks very much for that. Management coming up at 10 a.m. And you'll hear from Manisha himself a little later. Interglobe is the next one. Winnie's got details here. A bit of a disappointment, Winnie. Morning.
Good morning. Yes, a bit of a disappointment that came in from Interglobe Aviation, but this is what was expected in Q1 FY26. By three impacts coming in here in Q1. One was the impact of the India-Pakistan border issue, the plane crash in Ahmedabad, as well as the Middle East. Geopolitical tensions actually caused a bit of an issue in terms of air traffic and rerouting. These were the three impacts coming in for the company in Q1. But despite that, they managed to see around a 5% growth in terms of revenues. EBITDA margin, that is down around 150 basis point. When you're looking at it on a year-on-year basis, 28% is what the EBITDA margin came in at. Profits impacted because of the lower compensation that has come in from Pratt & Whitney, so impact on the profitability as well. When you're looking at the passenger load factor, that's come in at just 84.6%, which is much lower than what we were expecting, 86%. Yields also are seeing an impact coming in. So weaker yields, the demand issues coming in, impacting the overall company's performance. But management has given positive commentary coming in, especially in July as well. They're saying that there's stability in terms of demand from July, and Q3 and Q4 onwards, they're expecting better recovery coming in here.
Okay, all right. Thanks a lot for that, Vinny. Let's go to Vamakshi. Vamakshi, Hitachi Energy, the stock has seen a big run, and these numbers are a little bit disappointing. But, you know, if you look at it, quarter one normally is a soft quarter in terms of margins. But tell us more.
Well, Nigel, bang on. It's a weak set coming in from Hitachi this time around. Perhaps the street was expecting execution to pick up a little more than what the company has reported. The revenue is seeing an uptick of almost 11% on a year-on-year basis. The gross margins have improved by around 721 basis points, which means well for the company. It's at almost 44.4%. But this is not actually translating into the EBITDA margins because they're at 10.5%. Nevertheless, this is still an improvement of almost 687 basis points. And the net profit is seeing a very sharp jump from around 11 crores to 132 crores this time around. And this is because quarter one last year was extremely weak for the company. But when we look at these numbers, as far as street expectations are concerned, it's a miss. Apart from that, the ordering activity though came in higher than what the street was anticipating. Order inflow stood at 11,339 crores, largely led by the Badla Fatehpur HVDC win and the bulk order that they got from Power Grid. And the analysts roughly believe that the HVDC order out of this order inflow stood at somewhere around 7,000 to 8,000 crores, and the order backlog stood at 29,100 odd crores, which is the highest ever for the company. So good order inflow, but overall the numbers have missed street expectations, so therefore going with a red for this counter.
Okay, all right, got that. Thanks very much, Vamakshi. So Hitachi disappointing in the first quarter. Let's move on then and look at Indus Towers. Rima, morning. Any good news here?
Not really. Slightly disappointing. Margins for Indus Towers have missed estimates. They've declined by 240 basis points on a quarter-on-quarter basis. That's put pressure on the company's profitability. So profits are down 2.4%. Plus, there is lower other income and higher depreciation and amortization. The tower additions too have moderated. This is because Bharti has largely completed its rollout. So tower additions have moderated, and plus the company hasn't announced any dividend or a buyback. So that might disappoint some shareholders.
Rima, thank you very much. Naveen, Fluorine and IGL are next. Sonal?
Yes, Naveen Fluorine, strong set of numbers. It was a strong growth that we saw. Revenues are up 39%, EBITDA is up 106%, margins expanded by around 900 basis points, leading to a profit growth of 128%. All three segments did well. The management commentary is very positive. HPP up 45%, specialty chemicals up 35%. CDMO also did very well this time around. Citi has in fact gone ahead and increased target price on the stock to 47.50. For IGL, it was largely in set of numbers, but EBITDA was slightly lower because of higher gas costs. So revenues flat, EBITDA up 3.6%, margins expanded by 500 basis points, profits were up just 2%, volumes were up on a YOY basis, but they declined on a sequential basis. CNG sales, industrial volumes, PNG volumes, all of them up on a YOY basis, but the growth has been lower than MGL. But we'll watch out for management commentary in the conference call today.
Okay, all right, got it. Sonal, thank you very much for that. That's IGL. Upasana's with us for Keynes Technologies. Upasana, remember, Amber did really well. Keynes from a related space, how have they fared?
Well, Surabhi, Keynes has reported a mixed set of numbers as compared to our poll. Now, revenue was a miss, while PAT is largely in line, but it's a margin beat this time around. Now, coming to the revenue first, it stood at 673 crore with an uptick of 34%. Now, the reason why I say it's a miss because company has guided for a 60% growth for FY26. So, if we see on a relative basis, 34% growth in Q1 is a might miss on that front versus the poll number of 759 crores. EBITDA saw an uptick of 69% on a year-on-year basis. EBITDA margin stood at 16.8% with an uptick of 350 basis points with the poll much above our poll of 14.6%. Now, company has surpassed FY26 full year guidance of 50 basis point margin expansion. Now, coming to the order book of the company, that has also seen a strong growth of 37% on a year-on-year basis, giving a strong revenue visibility. PAT largely in line with an uptick of 47%, stood at 75 crores. And also, if we look at the other expenses, that have also hiked up almost by 1.8 times on year-on-year basis. So all in all, mixed set of numbers coming in from Keynes Technology.
Okay, all right. Thank you very much, Upasana, for that. We take a break. We're back. Prakash Devan joins us for some fundamental stock conversation. Lots to get through over the next, 30 minutes or so to market open at 9:15. Coming up.
Welcome back. Well, as promised, Prakash Diwan joins us to help us out with some fundamental analysis. Hi, Prakash. Good morning. Good to see you win. Well, one stock that could relatively outperform is Jio Financial because the promoter entity is showing the faith. What's your view on the stock at around 310, 320 levels?
Good morning, Nigel. So I think this just reaffirms the management's intent to kind of build this up into a financial powerhouse. We've already started seeing a slew of announcements, a lot of launches that are underway, but there's much more to come. And, at some point in time, the company would need capital infusion. They've already spoken about a fundraise, but it makes sense if the parent could kind of support it at that point in time and consolidate its ownership and shareholding. From a stock perspective, it's still some time away before it crosses its all-time high. But then that all-time high was probably made at a time when things were not very clear. With this clarity, I think it will have a decisive move in the next 12 to 18 months. And I would believe it definitely gets you a significant upside. And the benefit is now that Reliance Industries also has some rub-off from that 51% ownership that resides in that.
Okay, all right, got that. Prakash, hi, morning. Tata Motors, it's finally official. We were just discussing it the other day, but now it's official. They're doing this Italian acquisition, 38,000 crores. Would you view it as a positive because new markets, aggression, or could it be an overhang because of the size and maybe the debt involved?
So, good morning, Subhi. So, of course, as I said, it was too early to call it a bad investment at that point in time when details were not clear. But things are kind of emerging where it could kind of start sitting in as a piece on the Tata Motors balance sheet with a carve-out of the CV domestic business also kind of getting there. And there's a very clear focus. Remember, one of the biggest market shares this company, the Italian business has is for buses. And in India, with the rapid development of infrastructure within cities, these corridors coming up, I think there's going to be a huge influx of that means of transport, which is not yet part of that. I mean, you go to Europe, you see these these Flix buses all the time, and you start using these. You have the Greyhound in the US. That's the kind of infrastructure which could develop, but it's some time away. What you do on a stock like this, at this point in time, you of course wait for more details and see how the digestion happens, how this absorption happens on the acquisition. And that normally gives you enough time. So I wouldn't be in a hurry to buy, but it could be much more positive than what it seemed when the deal was announced, given the acquisition cost and the leverage. But they'll probably have a solution to that as well, I'm sure, as details unfold.
Okay. Yeah, absolutely. And we have to see, when you very rightly brought that up, that this purchased entity, eventually it will sit in the CV entity's balance sheet because there's a demerger that's underway anyway.
Absolutely. Prakash, what about Tisco? Tata Steel, actually the numbers look good. When you have no operating leverage that plays out, and yet you report a good improvement in the EBITDA per ton in India. Netherlands is doing even better and Europe is cutting its losses. So that's good news. But what's your view on the stock from here on?
No, absolutely. Had it not been for the uncertain times, Tisco would have done its Tisco, as you keep calling. And importantly, what's happening is these changes are not one-off, Nigel. If you read through the commentary, the kind of details on the numbers, it's a cost control exercise that they'd initiated for the UK business, and that's how the losses. I mean, and I think in the next 2 quarters, they could probably have no losses at all. So when operating losses go away, that's the final stage before which you would start kind of kicking operating leverage. And from a scale perspective, while they've not expanded too much organically in the last few years, I think they'll probably consolidate all their operations, get more profitable, maintain margin for at least 3-4 quarters, and then things could look very different as demand clarity emerges. So the domestic demand itself is quite robust now. We've seen how other players have been benefiting from the scale-up that they've done, whether it's JSPL, JSW, even SAIL in some certain pockets. So I'm quite positive. But steel as a sector is not yet at the right stage in the cycle. That's the only issue. On a bottom-up basis, Tata Steel looks very promising, but we'll have to wait.
Prakash, 30 seconds, sorry, on the treadmill running today and unsuccessfully maybe. But Aurobindo, big acquisition, any thoughts?
No, I'm very wary of these acquisitions, especially by companies which haven't done great in the past on some of them. So this is much more to choose out of.
All right, Aurobindo's perhaps already got the largest manufacturing amongst Indian pharma companies, US manufacturing capacity, and this is another one. More on this later. Prakash, thank you very much for joining us. Good speaking with you here on CNBC. We'll take a quick break here. We will come back with the management of Pearl Global and tariff impact with Pearl on the other side. Stay tuned.
Okay, we are getting the pre-open rates, just putting them up for your reference, and they should settle. I mean, they should definitely settle because the implied open was about 200 points lower. This is just for a sentiment reaction coming in on the Nifty. So let's just wait for this to calm down a little bit. Let's get to our technical experts as we're looking at some of these rates kicking in. Sudarshan and Mitesh are both with us. Gentlemen, good morning. We're preparing for, a gap down, and maybe they say the market always knows best, right? Maybe this was always building, this weakness that we've had over the last 1 month. Now tell us what should be done. I mean, index, do you look at buying at any point or just stay away completely? Sudarshan?
Yeah, good morning. Well, as you said, it's been building up, and both of us have been saying for the last 10, 12 days that we are looking at weakness. I have given a support level. Remember, it's not a target, a support, technical support of about 24,500, and then we take it from there. So the chances are we'll reach that level sooner or later. There is no trade in the Nifty. It's just a repetition of what I am saying every day. You don't go short because you don't know when the markets will have a V-shaped rally. Even intraday would kill you, and you can't go long. This is not a buy on dips. The markets can go much lower.
Okay, that's important caution that Sudarshan's placing on the table. Mitesh, comment on this. Would you agree or would you say that some of the more adventurous Braveheart traders can perhaps buy at some point today? Let's talk Nifty first.
Good morning, Surbi. There's no point buying when you're not sure that we'll get an upside. My idea has been that, we will do a range and possibly sometime in the next 2 days, and that's what I've been highlighting, that we'll head towards 24,550, 500 zones, which is the first support area. I think with this gap down, we might actually be on course to do that. Now, from those levels, if we see a reversal pattern, then is the time, when you will want to pull a trigger on the upside. But otherwise, wait and watch. On the stock side, though, we've been trading with mixed bias, both long and short side. But on the index, around 24,550, 500, if you get a reversal sign on the hourly or the 2-hourly charts, I think that is when I would want to venture into a long trade.
Okay, all right, got it. Both of you all sounding a little bit cautious on the headline index, and for starters, we like to start off 200 points lower. But let's talk about stocks. Mitesh, you go first. What's in your radar?
Morning, Nigel. I have more of sell calls today. A sell on Canara Bank with a stop at 110.5 for targets of 104. A sell on Indian Bank, so 2 banking names over here. A sell here with a stop at 626 for a target of around 580. And a sell on a short clearing. It's a conditional sell. There's some support at 121, a small minor pivot. So if it starts trading below 120.5, and that will happen in the opening itself, then go short with a stop at 122.5 for a target of 116, and Cipla is a buy on mild declines around 1545, 1550. Buy with the stop below 1525 for targets of 1550.
Okay, all right, got that. Sudarshan, what about you?
Well, it's a mix. NTPC is a buy with a stop under 332. ICICI General Insurance, ICICI GI is a buy with a stop under 1884. I have 2 intraday shorts, both of the same sector approximately. PPL Pharma is an intraday short and same group also with a stop above 205. And PEL, Piramal Enterprises, is an intraday short with a stop above 1313. And there's a warning. Today is weekly expiry and monthly expiry. Please do not dabble in expiry options.
All right, gentlemen, we speak again in a bit. Thank you very much, though, for that setup and those specific trades as well. Nilesh Shah is now joining us, Managing Director at Kotak Mahindra Asset Management Company. Nilesh bhai, good morning. I'm wearing green, you're wearing red. I just noticed. But I'm sure not. That is the Kotak color, though. It's not an indication for anyone who's confused or wondering. But I just wanted to start with what I put out this morning, and the table will come up for our viewers once again, right? When all this started, Nilesh bhai, in March, April, the hope implicitly here was that we'll correct some of the tariffs lower for us to be able to sell to the US versus competing countries. As things stand right now, and hopefully this gets negotiated lower, we are 25 plus. Most other countries are 15 to 20. So that's the beyond markets here and now. Is this the bigger disappointment? How are you reading this?
Undoubtedly, Prashant, but this is a disappointment. In the April Liberation Day tariff, India was on the lower side and countries were on the higher side. Now, as things stand today, even without penalties for Russian trade, we are on the higher side. And countries like Vietnam, which is transit for China to some extent, are on the lower side. So undoubtedly, from being placed in the front category in terms of favor, we have now moved towards the back category. Well, the positive side is that even a one-trick country like Bangladesh, which is dependent upon textiles, they were levied heavy tariff on textiles much higher than India. And by and large, they have survived. So clearly, we have to focus on our domestic economy and continue to engage with US to get some offset and to get some exemption for items like pharma. Hopefully, that will ensure that the overall tariff which will be levied on India will still be manageable.
Nilesh, good morning. So good to have you on. You know, and it's become a bit of a perfect storm because now we have this tariff issue, which is a sentiment negative. We anyway had FPI selling. And then we have the earnings story, which we all been waiting for that turnaround. Now, in this perfect storm, the only light on the ship seems to be the light from domestic investors. Those flows that have been consistent, those SIP numbers that have been consistent. But aren't the headwinds becoming a bit much? Because investors' patience is also getting tested. It's been a ranging market for a while. I mean, what do you see ahead next couple of months?
So, Surbi, for 10 years, we delivered positive return. At some point of time, law of average will catch up with us. And as you very correctly mentioned, we are in a perfect storm right now. Valuations are on the higher side. Earnings growth is in mid-single digit to high single digit this quarter. And on top of it, from being somewhere favorably placed on tariff, we are now probably placed on the slightly unfavorable side. Domestic investors will have to be long-term investor and they'll have to moderate return expectation. We still believe our long-term growth story remains intact. In US policy making, we have seen many flips and flops. As we speak today, copper prices in US are on the way down because refined copper has been exempted from the tariff unexpectedly. So there will be always U-turn in US policy making as longer-term strategic interests of India and US are aligned. I just hope and pray that we focus on accelerating domestic growth and then we get support from domestic growth as well as exports over a period of time.
Indeed. All right. So the domestic piece becomes far more important and some kind of monetary support as well as something that we'll be looking forward to. Nilesh, just please stay with us. For the time being, we're just going to hop across and discuss the impact of India Inc. We have the management of Pearl Global who's waiting by. But first, let's go to Hormuz. He's here to give us a roundup of which sectors will be impacted by Trump's tariffs. Hormuz, take it away.
Good morning, Nigel. And a lot of sectors are in the spotlight because of these developments. You take a look at auto component manufacturers, take a look at shrimp feed exporters, the industrials and consumer electricals, gems and jewelry, textiles, and including the mobiles and electronic stocks as well. All of them likely to face an impact. We start off with the auto component names where Nuvama is mentioning the fact that the CV and other component tariffs currently was at 10%. Now that will increase to 25%, and that could have negative impacts on names like Bharat Forge, Ramkrishna Forgings and even Balkrishna Industries, which has a significant export share as a part of its top line as well. And this negative impact can be felt due to a reduction in underlying demand as well as absorption of the tariff cost. So this is what Nuvama has had to say. Now, textile companies too have been in the spotlight because of this tariff announcement. And most of these textile companies, Gokul Das or Wellspun Living, Indocount Industries, Pearl Global, all of them have an exposure of anywhere between 50 to 70% from the US markets. Now, when it comes to industrial stocks, Elara has come out with a note and they mentioned that while the cables and wires segment have no significant exposure, most of these players have a 2 to 5% kind of exposure to the US market. For conductors, they have specifically highlighted Apar Industries, where it says it has a 15 to 20% exposure to the US, and KC International's exports come via one of its units to the US, and that's the smaller number of 5%. When it comes to capital goods, they mentioned that Cummins India has a 12 to 15% exposure to the US, and most of it goes to its parent company, that is Cummins Inc. And MTAR Tech, the clean energy business of the company, is almost 62% of the overall top line, and most of that comes from the major client being from the export market. And you have stocks like Azad Engineering, Keynes Tech, Dixon, and they say that these Dixon Tech and other stocks have no significant exposure. And the gems and jewelry, the GJEPC put out a statement yesterday that this is a significantly negative development. So lots of sectors to watch out for. We'll see as the day unfolds.
Thanks a lot for that, Hormuz. Well, let's get in one market participant. We have Palab Banerjee, the Managing Director and Group President at Pearl Global, who joins us. Hi, Mr. Banerjee. Good morning. Thanks a lot for joining in. 25% has come as a bit of a shocker. For your business, what was the current tariff, pre this 25%, and how does it compare with what's been announced? And do you think it will put companies like you at a disadvantage on the global front, because we were hoping that we get a lower tariff and then India goes ahead and grabs a greater share? Please go ahead.
Good morning, Nigel. Definitely, it's a little bit of disappointment as of what we are hearing from President Trump. But I'm sure this is a part of his negotiation tactics. India has to negotiate, and yes, I think the style of negotiation is very different in this case. And even the country's leaders of Japan and EU has declared it as a tough negotiation.
Palab, we'll keep the negotiation at the side. What is the current rate you're paying, and how does 25% compare with it?
So, for example, anything which is going out from any of the other countries till April 2nd, it was only subject to the MFN or the WTO tariff, which was for cotton product anywhere between 12% to 19%. And for synthetics, it was about 26%. Certain other products like natural fibers, like linen and all, was little lesser. So every product had a different kind of line item in terms of tariffs. Now, on April 2nd, after the first announcement, we had a 10% baseline that was added on to this. And now it seems to be that this 10% will be replaced by this 25% and the so-called penalty, which we don't know as of now what's going to happen for India. But for other countries like Indonesia, Vietnam, has been already declared as 19 and 20%. Bangladesh will come out, I think, in the next days. I think they're also in discussion. So these are the countries that where we are exporting from Asia. And we also do from Guatemala, which is at flat 10%.
So, Palab, that's precisely the question. I mean, you have the benefit of having a lot of manufacturing bases in geographies which now have better tariffs than India does. For instance, Vietnam, you mentioned Bangladesh as well. So for you, what is the increase? The blended tariff rate for you goes up from what to what for Pearl specifically?
So one thing is that we are not paying the tariff. The customer who are taking the goods from us are paying the tariff. But yes, it's a disadvantage. So if you see, for all these countries, as of now, this is stacked upon the WTO tariff. Now, there is a confusion. If you go back to what President Trump had said before coming into power, or even you look at the economist, Stephen Miran's document, they were trying to replace the WTO tariff by this reciprocal tariff. Now, that is at this point of time silent. Most probably it will happen at some point of time.
So net, sorry, Palab, just running into market opening, net, because you're producing from other countries like Vietnam, will it offset the India impact? Are you not impacted?
So no, for us, the impact is very minimal. If I look at our top line, 15% of our exposure is from India to US. So that definitely our customers will push us to move to other countries. And I think India, we are very well entrenched as other free trade countries like, Japan and Australia and all. So I don't see a big impact at this point of time.
Palab, but for the industry, you would say this puts the industry at a bit of a disadvantage?
Oh yeah, big time.
Big time.
And see, what's happening is that India is very strong in this particular season, which is the spring-summer season of the Western countries in the Northern Hemisphere. And this is the time these orders are getting booked. So this timing is very bad. In fact, a lot of customers who were placing the business in the last week of July, they pushed it out to the first week of August because they wanted to hear this. So the timing has been not in favor to the Indian industry at all.
All right, Palab, but we'll leave it there. Thank you very much. Sorry to rush you. Maybe we can have a longer chat later. Appreciate it very much. Nilesh Bhai is still with us, and we'll just sort of bring him in, just taking note of the opening rates as they come in, and then we'll continue our conversation with him. 24, What do we have? The first rates as they start to appear up. 170 points lower on the Nifty. 24,676 is where the index is at. It's about 0.5%, 0.6, 0.7% lower. So all said and done, right? And look at the Nifty Bank, which is down 0.4%. So 55,930. And the mid-cap index is down 1, small cap index is down 1. So unless things worsen significantly from here, 0.5% cut, not bad at all, given a lot of the hullabaloo that we have been sort of seeing. Of course, I mean, news hit as a bit of a shocker, and I explained why the disappointment, particularly vis-a-vis other countries. You heard Pearl Global as well talking about one of the most sort of much anticipated sectors, which was to benefit, which is textile, which has not happened. But this is not bad. 0.6% lower. There's one name in the green, Jio Financial. 49 stocks in the red. That's the heat map. Surabhi.
This could have been any morning, Prashant. I mean, just about 0.6, 0.7% down. This could have been any morning. So, you'd say it's a fairly resilient start by the market. And let's see, and we'll ask Nilesh in just a bit, domestic institutions, whether they'll use this opportunity, whether there'll be big buyers today or not. What's his sense? We'll get to Nilesh in just a second. But stocks right now, Tata Motors is still negative, reacting to their decision to, buy that stake in the Italian CV maker. 2.5% lower on that stock. BEL is on the lower side. Reliance is a drag this morning, 1.5% down, not offering too much support. Mahindra and Mahindra, pretty decent performance, but it's that kind of a day, taking some profits off the table. 1% down on M&M as well. So overall, stocks are down between 1 to 1.5%. Tata Motors is the one that's down nearly 2%. On the upside, Jio Financial up about 0.7%. There's some buying on an SBI Life. The stocks that are closest to the flat line are coming in from the FMCG space. So let's see if they break into positive. Nestle, Lever, ITC, Asian Paints, there the cuts are the least. And Infosys, remember yesterday Mr. Salil Parekh sounded not as bearish as TCS. There was no talk of job cuts at Infosys. In fact, he was saying that Infosys is hiring 20,000 freshers this year. Stock is down 0.5%. I'll watch for FMCG and IT very, very carefully to see if some buying emerges with these stocks. But right now, still down 200, Nigel.
Well, Welspun Living, that's taking it on the chin, down 6% as we speak. So that would have been a potential beneficiary if in case the tariffs are lower. Now the street doesn't like what they've seen, 6% lower. Trident is down another 3.5%. So big hit on that one. New India Assurance is giving up some part of the gains that it put on yesterday. And Indus Stars, well, those numbers were disappointing and the dividend pushback as well. So the street is punishing that name. What's doing well? Sagility, that's up close to around 5%. Those numbers look pretty good. You have Jio Financial that's showing a relative outperformance. The reason being the promoter entity is showing the faith and, putting in money. And Greaves Cotton is actually one of those stocks that are actually outperforming today on rather large volumes. A big up move is what we are seeing. And HEG as well. They've been talking about realizations improving. Now they're going ahead and, in fact, announcing a capex as well. So they're readying themselves for the next 2 to around 3 years when they expect demand to come back. The street likes it, explains why. That name is up close to around 5.5% as we see.
It's 300 up and about 2,000 lower. That's the sort of count of advanced decline out of the gates, right? I mean, just the first initial couple of minutes of trade, but that is what it is. Sagility is another one which reported a super strong set of numbers, and that is reacting at about 4% or so. It's not done very much since listing. That is Sagility out there. Look at the volumes as well. I think Nigel mentioned HEG, Greaves, etc. 5% each there. At this point in time, and you got Eternal, DMart, Jio Finance, etc., which are also slightly higher. Nilesh Bhai is with us, and we've been sort of talking tariffs and markets with him. Nilesh Bhai, you think we will see a concerted? Thanks for waiting, first of all, and as we took that detour, do you think we need to see and we will see a little bit of pump priming from the government? Do we have space for that? Nilesh Bhai, especially on GST rationalization, RBI is already really behind growth in a big way over the last since the new governor took over. What's your sense?
So on the monetary policy side, both in terms of rates and liquidity, enough action has been taken. Now, on the rate side, there is still room because this year inflation is expected to remain lower. On the other end, on the fiscal side, we have a lot of space, but we are committed to fiscal discipline. So my recommendation will be, let's give GST cut or any other support which is required and balanced it through divestment or asset monetization. There is still room for both divestment and asset monetization at current level of liquidity and market, and that should be used to support the domestic growth. But apart from those short-term measures, what we really need is encouraging local industry through improving ease of doing business. We have taken many steps to improve ease of doing business, but that animal spirit is still missing in private investment. We have to sit with private investors and listen to them about their issues. Some things could be related at state and local level. Something could be related to local purchases. Something could be related to new age industry. Essentially, we need to accelerate growth supporting policies through improving ease of doing business as a medium to long-term answer.
Nilesh, so before we let you go back to your usual business today, that's the question. I mean, mutual funds have been the biggest support for this market. You expect on days like today, there would be big buying, and how are they looking at it? Because there's always that debate that foreigners are selling, saying valuations are high and earnings are not coming through, but domestic MFs, because they're getting the money, they're simply going out and buying. Of course, latest MF regulations could look at changing that. You don't have to buy if you have a lot of money, but more on that later. But just now for today and next couple of days, what do you expect?
And what's the liquidity position, Nilesh, if you could help us out?
So, Nigel, we have reasonable liquidity in terms of cash. Average balance will be between 3 to 5%. Second, we also have asset allocation fund and balance advantage fund, which can increase equity as and when market or valuation starts coming down. So collectively, anywhere between 200,000 crore to 300,000 crore could be potential liquidity with domestic investors. More importantly, we are not here to support the market. We are here to make money. When there is so much of uncertainty, will we be aggressive buyers? Answer is no. We will wait for prices to settle and then build position. So clearly, we will be a buyer, but we will buy where we believe valuations are in our favor. Foreigners invested from the mid-90s, they have made money and hence they are booking profit. We were a little late in accumulating Indian growth story, and domestic investors are buying now. Now our collective ownership exceeds foreign ownership. More importantly, it is also time differential. We are long-term investors. Many foreigners are probably taking a shorter-term call. So at the end of the day, if prices go up, both domestic and foreign investors will benefit.
Okay, all right, Nilesh, thanks a lot for joining in. I always take your advice very seriously, and as I always tell you, I'm keeping the faith. So as you said, time to look at it for the longer term. Appreciate you joining in and giving us your comments. That said, let's get in Anand Shah, Chief Investment Officer, PMS and AIF at ICICI Prudential, who joins in. Hi Anand, good morning. Not the best morning, right? Because India was hoping a few months ago that we were off the blocks in a flash and maybe we get a favorable deal. That's not come about. But if you look at the reaction, initial reaction, it's not too bad actually. What's your view? Do you think the street was sensing that this is going to be a bit tricky, and that's why we have already pulled back close to 4% in the last month, and we were already underperforming what global equity markets were doing?
Hi, very good morning. And yes, to that extent, this is not completely unexpected. The negotiations have been going on for quite a while, and this is what it is. The way I look at it, to me, now we know what's the worst case scenario, be it at a economy level, at individual sector levels, or at individual company levels. We know what is the worst that can happen. All said and done, these tariffs are disruptive in a massive way for all the industries and all the companies in all the countries who are in a way trading with US. And to that extent, it's no different for the Indian companies also. The good news is that India, in that sense, is not that much export-oriented. It's not been that successful in exporting lots of goods into the US market. And to that extent, the overall impact on the Indian economy and Indian markets would be much smaller than what it otherwise would have been for any of our neighbors who have significant reliance on US exports for their own GDP and growth.
Hi, Anand, great to have you on. I want to talk to you about pharma, right? Because pharma actually has been very resilient in all of this topsy-turvy environment. The pharma index is up about 6-7% so far this year. Individual stocks have done more. But there is that sword looming on pharma as well. God knows what happens next. How are you positioned on the sector?
So again, not only pharma, if you see the overall exports basket of India, again, it's not that we are making either supernormal profits in many of the sectors that we are participating, like textiles and others, or we have a significant competitive edge, which is the case with pharma. So to me, I think the expected impact of the tariff on overall exports from India would be far more muted than what we believe or what the market believes can happen because of that tariff. I think overall, if you see the tariffs as a whole, eventually it will be borne by either companies which are making supernormal profit, either in US or outside US. So either it's manufacturer or retailer. But if that's not the case, if the market's not been very efficient and companies are not making supernormal profit, eventually the consumers in US, which is going to pay the price for that. And that's no different for pharmaceuticals also. So to me, that's not today the case. They have exempted pharma for the time being. And to that extent, that's not under debate today. But I'm saying generally, it's not that India has exports where the margins are very high. And to that extent, we will have to absorb some of the tariffs. I think a lot of tariff eventually will be absorbed by the consumers in US.
All right. Anand, since the global space is in a bit of a flux, a lot of focus on the domestic themes. If you had to pick up that one domestic theme that you like, which one would it be? Give and take everything, give and take things are going to improve from here on. What would that sector be?
So I think India is significantly domestic. And within that, there is consumption of goods and there's a consumption of services. India is, as the per capita income grows, services consumption is becoming increasingly larger pie of the overall consumption piece. So say pre-2000, we would have been 65% consumption of goods, 35% consumption of services. As we speak today, it would be like 50% consumption of goods and 50% consumption of services. So I think one piece which we have been closely watching and we've been sort of invested also is the consumer services business, be it telecom, be it healthcare, be it transportation services, be it entertainment services, be it financial services, wealth management. Those are the areas where incrementally the Indian household is spending or / investing in those areas.
But Anand, with the equity market being so ranged, isn't there a bit of a near-term threat maybe to some of these capital market businesses? They've done really well, right? Those who managed to ride the wave, they've made a lot of money. But now within capital markets, if you have to take long-term bets in the portfolio, would you be with exchanges, with wealth managers, with asset managers? What parts of it?
No, indeed, these are all plays on capital markets. And as you rightly said, they will have a higher beta to the overall economy and the markets than what otherwise the rest of the sectors would have. Having said that, I think markets have been expensive for a while now, and we've been all along talking about it. So I think from investors' point of view, I think they need to brace for, notwithstanding the tariff thing, you need to brace for corrections in the market as it is, given we had a very, very sharp fall from October to Feb, and equally sharp rally from Feb end to June end. So I think overall economy is slow. It's known. This tariff uncertainty has further put pressure globally on the global growth, on the US growth, on the China growth, and that's also impacting. I think the first step in terms of monetary easing is there. I think we need to continuously focus on improving domestic consumption, and I think the lower interest rates and higher liquidity in this banking system.
Sure.
Credit growth pick up and a little bit of a domestic growth pick it up.
Okay, so keeping the faith on the capital markets side of the market itself, businesses, we'll take that on board and, remember that one. Thank you very much, Anand, for joining in on what's been a very, very news-heavy morning for us over here. Markets all right. Markets been, holding with a cut of about 0.6%, so not too much of a wider fall. Well, let's welcome in Neelkant Mishra, Chief Economist at Axis Bank now, and also the Head of Global Research at Axis Capital. Neelkant, great to have you on this morning. So it's just feeling worse, right? Because everybody's gotten this 15% deal, including South Korea this morning, and we've been handed out 25% plus, quote-unquote penalties for doing business with Russia. Let's talk numbers first. I mean, numerically, what is your assessment in terms of GDP hit? And then what could be the second order effect? Because this seems to indicate that there is maybe a reset in the relationship equation. Maybe yes, maybe no. But your first thoughts?
Okay, so let's first quantify it. So the tariffs paid by Indian exporters when they entered the US market before April was about $2.3 billion. As the 10% tariffs came in April, and then there was a 50% for all steel coming into the US starting June, the numbers had gone up to about $8 billion. So that 2.3 had become about 8. If 25% sticks, then we will be at $18 billion. So there is a $10 billion extra impact. If you were at 15, the number would have been 12. So basically you would have been, so we're talking about an increase of about $6 billion a year on last year's export numbers. And clearly now, I think, as you said, the second order impact on what happens to electronics exports, what happens to apparel exports, there was a lot of expectation that we may have an advantage at these prices or these rates. We may have a 5% disadvantage. Some of this, if these indeed stick, see, I think the message here is that even South Korea was threatened at 25%, but they ended up at 15. So maybe this is the preliminary, the pre-final step to the final tariff. And in a way, I read it as that 15% would be pretty much the floor, 25% now seems to be the ceiling. We will see the penalty, which I think is more sophisticated geopolitics, but that would be the range in which we end up settling. And I don't think it's very substantial. I don't think this is very important from a macro perspective.
Neelkant, I'm so sorry I'm butting in because this ties in with the second part of my question, that the number and the tariff is one piece, but look at the commentary, and this is the latest quote coming in from Mr. Trump. We'll put it out. There we go. The flashes are on the screen, and look at the language. He's saying, I don't care what India does with Russia. They can take their dead economies down together. These are words from the US president. We have done very little business with India. Their tariffs are too high, among the highest in the world. Likewise, Russia and the USA do almost no business together. Let's keep it that way. I mean, these are really strong statements. Maybe this is rhetoric, maybe this is more pressure tactics, but that's what it is.
It's midnight in Washington, D.C. I mean, I think we should just ignore it. I mean, it means nothing, really, right? I mean, maybe it's just somebody's asked him something. We don't know what was asked. Maybe he's irritated, like to sleep. No, I'm not joking. I'm serious. I mean, I don't think. Look at all the other statements which have come from President Trump, right? I mean, everything has started with India is a friend, Prime Minister Modi is a friend, etc. Yeah. Of course, the tariffs are a different business, but I think we should just take it off. There's no real reason for us to sort of focus on this statement per se in that sense.
No, but Prashant, I mean, for the sake of a healthy debate, I mean, I just put the other point of view, and that's the question that I was actually, let's ask Neelkant this.
Yeah.
That a lot of this, maybe it's just rhetoric, maybe it's pressure tactics, Neelkant. Tell us what you think it is. But would this make investors, stand up and take note that these were these two great countries coming together to do business, but now there seem to be fissures on us buying Russian oil, us buying Russian defense equipment, us not yet saying yes to the F-35s. Is this a bigger reset? And then if yes, do markets need to be concerned?
I don't think so. What I think the markets need to get used to is what they say in diplomatic speak, an absence of binaries. that most relationships, I think, in the next decade, 2 decades, are likely to be quite complex. The thawing of relationships between India and China, for example, is also a very meaningful development that has happened. So on the one hand, I think the strategic competition with China remains intact, but at the same time, there is an access to our markets that we can provide and on our terms in return for their technology and their capital. Similarly, with the US, I mean, the headlines in today's papers, you would have seen, on the one hand, there was a 25% tariffs, and right next to that was the launch of NISAR, which is ISRO and NASA launching together. And from what I understand, there are very deep-rooted connections between India and the US. This is, we have to put this thing in perspective, that there is a $6 billion impact. I don't want to underestimate or emphasize that, this is nothing at all. There is an impact. There will be an impact on apparel. There will be an impact on jewelry. There will be an impact on electronics. But again, this is something that India needs to counter through maybe fiscal support measures, through other regulatory measures. Because what India, and if you see the Indian press release, it very clearly states that, look, we have limited room for maneuver on the agri side. I think that one of the issues not stated in the press release that even if we cut duties, the impact has to be graded, meaning over a period of time, it cannot be sudden. And those are things that India is unwilling to negotiate. Now, can there be other grounds on which common ground can be found? Perhaps yes, but I would not interpret this as a complete break of relationships, because these are strategic partnerships. President Trump is still coming in October for the Quad Summit. So, at this stage, I think the market should be best off just thinking about it as a $6 billion impact, and let's see where the negotiations go next.
Okay, all right. Hi, Nilkant. Good to see you, Ben. What about flows? The other worry is we can quibble about, what's going to happen with regard to duties, whether or not it'll be lower or not. But the fear is that as it is, we were not getting a large chunk of the FI flows. And now, in fact, because of this sort of engagement that we're having in the United States, maybe that further moves away. What's your take with regard to flows?
Again, we have to think about individuals looking at their own self-interest. And so investors have to see India for where we are. If a very significant amount of monetary easing has happened, as of now, the economic momentum is quite weak. Which perhaps is still weakening, but with the extent of monetary easing, the economy should revive. Now, on the flow side, we've been studying this every month, and frankly, India is not an outlier. So over the last 12 months, if you see flows as a percentage of market cap, India is somewhere between 1 and 3. And the country that has got the second most, China. So if you think that US and China are somehow becoming friendlier, they're not. This is a contested relationship. It's a complex relationship. And therefore, I would not think that the flows beyond maybe 1 or 2 days here and there would actually be affected substantially. They will be much more affected if the monetary easing that has been pushed out pushed by the Reserve Bank and the Monetary Policy Committee does not result in meaningful credit growth in the next 6 months. For me, the fact that the real estate cycle is stalling, that for me is a much, much more important variable than, tweets. And frankly, it's not even a letter yet. It is, I think, this is like the semi-final, pre-final that, it is stalling. Let me put some pressure. Let's get people to start, finalizing quickly.
I got it. All right. So $6 billion in terms of increased tariffs, not too concerned about flows. It's not an India-specific issue. So we got that out of the way. But you spoke about monetary policy. And now the hope is there could be some easing. What kind of action are you factoring in from the RBI? Because clearly the economy, the most data points, you get power, other consumption data points as well. It's soft. As of now, it's soft. The hope is from September onwards, we see a recovery. What role does the RBI have to play in this?
Okay, I'll take a minute to answer this. If you think about a 7% potential growth rate, you have cyclical factors on the fiscal and monetary side. In the last 2 years, as the government was doing fiscal consolidation, by 80 basis points each, and it is 40 basis points this year, you are effectively starting. I know I'm oversimplifying, but I think it's very useful to think at a framework level. Your potential growth is 7, but if the government is shrinking the fiscal deficit by 80 basis points, you were starting at 6.2 in the last 2 years. This year, you're starting at 6.6. Then there is the monetary overlay. In March 2024, credit growth adjusted for the big merger that happened was 16.3%. It became 12% in March 25 and 9.8% in May 25. So there is a 6.5% point decline in credit growth. Now, given that banking system credit is about 56% of GDP, this is a more than 3% of GDP impact that we have seen because of monetary tightening. Some of it, I think, was intended. Some of it was absolutely unintended. I think the RBI ended up using very blunt tools last year, which has resulted in some of these problems. So the economy, as we speak, I think your read is right, is still weak. In fact, it may still be decelerating. When monetary easing happens, the channel through which it is most potent in India is credit allocation, meaning that financial firms need to get the risk appetite to start taking on more credit risk. As the economy is decelerating, it becomes harder and harder to do that. But still, given the extent of the easing, I think it's a reasonable assumption that there are some financial firms which still have the balance sheet, they don't have the NPAs, they can start pushing through. And once the first 1% point increase in credit growth starts to happen, which is, I think, maybe November, December timeframe, the economic acceleration after that should be quite substantial and very, very rapid. That's our opinion.
That sounds very, very reassuring, just the kind of reassurance perhaps one needs, Neelkant. And, I was just coming to exactly that point. So you're saying October, November onwards, the acceleration should pick up. So let's just, understand what you're baking in right now. How many more rate cuts? What kind of a pickup in GDP growth? And are you factoring in anything more from the fiscal side? We've already got that income tax cut. Is there anything else that you would expect or, at least wish that the government considers?
So on the monetary side, see, there is prescription, there's prediction. So prescription for me is that nothing more needs to be done for now. Because remember that the channel through which we are expecting monetary policy to act is not the cost channel. So we are not saying that if you make loans 50 basis points cheaper, credit demand will accelerate. Because the challenge here is risk aversion in the economy, risk aversion in the regulators, risk aversion in the financial system. Just to give you a sense of what I'm saying, back in 2013, nearly 60% of bank loans were at interest rates about 12%. And I totally get that this was a high inflation environment, that things were growing faster and all that. But that was the level of risk. Today, it is less than 11%. In the last 1 year, the incremental share of 10% plus interest rate loans has collapsed. So it is about, so when the problem is risk aversion, I think rate cuts are not going to help. So I think what you need is much more, I would say, procedural changes, and which we can discuss when we have more time. But on the fiscal side, I don't think there is much room. In fact, what I apprehend or what I'm apprehensive of is that in the next couple of months, there may be market concerns emerging that tax collections are falling short. Remember that these things are all very cyclical, they feed on themselves. But hopefully that will be temporary. I don't think the government intends to miss its fiscal target. So if it means there may be more disinvestment, there are other tools available which you can use to sort of meet the targets. And so fiscal, I don't think there is room. I don't think there is even intent to change this. I think the government is likely to wait for the reduced cost of capital, that the 10-year bond yields are low, the equity capital is cheaper, and let entrepreneurs then do their thing. So I don't expect anything to happen, but I do expect that with a lag, the monetary easing should lead to greater credit risk appetite for borrowers. And I think demand is there. I mean, most people say, oh, there is monetary easing, but where is loan demand? In an economy like India, credit demand is always ahead of credit supply. If you see some of the NBFCs lending at 28% viably, it tells you that that the demand for credit is all there. It is a question of when the financial firms and the regulators become much more comfortable allowing firms to take credit risk.
Yeah.
All right, Nilkant, thank you very much for joining us. Good speaking with you. And as you said, we'll invite you over for a longer discussion, but I think very, very useful, very insightful as always. Thanks indeed for being with us here on the program. 140 points lower. Nigel, I think we have the management of KPIT with us.
Well, that's right. Let's focus on that one then, the earnings reaction. KPIT is on our radar. Well, the last quarter's performance is a little bit subdued, but the management is optimistic on growth momentum in the second half of the year. Let's talk more about the past quarter's numbers. Mr. Sachin Tikekar, the joint MD, joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, you're indicating the second half of the year will be good. But do you think quarter two as well, we are bracing for a bit of degrowth and going that quarter, the first half is going to be soft, second half is going to be better for the year? Give us a rough range in terms of growth. What are you looking at?
Absolutely. First of all, thanks for having me. So first of all, we are happy with the performance of the last quarter. It's in line with our expectations. We were able to hold on to our margins, which is very unusual these days, at 20% EBITDA and more than 17% EBIT. The top line was as expected. What we are seeing is, first of all, the deal closures have gone up. The pipeline continues to look robust. It's just that there are certain things that are still hanging up there. And hopefully, we've been talking about tariffs and the geopolitical issues and also the intensity of the competition among the OEMs in the car and the truck segments. That part needs to stabilize a little bit, and we believe that in another quarter or so, things will stabilize. Once they stabilize, we think we'll be able to start these engagements that we've been able to sort of seal over the last couple of quarters. So we do believe that H2 is going to be better than H1, especially towards the end of H2, we'll see growth coming back. So what I can say about, and it's going to be our effort to hold on to the margins while we go through this kind of transition.
All right, so 21% margins or so is, is something that you can maintain is the takeaway that we're getting. But, if I look at the growth, as you're saying, second half will be good, but should we brace for a degrowth in quarter two as well?
It's we don't talk about quarter-on-quarter numbers. All I can say, given the uncertainty continues, while we continue to start new engagements, there are pressures on the other hand as well. So, given the uncertainty, it's hard to say at this point in time. However, given the actual closures and the pipeline, we feel much better about the H2 of this financial year.
Okay, so when you say much better, can you give some more color on that, Sachin, in terms of what clients are saying, your deal pipeline, size of deals, nature of deals, and the pricing of those deals as well, given that we are in this AI environment?
Absolutely. And, to us, what we've been bracing for last couple of years is moving from being largely a services company to a solutions company. That's something that we started to do a couple of years ago. And now it's getting accelerated. What we have also done is we have created models that are AI infused for mobility, and we are applying those. And with those models, what happens is we take a broader view of a program and sort of cannibalize some of the stuff from our competitors and at times our own business. So that's the kind of transition that we are going through at this point in time. And we believe that this will continue. The name of the game is going to be solutions and products going forward. So it's we're reimagining our business in some sense. Hence, it's just going to take another couple of quarters for us to make that adjustment. In terms of the wins and the deal pipeline across the three geographies, I think we have had healthy closures from passenger car, trucks, as well as off-highway. Obviously, given our depth and breadth in passenger cars, the volume is much bigger there. But we are seeing some initial shoots, green shoots in trucks and off-highway as well. One thing I do want to say is there are 3 countries where we started to make investment. Sweden, where we opened an office recently, and there are a couple of large truck OEMs and one car passenger car company. And we have started to focus on India for India and China for China. So we do hope that both India and China also contribute to our growth as we get towards the second half of this year.
We would have had a longer conversation, and we do hope we get the opportunity to speak with you mid-quarter once again. Just a busy day because of tariffs, you would understand. So thank you very much for joining us with your perspective on the business and the lay of the land. HUL numbers are there at the bottom of the screen. 2730 odd crores is what the net profit looks like. 2535 crores was the poll. So 15,930 odd crores is the revenue. 15,945. So these look like absolutely in line with expectation numbers. The EBITDA also almost, there's a 30-40 odd crore difference between the reported EBITDA as compared to the poll. Mangalam should join us in a bit, but I think let's just bring in Naveen Kulkarni for a quick reaction to these numbers. Naveen, if you've seen the basic set, your thoughts?
Yeah, overall, I would say that these numbers look okay to me. There is some bit of contraction in EBITDA margins is what I see, but I think that was expected. Revenue numbers, I think there's a 5% growth for the quarter, which I think looks quite okay. Broadly speaking, I would say that first reaction is kind of inline numbers, but a little bit encouraging that we can see some bit of improvement on sequential basis.
Naveen, what is the volume growth estimate that you have? If the first quarter started off like this, we were just speaking to Neelkant Mishra of Axis, and he, like many others in the market, believes the second half growth could start picking up. For HUL, what is your volume estimate and call on the stock?
So volume growth estimates was not much, right? It was very low single digits, right? 1 to 2% kind of volume growth.
For the full year?
No, not for the full year, for the quarter. Full year, I think we should end up, again, it will be low single digits. I don't think so we are going to have a significant number. Second half, it might pick up. So first half, second half, I think it might be in the range of around 4% to 5%. But again, we'll have to see how that picks up.
So then 4 to 5% volume growth and looking at valuations right now, what's your rating on the stock?
So we don't have a rating as such, but I would say that overall valuations are still not cheap. But of course, it has come off from what it was probably a few years back. If growth numbers pick up, I would say that the valuations will be justified and stock could do well.
Okay. All right, Naveen. Thank you for that. We've got Mangalam weighing in as well. Mangalam, we're desperately looking for good news. I don't know. Tell us what you think of HUL.
Well, these are largely in-line set of numbers as the street was expecting nearly 3 to 4% sort of revenue growth. The company's gone ahead and reported that as well. There hasn't been a big dent in the EBITDA. In fact, the margins have been largely in line with street expectations of 22 to 23% as well. So 22.3% is what the company's written. The only couple of things that we are awaiting right now are the management commentary and the volume growth. The street was working with this time around a volume growth of anywhere between 3 to 4%, largely in line again with what the company's revenue growth has to be, because they've said that there would be low single-digit sort of price growth that may come by. So that was what the expectations were. And more than anything else, what the way ahead looks like in terms of demand would be extremely crucial to track for HUL, largely because, one, these results are in line. The underlying demand environment is improving. And for HUL itself, come tomorrow, we have a new leader joining in. Priya Nair joins in as Rohit Java steps down today after the board meeting takes place. So we will, await any sort of new strategy coming in from the new leadership out there. But these numbers absolutely in line. The stock obviously has seen a recovery from lows ever since the leadership announcement change was announced.
Okay, yes, absolutely. 3 cheers for Priya and Lady Power at HUL. First time ever in the company's history here in India. Mangalam, thanks very much for that. We've got Prakash Diwan joining in for a quick reaction. Prakash, look at the market environment. Look at lever. Stock's not done much. There's some anticipation of a turnaround. Is it a buy or is it an avoid for you?
So a couple of things that make it positive. One is the numbers could have been much worse than what they've come out with. This is very much in line, even if volume growth is as anticipated, low single digits. It paves the way, given the input side being so benign and a new leadership, there's continuity, there's a little bit of new energy. And remember, we'll of course wait for the internals, what's contributed to these numbers. But
if personal care, hygiene, beauty products, those are the ones that start growing, they usually result into better margin profile as well. While it may not lead to great volume thrust, but so I think it stands at a cusp where things could only look up. It's a great handover for the new leadership to take it forward. So quite positive. But I don't think the market's going to be disappointed or wanting to sell beyond where it is. Of course, it's still $600 short of the 52-week high, but that doesn't seem very difficult to cross as we progress in the next 9 months of this year.
No, absolutely. By the way, Prakash, the market reaction today, just if you didn't know that this 25% happened, 150 down on the Nifty, could be any other day.
That's what Surabhi said when you started off the market with the heat map. 0.5%, 0.6% is par for the course, Prashant. You're absolutely right. And remember, we are such a domestic-focused economy now. And growing on all counts, it might not make such a big difference given the volume of exports and just a few sectors being exposed. As long as IT and pharma continue to be out of this, I don't think there's much to worry. It was sentimental. It was the tone of the messaging that was a bit harsh, which made people get a bit anxious. But I don't think the contents are really worth worrying about. So markets will go back to focusing on earnings, which is the right thing to do. And from that perspective, if the last 48 hours have been any indication with L&T and some of these other large numbers coming through M&M, I think we are seeing an earnings season that's shaping out to be much better than what we would have thought at the beginning.
All right, Prakash, thank you very much for that. What we'll do is we'll take a quick commercial break here. Markets are down 150 odd points. We'll come back with the top management at Mahindra & Mahindra to talk about their first quarter numbers, which came out yesterday. Stay tuned. Okay, welcome back. The market's down 160 odd points. So this is, pretty much like I mean, have to say like any other day, 0.6, 0.7% lower. Par for the course. Market breadth, though, is a little negative. 1,800, 1,900 stocks are down, and you've got about 600 odd names which are in the green. So about 3:1 is where declines to advances stands right now. As promised, we have Mahindra & Mahindra's top boss with us. They reported, of course, M&M reported numbers yesterday. Healthy volumes, revenue growth, but margins were impacted by, maybe a little higher proportion of EV sales. Anish Shah is Group Chief Executive Officer and Managing Director at the Mahindra Group. Anish, great to have you with us here. It's always a pleasure.
Likewise.
To have you in the studios. We'll get to the numbers in just a bit, but I have to address what is top of mind this morning, which is tariffs. Now, auto OEMs, in terms of exports to the US, is very small. So in terms of the direct impact, it's not very much. I'm not asking for a Mahindra company impact. But as a leader of the industry, Anish, auto ancillaries there are large exports into the US markets. How disruptive is this, and how do you think about it? Because when we started all of this in March and April, at a broader level, the expectation was that we probably will end up with a lower tariff compared to peers, countries around the region, etc. We are actually on the other side now. Most are at 15, 20. We are at 25 plus. Your thoughts?
The story is not over as yet. I think there's a lot to be done. And based on what we've seen our government be very balanced. There's a good relationship between both countries. So I think everything will work out well.
You think these will be negotiated lower? Or?
I think we're still a little ways away from the end state. So I'm very positive that things will work out well.
Specifically with regards to auto ancillary companies, I mean, any thoughts at all at a broad level?
I think it's still too early to say. I think we just have to wait to see how this progresses. We have to do what's right for the country overall, and I think that is what the government is doing. So I do feel that things will work out well. As I look at the UK FTA, I think that has been brilliantly done.
Yes.
It's a great win-win, and it's one that positions us very well on the world stage. And there are others that are in the pipeline as well.
So that's on tariffs, and fingers crossed, keeping the faith, like you're saying, picture abhi baki hai. Maybe that's how it's going to be, and 25% will not be the ultimate levy that we'll get. Now let's talk about the performance. And Mr. Shah, it's been superlative once again. Good volumes. The profit growth is, 30% plus. The revenue growth is 26%. But I want to come to the more challenging part, right? Because that's what the market always looks at, because your stock has done so well, and that's margins. Now, people will want to understand that as, the share of EVs keeps rising in your mix, and those cars are selling so well, right? What is the trajectory for margins for your automotive business?
So any new launch has lower margins, and that's what we've seen over time, and no difference here from an EV standpoint. With EV, it gets a little accentuated because we have 6 launches with one platform coming in with EV. And we have been showing the difference in margins for ICE and EV right now. Our ICE margins continue to be very healthy and very strong. And on the EV side, as volume grows, we will see that catching up. Volumes will grow over the next couple of years, and we feel that margins will be at par with ICE. And that's something that we have to demonstrate, as we have with all of our previous launches.
So just to put some numbers to that, ICE as things stand, as commodity costs stand, and competitive intensity stands, where do you see ICE margins by the end of the year? And where will the EV margins be? Or if not EV specifically, where would then blended margins be for autos?
So we've stayed away from any forecasts on margins. Our ICE margins were much lower 2 or 3 years ago. I know there was a lot of questions when the XEV700 was launched, because the margins were lower when that was launched as well. And at that point, we had deviated and given a forecast saying we will grow 300 basis points in the next 18 months or so. And we beat that handily and have grown much more since then. So we are in a very good position. My sense is we are probably the market leaders or close to it in terms of margins. And we will continue to focus on growth in margins, but more important for us is overall growth. And that is what you've seen us deliver. Our capacity has gone up 4x now in the last few years. And we continue to add capacity. And we continue to see very strong performance across each of our brands. In a flat or close to flat market, we've grown 22% this quarter, and market share is up 5.7 percentage points. That's something that typically is well beyond what we've seen anywhere.
But can we say that near about 14%, which is where your EBITDA margins are at the start of the year, first quarter, is that a floor, or could the flux and the changes in the mix, could it take it lower before it recovers?
In the world we live in today, I can never say something is a floor, because we will always have some challenges. Okay. What we have learned is we get back from the challenges quickly enough, and we come back. So I would look at it as a good margin for us. We will strive to continue to increasing it. We would love for that to be a floor, but the world we live in today, that may not always be a luxury.
All right, and beautiful to see those Mahindra vehicles on the road look absolutely splendid. That said, let's focus on the other part of your business, the tractors business. It went through a bit of a lull, I think 18 months or so ago, but the tractor industry itself is looking up, and you have been gaining market share. What kind of a growth number could you give us in the tractors vertical? And your market share has already improved. Do you see further scope for improvement from here?
So industry has grown. Our volume is up 10% this quarter. You're right, our market share has grown very well. We are at 45.2%. On tractors, I would look at it slightly differently. At a 45% market share, our message to our teams is we are not going to focus on market share growth. We're going to focus on execution. That has been our message for the last 5 years. And we've gone from 40 to 45%, driven by strong operating excellence in what we do. And that is the approach to market share growth there. It is product, it's operational excellence, and that has worked very well for us.
Okay, all right. Mr. Shah, final question before we let you go. And I need to ask you this because we get asked this query quite often. Is there any kind of value unlocking exercise in the works? Would you consider demerging both these two businesses, since both of them are flourishing now, both of them are growing at a good pace? Is that on the cards sometime in FY26 or FY27?
So this has been a question I've been asked for the last 5 years. And 5 years ago, I said, we're going to first focus on operating very well.
Yes.
And that will be the value unlock. We've grown a market cap 12x from April 2nd, 2020. And that has been, hopefully, a good value unlock. We still feel we have the ability to continue on that path of operating well, being able to grow, and all of this has been organic so far.
Right.
It has not even been driven by acquisitions. We will likely look at acquisitions, but we will look at it where we can significantly grow one of our current businesses, or we find some amazing opportunity that we feel we can deliver returns with. Because what I also want to highlight is a performance you see now, and you've seen that consistently for multiple quarters, is driven by all our businesses.
Yeah.
And we talk a lot about auto because it is a very exciting business.
Yes.
But Mahindra Finance, TechM, Life Spaces, logistics coming back very strongly now, holidays, Sustain, Excello, all of these businesses are contributing very well to our growth number. And that is what's delivering the value unlock.
So no demerger.
No demerger. We are hearing no demerger.
No demerger.
Is nothing for now.
For
now.
You said you've been asked this question.
Nothing for now. Yes, we will always look at value creation for shareholders. So it is never off the table. But as I said 5 years ago, we're going to first focus on what value we see today.
Yes.
And then we will evaluate what.
So in the near term, it's not on the table, but maybe we'll have to see how things unfold.
You spoke about, I asked you this question 2 or 3 quarters back, and you said, you turned the question on its head. You said there's a conglomerate premium, perhaps, not a discount.
We are starting to see it head that way, right? Because we are starting to see analysts recognize the fact that businesses being together can actually add more value. And that is what also, you're right, I've said this before, which is we will evaluate very carefully what is the value of keeping them together versus separate. Right? Our focus is on shareholder value creation. But we do believe that there's greater value in many ways of keeping them together. And that's what we've seen. So that's part of the exercise we will do at some point in future, not in the near future, possibly not in the medium term as well, but at some point.
And we'll keep asking you every quarter, maybe. We'll be nearer, but we'll see.
When my response is mistaken, at least.
So just a broader question. We've been, again, this is not new, but has consumption maxed out? That's been a question, even at the premium end. I mean, we've asked that question, but as your sales, SUV sales have shown over the last many years, clearly that has not been the case. But I'm asking again, are you starting to see a little bit of that maybe?
In fact, very much the contrary in our view, because if you look at almost any metric, penetration of products in India is far lower than anywhere in the world. And India is growing as an economy. Yes, we will see some bumps along the way, as that will always happen. But rurals come back very well. Urban is slower right now. And I would expect the second half of the year for India to be a very strong second half.
For your business as well?
For the economy overall.
And but for your business as well?
For our business, I always expect the next quarter to be very good.
Just need to be at one of those Mahindra showrooms, and I was at one a couple of months back to realize there's no slowdown in India. But very quickly, you mentioned acquisitions. So is there anything cooking in the kitchen right now? Which segments, what size, geographies?
We are always cooking in the kitchen. And we look at anything that might help our current businesses position themselves much better. SML was a specific example on that front. But we have a very high bar. And we will do things only if they are accretive, if they make sense, if they will really add value for us as well.
All right, Manish, thank you so much once again for dropping by. And it's always a pleasure chatting with you face to face. Really
Likewise.
Appreciate it. Good luck.
Thank you.
Thank you.
Well, I think that is the sort of view coming from the top as far as the Mahindra Group is concerned. A 360-degree view. I mean, we started with tariffs really at the top, and then, of course, micro with regards to the business itself, and rounded it off with that, value unlocking a question as well. We'll take a quick commercial break here. We're going to come back more on markets on the other side. Stay tuned.
Welcome back. The equity market is still dealing with a cut of about 0.75%. Let's shift focus to commodities, see what's brewing there. Manisha is joining in with the latest. Good morning, Manisha.
Well, every segment and sector in commodities brewing, but I have to choose one. So I'm talking about the crude oil prices right now. And we are trading at around 6-week highs onto this one. If you look at the month of July, this has been the biggest monthly gain since September 2023 that crude is posting out. And that is by, again, up of around nearly 10% for the month of July there. Well, the US has announced tax on Indian exports, and that's something the markets are looking at. There also is penalty for Russia oil imports. There also has been conversation about China here. So the concerns really come in right now is that India and China, because they are the exporters of refined crude, is what you could be looking at in shortage in the international markets there. Also, Russia is the top oil suppliers to India, with the kind of reports that are available right now do suggest that in first half of 2025, 35% of the overall oil supplies to India came in from Russia. So that's a significant number there, and that's exactly what the markets are reacting to as well. So as I said, there are concerns about refined product exports from like diesel from India and from China as well, and that immediate tight supply is what is keeping the markets in good favor there. Also talk about the US introducing very extensive sanctions on Iran. The highest and the most intensive, as I said, in last 7 years is what we're dealing with right now. And of the 20 companies who have been put in these sanctions, 6 of them really are in the Indian markets there. Companies that have been targeted also are in Turkey, in China, Indonesia, and UAE as well. So US has imposed sanctions on trading in many of these companies which are into petroleum and petrochemicals as well. All assets of these companies in US are to be frozen, and if there are US entities a part of these companies, that also will go into a freeze there. So, well, the US entities are prohibited to conduct businesses with any of these companies also. And interestingly, many of these Indian companies, and that should come on your screens really, have imported commodities like methanol, toluene, and polyethylene from Iran. Most of these companies also are into supplying and trading. Not too many of them are listed as well. And when you look at those names and those numbers and the kind of period and the imports that we've seen from Iran, clearly have been on the higher side. But as I said, it's not directly crude. It is to do with crude products there. And we are looking at 84 million or 51, 49. And these really are the company names that have been put out by US as well. If you look at many of these companies, the numbers are for 2024. And many of these are from October to Jan 2025 as well. And it has been millions of dollars, but the markets do believe that at this point in time, there's not going to be a very large impact because the quantum overall is on the lower side there. Apart from that, we haven't heard from these companies yet. And there is an addition in that statement that came in from US suggesting that these companies have the ability to appeal to be taken off those sanction lists. They will, of course, have to give various documentations and future accountability as well. So at this point in time, not too much of an impact, but we have those numbers coming in on your screens there. What the markets also will watch out for is the OPEC Plus meeting on this weekend. As of now, the conversation is that while OPEC has been increasing production from the month of May until September, October actually could be a bit of a pause there. The strength in dollar index is what seems to be weighing onto the markets right now. But even with that, $73 per barrel is holding for the Brent prices, with markets believing that even as July is ending 10% on the higher side, August could be equally bullish.
Okay, all right, got it. Thanks very much for that. Manisha there with the commodity cues. By the way, just let's fire up the HUL intraday chart if we can. That commentary has really sparked off lots of buying. They're saying sequentially margins can improve. And if commodity prices remain benign, then they're talking about some price growth as well. And the market loves the sound of that. It's almost 2.5% up on HUL. Well, with that, we'll take a quick break. On the other side, Lata, comes in and she discusses the impact of this 25% tariff on India. If these tariffs stick, then how big a hit will it be for the Indian economy? She'll be in conversation with Ajay Srivastava of Global Trade Research Initiative and Abhishek Upadhyay, Senior Economist at ICICI Securities. PD.
No surprises on It's the Economy. We are going to talk tariffs. I just did a dipstick survey with economists before I came into the show, and the impact of the 25% tariffs is seen as between 0.3 and 0.6% of GDP. But this doesn't include the penalty, since we don't know what the penalty is or whether 25% itself is the penalty. The problem in calculating impact is that part of the tariff usually gets passed on to consumers, part of it is borne by the exporter, and part of the hit is absorbed by the depreciation of the rupee. Look at the depreciation of the rupee over the past few days. Keeping these points in mind, let me invite our two experts to decode the impact of tariffs on both the macroeconomy and micro sectors. I have with me Ajay Srivastava, the founder of Global Trade Research Initiative, a Commerce Ministry executive himself in his previous avatar, and Abhishek Upadhyay, senior economist at ICICI Securities PD. Gentlemen, thank you very much indeed for your time. Abhishek, first the macro point. This is what I got, 0.3 to 0.6. Can you explain how we should think about the macro impact, given that we only know part of the hit, 25%?
The issue with estimating the macro impact, as you know, is we don't know how long these tariff rates are going to last, what will be the penalty. And as you mentioned, what part of it will be absorbed by the Indian exporter, the US importer, the US consumer. And then on top of, those assumptions, typically you apply, how elastic Indian exports will be once you have some color on how, high the US consumer prices are going to be. But making some heroic assumptions here, assuming at least the penalty part of these tariffs, where we have no clarity, and assuming that is temporary, and the effective rise in tariffs is, for India, somewhere between 20-25%, and roughly 1/3 of that is absorbed by the US consumer in terms of higher prices. We assume maybe 30-40 basis points impact on growth from there. The reason we are not calling for a bigger impact, even this impact we have to see. This impact we'll only see if these tariffs stick for few quarters rather than few months. The reason we're not thinking bigger impact at this stage is two reasons. One, we have seen rupee already has underperformed other currencies. So while dollar has weakened more broadly, rupee has not appreciated in the same light. And on real basis, rupee has depreciated. Second, some of the competitors for India also are absorbing relatively higher tariffs. So the best case scenario, it appears, would have been 15% tariffs. We are stuck with 25% tariffs, excluding the penalty impact. And third, there's already been some front loading of exports to US. So if you see first 3 months of the fiscal year, April, June, exports to US have grown roughly 22% YOY. This compares with overall growth in goods exports of just about 2%. So already a lot of these exporters have front run faring higher tariffs, and that provides some cushion, some time for us to see if negotiations work and tariffs come down. Therefore, we think, growth for this year, which we were thinking earlier, 6.3%, could still be closer to 6% rather than lower.
Mm-hmm. Yeah, actually, the last midnight soundbite that came out, I think it was a tweet, that came from President Trump looks particularly from a person who's irritated with not getting a deal. It didn't look very positive, so I don't know if there is a plus penalty or whether 25% is the penalty. Mr. Srivastava, what would be your initial reaction? Is it going to be a big hit? Or as Abhishek says, rupee depreciation and passing on some prices will make it easy to suffer this?
So I take it as very normal process in the US. They were to announce new tariffs from August 1 on the countries with which they could not get the deal. So if not yesterday, the tariffs would have been announced on India, say tomorrow. So 26% was already expected. Penalty was, of course, the surprise element, and we have to yet to know what's the quantum and why. Is it because of Russian oil or BRICS membership or something else? So penalty amount will decide. And I personally see this as a pause in the negotiations. Negotiations have been continuing, and we heard that US team will be visiting India in the second week of August. And this is just a pause Trump, being Trump, he uses offensive languages and loses friends in the process. But I think they need deal with India desperately. And my guess, I could be totally wrong, but I still stick my neck out, is that, India is willing to give them access to 95% of their exports to India. That is industrial goods. Agriculture accounts for less than 5%. Now, India, most of the agriculture is red line for India. Trump understands this dilemma of India, that India cannot allow most of the agriculture. But suppose he does a deal with India today, then all other countries will be approaching Trump, please leave our agriculture. Right now, he could get Japan or European Union to sacrifice their agriculture. But suppose he does a deal with India today, then no other country will be committing to agriculture. Okay. Maybe that will be the reason for delaying this deal.
Fair enough. Yeah, fair enough. Maybe, therefore, he'll arrive at a deal with us last and after he has struck the agreements with others. But, Abhishek, you were calculating because of the hit taken by the Indian exporter and partially passed on to consumer, the hit will be probably about 0.3, 0.4, which is what most people are reasoning. Do we stand to gain because we don't have to buy expensive oil? We are free of other conditions. Would that be adding on a little bit, and therefore the hit to the macro may not be very much?
Well, concessions which other countries appear to be giving, the major ones include, investments in US, defense purchases, energy purchases, etc. It was likely that India would have had to make some of those concessions. I don't think there's a big negative impact if India, instead of buying oil from a different source, purchases some of this from US. Maybe the cost is higher, but I don't think that is a big drag. I think what we need to see here is, now that US has started to impose secondary sanctions, a penalty is a sort of a secondary sanction for purchases from Russia. What impact this has on variables such as crude prices also. If crude prices increase, I would think that is, a separate hit that, we may get, on growth from there. So there are a number of moving parts here. At this stage, difficult to really consider the impact of those other moving parts.
Okay. What's your sense, Mr. Srivastava? Do we save precious dollars because we went to Russia because it is cheaper? Other than the strategic diversification of sources, do we save some money and not being forced to buy military equipment, which may not necessarily be our first choice or our best choice? Does that save us something?
So 2-3 things are there. Military equipment doesn't mean that suppose we buy planes, that's sufficient. No, we have to buy all the supporting structure. And we have committed a large amount of money for, say, Russian ground structure. Replacing ground structure of Russia with another country, I don't think we have any sufficient reason given by Mr. Trump, especially when America always stands with our enemies during our weak time, all the time. So I don't see. On oil front, Trump got Europe to commit that Europe will be stopping buying all the oil energy from Russia and buying everything from US. But if you see the US production, it's not sufficient to supply to European demand. Forget about the rest of the world. And he's getting other countries to get commitments to buy oil, every one of them, without even knowing what their capacity is. I think we need deeper understanding of these issues.
Yeah, I believe Morgan Stanley tried to make that calculation that if everyone actually acceded to US demand to buy crude from them, they will take up until 2027 to be able to supply all that crude. That's the rate at which their own crude production is increasing. So yes, there is a catch over there, but at the moment, the US president is not looking at actuality. He's only looking at scoring a point. Abhishek, what do you think will be the hit on the rupee? Should we be now prepared for 88 very easily? Today, the Reserve Bank is in the market. Any trader will tell you that. But eventually, it is to India's advantage to allow a depreciation. So have you changed your likely end-year rupee forecast?
So while CAD has not been a concern for India, overall BUP flows have been quite sluggish. And that is the reason rupee has underperformed other countries already so far this year. This is a sentiment hit, and I mean, we have seen some impact on rupee already. We are not changing BOP assumptions materially at this stage. We were already anticipating close to a neutral balance. Maybe we go slightly negative for this year because CAD could be a little higher with exports being hit. But yeah, on rupee, it also depends on how RBI views basically where RBI wants rupee to settle ultimately. They are big players in FX market. They have had a hands-off approach of late. Expect them to allow some more rupee weakness given downside risk to growth that we are already seeing. Even in a weak dollar environment, we are thinking rupee will be stable between $85, $86 range. You're right. Maybe, it will settle towards the higher end of the past ranges and maybe $87, $88 range in the near term before some of these losses are reversed, assuming dollar starts to weaken again as we expect.
Okay, actually, I'm completely out of time. I know that this is an enduring topic, and maybe by the time all of us meet again, we would be looking at a totally different set of tariffs and perhaps, hopefully, no penalties. Thank you very much for starting us to think on how to think about certain issues in terms of what can be passed on, what is the level of depreciation. Ajay Srivastava, Abhishek Upadhyay, thank you very much indeed for joining us. Wrap up on Bazar on that note. Chartbusters coming up.
Benchmark indices trade with sharp cuts as Trump imposes 25% tariff on India, along with an unspecified penalty over India's purchases of Russian weapons and energy. Pharma, IT, realty, all of them under pressure. The broader market underperforms.
Trump tariffs takes a toll on pharma, textiles, industrials, capital goods and EMS companies. Gokuldas, Apar Industries, Wellspun Living, among others, trade lower.
Shares of HUL rebound from lows after reporting its June quarter numbers. It's the top Nifty gainer in an otherwise weak market. The company's profit rises 7% to over 2,700 crore rupees, beating street estimates.
HEG zooms in trade on the back of a steady set of numbers in Q1 FY26. The company's profits jumps multifold while margins expand year-on-year basis.
And shares of Jio Financial Services rise after the board approves raising funds of over 15,800 crore rupees through the issuance of 50 crore warrants. Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, and today I have Vinny with me. Hey, Vinny, not such a bad outcome, right? If someone told you you're going to be down 170 points after hearing the tariffs are going to be at around 25%, I think the markets will take it. And what's encouraging, at least in the first hour, is we haven't seen those cuts deepen. So let's see whether or not the bulls have something in store. But I wouldn't really rule out a fight back because of positioning, because of underperformance getting into this event. So let's see how it goes.
Absolutely. We'll see how it goes. And earnings, that were reported by some of the companies are not that bad as well, right? We're talking about HEG. HUL. Good numbers in terms of volume, inline set of numbers. Then we have even those mid-cap, small-cap IT companies like Sagility. They're managing to do well. So we do have good numbers that are coming in. So in terms of earning front, I don't think there's a worry, at least on that front. So maybe, that fight back is something that we'll be watching out for. But, let's talk about the debutant on the D Street today. We have Brigade Hotel Ventures that are listed at a bit of a discount today of 10% to its issue price. Now, to discuss the way forward for the company, what are we expecting in terms from the growth strategy of the company, we have Nirupa Shankar, who's the managing director at Brigade Hotel Ventures, joining in with us. Nirupa, good morning. Thank you so much for joining in with us, and congratulations, firstly, on the listing coming in as well. Let's just start by talking about, now you can give us some numbers, you can give us those details as well. So in terms of numbers, what are we watching out for in terms of the growth outlook of the company, FY26, FY27? What are we watching out for there, and margins that we can expect from the company?
Good morning. Thank you so much for having me. It's definitely been an exciting day with the listing ceremony just over. In terms of our growth, what we've been saying is that, last year, of course, now that we're listed, number of forward-looking statements have to be limited. But what we are saying is that last year we saw a pretty good growth in terms of revenue and EBITDA. We saw a 16 to 17% growth. And in terms of top line, and maybe another 15% in terms of EBITDA. And in the coming year, we feel that this year should not be any different. We feel very positive. I understand that the market is slightly volatile at the moment, and I feel that volatility is the nature of the game, and it is up to companies like us to keep our head down, work hard, and stand the course, and continue to deliver on good numbers.
Okay, continue to deliver on good numbers is what you're talking about. I just want to probe a bit more in terms of, given the pipeline that you have, 5 new hotels that are coming in, you have 1,000 keys coming in by FY28 to FY30. What is the peak revenue now that one could see coming in for the company? Overall, in terms of the business-wise, FY25, 468 crores was your revenue. Next 3 years, FY 3-4 years, what would we expect?
See, the next 3-4 years, we will have 3 hotels coming in by FY28. We'll have another 3 coming in FY29. And the business development doesn't stop just there. Every year we are doing business development continuously. In fact, apart from the 5 hotels where we've tied up the land and the brand, there are 3 more hotels where we've tied up the brand and the land, and that will be announced shortly. And in terms of the IPO proceeds, we have kept aside some funds to buy an unidentified asset. So it's more of an opportunistic buy. So there will be growth that we see over the next 3 years. Of course, with hotels, as you know, it does take time to develop. Greenfield assets can take, once you finalize the design and once you finalize the land and get the approvals, they do take at least 2.5, 3 years by the time they can open to the public. So it is a long-term game when it comes to hospitality. Peak revenues, like I said, by the time these hotels come up and start to stabilize, could be 5 years from now. But we will continue, our existing portfolio will continue to see growth. And like I said, we are looking for opportunistic buys in the market as well to spur on our growth.
Okay, all right. Hi, Nirupa. Good to see you, Win. And, you know, my favorite image when a company lists is the young ones coming in there to ring that bell. You know, what a joy, what a thrill. You know, someday they'll realize what a privilege it is as well. That said, wishing you all the best for this journey now that you're listed. But let's focus on geographical expansion.
Thank you so much.
Yeah.
Thank you so much.
Yes. You know, as of now, you have a stronghold in South India. How do you see geographic breakup move from here on?
See, our stronghold, even from the parent company, is the southern markets. We like the markets of Bangalore, Chennai, Hyderabad. Our hotels are currently in 5 cities. We will be expanding to at least 7 cities where we have current visibility and where we've acquired land. In the sense, expand from 5 to 7. Apart from that, one of the main reasons we did this IPO and sort of created our own entity for the hospitality vertical was so that we could look at markets where the parent entity doesn't already exist. So it could be some leisure destinations. Some of the leisure destinations we're looking at could be Goa or interesting leisure destinations in the southern markets within driving distance of the major tier 1 cities. Could be religious destinations where we can expect religious tourism to come through. So we are evaluating markets apart from southern India as well. But of course, a lot of the expansion will be in areas where we have a stronghold and where we understand the micro market specifically. And now I think the portfolio will move from mostly business-driven hotels to a very healthy mix of business and leisure. And the other change that you can expect to see is moving more towards 5-star deluxe hotels. We have signed up the Grand Hyatt in Chennai. It's a beachfront resort. We've signed up a Ritz-Carlton in Vaikom, Kerala. It's an island beachfront resort. We've also signed up the Intercontinental Hotel in Hyderabad. So these are all 5-star deluxe properties. So this will help increase the ARR of the portfolio when they come up. And this will move us into more of 5-star luxury deluxe category portfolio.
Okay, and just a quick one in terms of ARR, what would your guidance be for the ARR going forward?
See, ARR for the existing portfolio obviously is very different. But when, maybe when we look at the ARR for the existing portfolio, because these are mostly stabilized hotels, then typically you don't want to take a very high estimate. So our estimates are very conservative for the existing portfolio, could be in 9 to 10%. But when you look at the portfolio overall and where we expect the portfolio to be 4 to 5 years when the new hotels come up, will be a significant increase. It could even mean a doubling up of the ARR based on how these hotels open and what the market conditions are at that point in time. But like I said, we are moving to a lot more luxury hotels and we do expect a significant increase in the ARR.
Okay, Nirupa, thank you so much for joining us on the show today, giving us an insight in terms of what we should be expecting from the company. And good luck, and hope you join us more often now, given that you're a listed company. But with that, we are actually going to slip into a very short break. And post the break, we'll have the management of HEG joining in with us to talk to us about their quarter gone by.
Welcome back. Well, the markets are now at the high point of the day, actually. So we have cut our losses by close to around 60 to 70 points. The Nifty is now down 130 points. And the big boys, HUL and ITC, they are leading the way as we speak. And you have the Nifty Bank as well that's trying to stage a bit of a recovery. At some point of time, the intraday chart of the Nifty should come up for you on the screen. That said, let's focus on a couple of good earnings reactions. We have Manish Gulati, the Executive Director of HEG, who joins us on the show. Hi, Manish. Good morning. Good to see you win. And, after a few quarters, you have surprised very, very positively. Your shareholders will be very pleased to see what you've delivered. But overnight, the guy who's taken center stage is Mr. Trump. So let me get that out of the way first. They have imposed 25% on imports coming into the United States. Out of your total mix, how much of it goes to the United States? I think exports are 2/3, but out of that, how much goes to the United States?
Morning, Nigel. Good to speak to you. If you look at our total sales, it's just about 10-12% of our total sales. So yes, US is an important market, and yes, this is also what we are hearing last night news is all very fluid, and I'm sure it's still being negotiated like with other countries. So we will see how it proceeds in the future. But however, having said that, yes, we do treat US as an important market for us.
Okay. All right. But you don't see any big disruption is what you told us last time around. But we have got the number 10 to 12% of your total produce goes to the United States. For the past quarter, what was your utilization levels? And if it was at around 85% and I compare it with 80% in the previous quarter, that would mean realizations have improved by around 7 to 8%. Would that be a fair estimate?
Nigel, our capacity utilization for the last quarter was better than that. It was in excess of 90%. So that's where it is coming from. Pricing is a very slight increase because it's a basket. Some markets have some price increase, some markets do not have price increase. So as a basket, it's very marginal, I would say. But volume is a big uptick from a level of 80% in the Q4 of last year to in excess of 90% in Q1. And as we speak in July, August, September, this quarter, we hope to be around 85%.
85%, got it. So let's get two factors out of the way. You said there was only a marginal increase in realizations, right? So for this quarter, what is the kind of increase we will see in realizations? Point number one. Have realizations bottomed out? So that's on the realization piece. And does this mean that Mr. Gulati and the team at HEG will now start reporting 20-25% margins for the coming quarters?
For this quarter, July, August, September, it's about going to be at the same level as Q1. This pricing takes time to stabilize. We are all looking forward to it, but it's maybe towards the later part of the year, we get actually you start seeing it in our profitability. So we are looking at 10%, some price increase, but not this quarter. So as we book, as we go, so that basket, it averages over time. So it takes some lag effect to see the price increase.
So then the price goes up by roughly around 10% in the second half of the year.
I hope so. I hope so.
That's the hope. That's what you're pushing for. And the margin picture you were going to tell me?
The margin picture, you see, when you can look at our EBITDAs, like this quarter around 23%, but that of course includes some mark-to-market of Graphtech of about 23 crores. So these margins, I believe, towards the end of the year will come in that level.
So margins will continue to improve from here on?
Yes, margins should, stabilize and improve.
All right, so the worst of margins are in the price. Cool. If you could tell us, what about the industry inventory levels? What is it currently? How does it compare with averages?
The way we are working, we do not have much inventory in our plant, hardly a month or so. And in the system also, if we look at our customers, we don't see much inventories at places. So people are buying as they are consuming. So it's not an inventory overhang that it takes time. We're just waiting for the market to turn around and steel production to increase, which we are still not seeing. And it'll result in immediate demand for our product.
Okay. The encouraging part is you're sounding confident, so you're going ahead and you're setting yourself up for better times, increasing your capacity by 15%. Yes. Give us a few details. Will that be adequate needle coke? Because in the past, we know that for players like you, the needle coke availability has been an issue. So with this expansion, do you think needle coke will be on board? And what will be the mix? You've said internal accruals as well as debt. Split of it?
The capex is around 650 crores, and this money is going to be spent in 2.5 years. Mostly, it would be internal accruals, and we'll take some debt as we go by. And I mean, that's about it. And it takes 2.5 years from now. It's going to be at the same location as our current plant is, and we will be very quick to set it up faster than others because we have everything in place: the environment clearance, the utilities, the power connections, everything is there. So we'll be pretty fast with that. And why we are doing it, Nigel? Because we have been upbeat and we about the prospects of electric arc furnaces. We continue to track them closely, and we can see. The electric arc furnaces are coming everywhere in the world, not only in US, but in Europe, but in Middle East. Everywhere we see electric arc furnaces coming up. It's going to take a good 3 years for us, our production to be out. And it's just marginal. It's just 15,000 tons over 100,000 tons, which we just completed.
Okay, all right. Thanks a lot, Mr. Gulati, for joining in. Wishing you all the best, but you're sounding optimistic that things improve. For the time being, the street likes what you've delivered in the past quarter itself. By the way, before we wrap up, pull up Tata Motors. Sudarshan told us earlier this morning that he believes that bulk of the bad news is in the price and the deal actually could be favorable post the recent correction. The stock now at the high point of the day. Well, we'll wrap up on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
Hello and welcome to Trading Hour live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Patakia and Reema Tendulkar. Hey guys, good morning. We've been talking about that Trump tariff statement that came by last night, and that's all we've spoken about. But right now, what we need to speak about that recovery that we're seeing in the markets. Nifty was down around 0.7% just a while back. It's down 0.4% right now. So you should watch out for that one. There's been a recovery which is underway. We are around 125 points off the lows of the day. Nifty FMCG is the one which is contributing. That index is up 1.5%. We had HUL's numbers just a while back. That stock is the top gainer. That should come up for you on the screen as well. That is supporting the gains that we are seeing on the Nifty currently. This hour itself, we have seen recovery come by. We have JSW Steel. There's Reliance Industries, which is also batting for the bulls, and some recovery in Nifty Bank as well. That is something that we should be watching out for. All these names batting it up for the bulls, and we'll have to see whether there's a bigger impact of this tariff that Trump has announced, whether we'll see more negotiations. That's all we can talk about today.
Indeed, but we've got lots of corporate conversations lined up on the show. So straight away, let's get to it. First up is Sonata Software. The company has two businesses. One is the international IT businesses, which is basically your IT services business, where the dollar revenue has gone up by 0.6%. But in constant currency terms, it is a degrowth by nearly 0.9%. And the rest is the domestic business. Samir Dheer, CEO and MD at Sonata Software, is now with us on the show. Samir, morning, and thanks for joining in. This is Reema here. So first, explain to us on the top line. In constant currency, it's still a degrowth. And when we spoke to you last time, you sort of were indicating that in Q4 things were weak because of the top client, but things were starting to turn around. So what happened exactly in Q1, and should we expect growth in Q2? How is Q3, Q4 going to shape up? Give us a guidance.
Sure. Riva, first of all, I think it's been a very interesting quarter for us. This is a quarter where we saw some significant tailwinds and also some significant headwinds. The tailwinds really came from the large deal that we announced. I think if you recall, back in April, we had announced a large deal of $73 million. So I think the deal got nearly fully ramped up in the course of the quarter. And I think in the current quarter, it'll get fully materializing. So I think that gave us a tailwind, which I think was very, very substantial and very nice. The second tailwind we got was from our continued success in our banking, financial services, and our healthcare customers. I think that really continued to grow Sonata in a positive momentum. I think that was very nice. And the third, in general, we have been making significant progress in our data and AI business. I think that has really helped us scale the business forward. So I think those are sort of three strong tailwinds in the course of the quarter. And these tailwinds are not a surprise because we made investments in these areas, large deals. We made investments in data and AI. We made investments in banking, financial services, and healthcare. So I think it's a culmination of our sustained strategy to get these tailwinds. But we also had headwinds which were compounding. First of all, the biggest headwind we got was from retail manufacturing side. Earlier you were talking about the tariff impact. So I think we saw some tariff impact come through in our retail manufacturing vertical. The clients really pulled back the spend. Some of the existing in-flight projects were stalled and decision delayed. So that really was a surprising effect because, as you know, the tariffs went in around first week of April. The cascading impact of them kept trickling in the course of the quarter. So I think that definitely had a negative impact from a retail manufacturing perspective. And second, the large tech client and one of the large banking client, very isolated cases. Those are going soft, but those are very client-specific issues, but not really an industry issue. So I think a combination of the positives that we had and the negatives we saw, which really we could not have envisaged when we talked last time, that the impact of tariff was not very visible, but now it's beginning to get visible, especially in our retail manufacturing business.
So retail manufacturing and certain isolated client-specific pauses in BFSI, correct?
BFSI and tech.
BFSI and high tech, got it. And what about Q2, Mr. Dheer? Because it appears the uncertainty still lingers on. Have you seen any sort of an improvement, or is Q2 going to be a negative growth quarter for you?
So we, as you know, we don't guide for the forward-looking quarters, but I think it's pretty much the same continuation. I think the tailwinds that we had from the three positives will continue in the quarter. The headwinds from these two items are also going to continue in the quarter. I think very difficult to quantify the net impact that will have finally on the quarter. We are still working through it. It's only nearly a month into the quarter. But I think that's where we see that the tailwinds and the headwinds will continue. We hope this tariff thing stabilizes as we move forward, and hence we can get retail back on track. But that will take at least a quarter or two before retail will come back on track after the tariff situation is stabilized, which, as you know, is very hard to predict. When this thing stabilizes, is really a $1 million question out there right now.
So you're not really seeing any improvement in Q2 versus Q1. As things stand right now, it should be similar, correct? Just to summarize.
We expect, like I said, the tailwinds and the headwinds are continuing. It's a marginal on the edges, some positive.
Got it. What about margins, Mr. Dheer? Because last time you spoke about trying to get back to 20% plus in Q1, Q2. But the international business margins are still where they are.
I think the reason, because some of the unexpected ramp downs that happen, as you know, the business is not very elastic. So when you have ramp down, the revenue goes away faster than you can take the cost out, and the cost takes time to redeploy. So some of these negative headwinds and margin are a continuation of that. So I think our aspiration, like we said before, is to get to low 20s EBITDA profile over a period of time. I think we'll continue to work on that. Once this macroeconomic uncertainty stabilizes, I think this 1 or 2% surprise that we see in the quarter will hopefully subside down. But till the time the market is unpredictable a little bit, I think we'll continue to see that volatility even in a bottom line. And it trickles really from the top line largely, because the top line goes away and then you have to manage the cost in the course of the quarter.
Okay, we'll leave the conversation here. Mr. Dheer, thank you very much for joining in. Get into a break. On the other side, the management of Punjab National Bank will join in to discuss the Q1 numbers.
Welcome back. Continuing with corporate conversations then, just as the market continues to recover from the lows of the day, Punjab National Bank is the next management on the show. The growth was strong. NIIs were up just 1% from last year, but the loan growth was below the management's guidance. Ashok Chandra, who is the MD and CEO at PNB, is joining in to discuss the quarter gone by. Mr. Chandra, good morning. Thank you for joining in. You had guided for your loan growth to be at certain levels. It's come in below the guided range, but do you believe that there is a recovery on the annual in the subsequent quarters and you would be able to meet your loan growth guidance for the full year?
Yeah, loan growth guidance we had given for 11 to 12% for the entire year for the FY 25-26. And this year, the segment-wise, if you see the growth which has happened, like MSME sector has grown at 18%. Core retail has grown at 17.7%. So there are segments where the good growth has happened, and that was the focus area for the bank also, a lot of activities which we had started. And we are also aiming that this RAM growth should grow at 16-17%, and that we are able to achieve that. So area where we have missed out is the corporate loan book, and we were conscious of the fact that whatever growth we are doing it in the corporate loan book, I think that corporate book should contribute good in the yield part now. So there are certain low yielding advances under the corporate book was there, which we have set out. And because of that, there is a muted growth in the corporate loan book. But I can give you the figure. We have 1,29,000 crore of sanctioned book, for which the documentations are also done now. And we are expecting that disbursements are going to happen in that corporate loan book also. Some disbursements have already happened, and some is going to happen in the Q2 and Q3. You know that many of the project loans which PNB is sourcing that, the lag time is there for the disbursement. Generally, the project loan, it takes one.
Yeah, got it, sir. So actually, we got your point about loan growth. The market would be a little more worried about net interest margins because one big rate cut came in June. That has yet to be absorbed. So should we expect that in Q2 also another 11 basis can go off in the NIMs?
See, we have the global NIM is 2.7%. And if you see our domestic NIM, that is 2.84%. So I'm expecting that in the Q2, I think we will be in somewhere between 2.7 to 2.8% in the domestic. And in fact, we are mindful that overseas, whatever the advances we have done, I think there we are facing some the stress in the margin front. So there we are going to look forward and see that how much adjustments we can do that. But definitely, I think between 2.7 to 2.8, we will be holding on in the Q2 also.
No, in the domestic, but
in the
overall,
domestic and overall also, because we have made some adjustment in the cost of deposit also. The deposits are also repriced now, and that impact also will start seeing in this quarter also. If you see my cost of deposit, some 3 basis point it has come down, and that was only 1 month impact. So I think in this quarter, the full impact will be there for the 3 months now. So I'm hopeful that 2.7 to 2.8, definitely I should be in a position to hold on this.
Okay, so 2.7 is the lowest in terms of global NIMs. Okay, that's good to hear, sir. You know, your credit cost is, I mean, you should get a trophy for it. It is the lowest in the industry, I would think. 14 basis points of credit cost. It can't go lower, no? Should we accept that?
Yes.
That it can inch up a bit this quarter?
No, I think the guidance also which we have given 0.5%, and definitely we are well below that, and we will continue to hold on. The advantage is that since our PCR is 96%, and even the tangible PCR, excluding that technical write-off, that is also around 90% plus now. So today, whatever recovery we are doing it is adding to my write back of provision or going directly to the operating profit if it is recovered in the technical write-off. So that is one advantage is there for us. And despite having challenges in the Q1, we have made the recovery of 3,300 crore. So if you calculate 90% the write back of provision, I think a good write back is happening in the system now. So that is giving.
What is the recoveries guidance for the year?
We have given the guidance of 16,000 crore in the entire year. And this quarter itself, 3,300 crore we have recovered. There was one big account was to be recovered in the Q1, which has happened in the July month now. That is a big recovery that has happened. So definitely that benefit will come in the Q2 now.
Okay. Do you want to explain? I mean, I think all of us have understood that you have taken a 3,300 crore rupee hit as a one-time tax hit. But can you want to briefly explain that to the viewers?
Yeah, absolutely, madam. I think this is a very right point and right opportunity for me to explain the things. See, old tax to new tax regime, we thought that this is the right time because whatever the benefit which we were supposed to get out of the MAT, as on 31st March 25, we have exhausted everything. And this is the right time for us to move from old tax to new tax regime. So when we decided, and board also decided and gave the permission to go for that, then we thought that let us do it in the first quarter itself, because whenever we do that, that has to happen in the first quarter itself. So the DTA recalculation has happened because earlier the DTA calculation was at 34.94%. And when we are doing that new tax regime, this is at 25.16%. So that difference of that calculation has made a hit of 3,324 crore as a one-time provision for the income tax. And if you add that 3,324 plus this year at 25.16% tax, it comes to 1,750. Both, if you add, it comes to 5,083 crore as the tax outgo in this particular quarter. So if you see my PBT, it is very good. It is 6,758 crore. So I'm expecting that after migrating to the new tax regime, there will be a benefit of 10% in the operating, the net profit out of this operating profit. And going forward, I think 7,000 crore plus will be our operating profit. So Q2 onwards, straight away, we are going to have a benefit of around 700 crore in the net profit just because migrating to the new tax regime. So I think that is the comfort I want to give to all the stakeholders.
Sir.
Yeah,
got that, sir.
And with that, one more point, 16 basis point ROA is going to improve with migration to the new tax regime.
That's big. That's big. Actually, the adjusted ROA is 1%, although unadjusted, it would look like 0.3. That's only because of the tax one-time hit. A final question, sir, on this SMA2. A bit worrying, I mean, compared to Q4, SMA2 numbers have risen. I mean, for those of you who don't care for this abbreviation, it means those loans which are over 60 days past their due date. You know, that's always a worry because they can slip into NPA. Should we worry that the 14 basis credit cost will now have to increase to probably 20 or 25 because of this SMA loan being high?
Madam, if you see our slippages ratio for this quarter and if I extrapolate for the entire year, it comes to 0.71%. And I can give the comfort that 100 crore and above, none of the loan book is under stress now. Even SMA0 also, none of the corporate book is there under that SMA0. So absolutely nothing to worry about it. In that, this year also, this quarter, 1,800 crore which has slipped, mainly it has happened in the MSME segment, that is around 964 crore. And retail, it is 400 crore and agri, it is 300 crore. So all put together, nothing has slipped in the corporate loan book. And we are going to hold on to this figure quarter to quarter. Our slippages in every quarter, we are expecting it should not cross more than 1,800 to 1,900 crore.
Okay.
So absolutely, there is no challenge as far as the fresh slippages is concerned.
Okay, got that. Actually, sir, we have lots more questions, but your results have come on a day when it is very busy both for the macro economy and for the results. But thank you very much indeed for clarifying some of the doubts that investors may have. Okay. Over to you, sir.
All right, Lata, thank you for taking us through that conversation, and thank you to the management of PNB as well. With that, we'll take a break. But before that, let's cut across to the HUL presser. We have commentary coming in from the management.
In this quarter results, it's in exactly the same shape as we would have expected it, and we are very committed as a company to continuously stay on that path of investing for the future, and because we know that it's generating results. So I feel it's about the right time. We have a very good, ready successor. Priya is another homegrown talent like me. She has spent more than a quarter century in the company. She's been on the management committee for 7 years, on the Unilever executive for 4 years. She's headed big global businesses, B&W or Beauty and Wellbeing. You know that 2 years ago, I split the division and made B&W a specific division because that's really a driver of value growth. So she's also therefore absolutely well casted to drive that forward. And, our talent bench is seamless, whether it be functions or in the general management. We always are grooming people. And she was ready, and I was ready, and therefore we've taken the decision. So it's a well-considered, deliberated, thoughtful decision. Both of us are lifers in a sense of this company. and I'm cheering for her and the company, and I'm feeling pretty good about charting my next path, and also feeling good that Priya's in charge.
Right. And Mr. Tiwari, but we've also heard that you are probably also going to be moving on to a global role going forward. Also, if you could tell us, is that happening? What is the plan there?
Yeah. As you see, I continue to be CFO of Hindustan Unilever, and if and when there's any announcement to be done, we will inform. For now, I'm very clearly focused on my key priorities. Number one is to drive the growth of the business and to support Priya as she lands in the business as a new CEO.
Ritesh and Rohit, both of you, congratulations. I think, we were discussing earlier also that HUL is the only counter that's keeping the Nifty in check today, and that's reflected in the results as well. Just want to get a sense on the volume growth, because this quarter there's been volume recovery and it's a good quarter per se. You're saying that, the price growth going forward is going to be in, the single digits. So do you think that volume growth from now will be better than what you've done this quarter, because there are clear signs of rural picking up? There are FMCG companies that have gone ahead and said that there are urban green shoots that also are being seen. So volume growth, can we expect that to be in high single digits going forward?
See, overall, as I mentioned, that over the last almost 12 months' time, it's a stable atmosphere where we've seen improvement over the last few years, and especially last 12 months' time, and that consumption climates remain stable. We are seeing some uptick in last 3 months' time. More, of course, we have to understand that. Rural continues to be encouraging. So all the economical factors which are supporting growth are present. We expect the improvement to be sustained. And overall, if I talk about growth of Hindustan Unilever, since the outlook for pricing is low single digit, commodities are range bound, so the growth will be volume led. And we are always very clear that when we drive growth, growth has to be competitive, which means growth ahead of the market. We spoke in the current results that the growth has been competitive. We gained turnover basis market share, not only in last 12 months time, but also in last 5 years time. And that's a pretty strong performance, and that remains the focus for us. So expect sustained gradual recovery, and we have to ensure that as HUL we keep growing ahead of the market and keep gaining share.
And if I may, just so what Ritesh spoke about is the macro, right? And we said that last time also, that we expected macro, all the actions taken by the government, and with inflation being so, at 2% levels, we are investing for that macro, right? And we were investing ahead of the curve. There are also strongly internal factors. We are driving the growth by allocating resources to our future core and market makers portfolio, and to future growth channels. So we see us doing quite well in those spaces. So, and that's a large part of our business now. And increasingly every quarter, as that proportion gets bigger, the growth of our total average growth will start to become even more, I would say, easier, because we'll be in the faster growth spaces. So it's not a one quarter thing. So we're very happy with this quarter results, right? But there'd be good quarters, bad quarters, average quarters. We will stay on this path. And it's the strategic consistency, the long-term nature of this game you should expect from HUL, because we are fighting for the big future where every category that we operate in is a low per capitas. All categories are premiumizing. People are improving their quality of life. So we are betting on a prosperous, developed India, not just only for short term. So I'm just appealing all of you to sort of look at the long-term opportunity in this market that remains extremely exciting. Probably the only market of this scale in the world that will continue to be of this attraction for many, many years going forwards.
Just follow up on the leadership change that you were talking about. You've known Priya for quite a while now. Just want to get a sense that is there going to be some change in terms of how strategy will be adopted by her? Because leadership could be different for different people. Any kind of color there? If there are early signs of picking up there.
So I think let me just take that question. So look, the strategy is about moving our business to faster growth spaces and faster growth channels, benefits, brands, segments, channels. So, I mean, it's very obvious, fact that you should basically go where growth is. So I don't think that's going to change. The color and shape of the specific nuances, they have to be in line with the changing conditions. So we should never call strategy as it's not a fixed thing. It's evolutionary. But the broad direction of competitive volume-led growth is what we're going for. As you said, price growth will be lower than, say, in the past. We're going for growing in the faster growth channels and benefit segments. We are about increasing the premiumization of our portfolio. That is continuously increasing. In fact, the last 2 years that I've been in this role itself, we have moved our portfolio by almost 5% more towards future current market makers. And that just shows you the direction of travel. And I'm quite certain that's going to remain Priya's focus. Specifics of all of this will have to be customized to the conditions she will find herself in the quarters in the years to come.
रोहित सर, मेरा सवाल आपसे है 37 ईयर आपने HUL को दिया और
HUL ने भी मुझे दिया 37
अभी फिलहाल अभी करंट सिनेरियो में जो प्रोडक्ट पोर्टफोलियो है वो किस सेगमेंट या कैटेगरी की सबसे अधिक डिमांड है? अगर आपको पिक करना हो, कौन सा वो प्रोडक्ट है जिसने HUL को एक नई पहचान दी?
पहली बात तो हम यहाँ पे 91 साल से ज़्यादा हैं हिंदुस्तान में, तो नई पहचान, हमारी पहचान हर साल और बढ़ती है। और दूसरी बात ये है कि ये पहला क्वार्टर है काफ़ी क्वार्टर्स के बाद जहाँ हमारे सारे बिजनेसेस ब्रॉड बेस्ड ग्रो किए हैं, वॉल्यूम और वैल्यू कंपेरेटिवली ग्रो किए हैं। हर ब्रांड नहीं ग्रो किया, बट चारों बिजनेसेस जो हैं हेल्दी हैं और ग्रो किए हैं, और वही हम चाहते हैं कि हर क्वार्टर में ऐसा ही होता रहे। और हमारी जो बड़े कैटेगरीज हैं, स्किन क्लेंजिंग है, चाय है, हेयर है, लॉन्ड्री है, वो भी जो है सारे के सारे ग्रो की। इसीलिए जो है कंपनी का ग्रोथ जो है वो अच्छा हुआ इस क्वार्टर। वही हम चाहते हैं कि हमारे सारे बिजनेसेस एक साथ डिलीवर करें। एक ब्रांड या एक बिजनेस से ये इतनी बड़ी 65,000 करोड़ की कंपनी नहीं चल सकती। All 4 engines have to go fast for the whole jumbo jet to keep flying it to greater heights.
सर, ग्रामीण इलाकों में आप
Just a second, if I could, Bharat, just a follow-up on that. Wanted to get a sense on 2 things. First, on the margin, and second, on oral care. Let's start by talking about margins. Because last quarter when we were here, there was a slight downtick in your guidance, but this time around that's been maintained between 22 to 23%. Are we looking more confident on the margin fronts going ahead? And second, on oral care, while you've seen mid-single digit growth here, a competitor in this space recently has not given.
All right, that's the commentary coming in from HUL. The stock is top gainer on Nifty today. But with that, we'll slip into a short break. A reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access. Our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Let's now put the spotlight on the top movers in the market at this hour. Hormis has moved over to the big wall. Hormis?
Well, result reactions, tariff reactions, all of them coming together in today's session. So we'll combine all of them and address some of these movers today. Pearl Global, one of the many textile companies that have faced a negative reaction in today's session, now almost 8% lower. And interestingly, the stock was up 7% yesterday and another 2% the day before. So it's given up gains of the last two trading sessions. The stock has also declined on heavy volumes as well. 50% of its top line comes from the US market, and already 2 lakh shares have traded at this time of the day compared to its 20-day average of just 22,000 shares. The result reaction is Greenpanel Industries, and at one point the stock was down 10%. We've seen a slight recovery from the lows of the day. The stock has already declined in 3 out of the last 4 trading sessions, and 5 lakh shares have already changed hands by this time, the first couple of hours of trade, compared to a 20-day average of 1.7 lakh. Greaves Cotton is the other one. The stock reported results yesterday, was up yesterday and is building onto those gains now, 15% higher on the stock. Third day of gains on a consecutive basis. 2.5 crore shares have already changed hands for Greaves Cotton, and a 20-day average is just close to 6 lakh. But despite this move, the stock is still down 15% year to date, which might just turn out to be the first negative year the stock has had after 2020. And the other earnings reaction is Navin Fluorine. The stock is up almost 70% now this year, and this is turning out to be the first positive year for Navin Fluorine after 3 back-to-back negative years. And this is the 4th day of gains as well for the stock on the back of very strong volumes. 6 lakh shares have changed hands so far compared to a 20-day average of just 40,000 shares.
Okay, all right. Interesting names there. And while we are seeing those buzzing names, Nifty has recovered 170 points from the lows of the day. So just watch out for that one. There's a sharp surge from the lows. But with that, we'll slip into a short break now. When we come back, we bring you excerpts from our conversation with Infosys CEO and MD Salil Parekh. Welcome back. In an exclusive conversation with CNBC TV18, Infosys CEO and MD Salil Parekh laid the roadmap for how the tech giant plans to navigate the future and readapt to the AI challenge. Listen in.
A lot of clients are selecting Infosys as they go through consolidation decisions. So all of that gave us a good traction and gave us the growth with which we increased our growth guidance for the full year. In terms of recruitment, we had a strong recruitment in the first quarter, over 17,000 employees, both lateral and from colleges. And our plan for the full year is to recruit 20,000 college graduates, and that continues. We have always have a view onto what type of acquisitions we want to look at, and AI is very much into that strategic domain where we will continue to look. We've then made several investments in reskilling all of our people. So about 275,000 people have been reskilled within Infosys into different levels of AI.
Look at the recovery that the index has made from the opening lows, now just 40 points lower on the Nifty, on the verge of turning positive now on the monthly expiry day. You pull up the contributors chart and it will give you an idea of which are those names that are pulling the index higher. It's an almost 170 point recovery from the intraday lows, and the good part is that we have not broken below the recent swing low, which was 24,598, is from where we reversed, and even today's intraday low is higher than those levels. Of course, HUL leading the pack, ITC reporting results tomorrow, that too in tandem with HUL is contributing to the moves as well, and Reliance Industries also looking to recover from the lows of the day. Take a short break. On the other side, we get discussing with all things commodities. Manisha joins in on the other side.
Welcome back. Let's turn our attention now to the commodity markets. Manisha is now joining in and she's got her eye on metals. Manisha.
Well, it's all about tariffs, really, and that's what's impacting the metal as a sector as well. If you look at the copper prices, especially in the US, we've seen 18 to 20% of a decline at one point in time in the New York session yesterday. This is after there's more clarity emerging on when the tariffs of 50% on copper take effect on 1st of August, what really are going to be the details here. So the understanding says that the refined copper imports into US are going to be excluded from this list. And refined copper clearly is the most important part of it all, because nearly 50% of what US needs is an imported number in sense of refined copper, and that has been excluded, and that's what's taken the prices sharply on the lower side. In the last 4 or 5 months, we've seen a lot of copper being imported into US. It has been trading on a premium to LME. All of that also cleared off in the overnight markets there. One sharp red candle and a very sharp decline in the copper prices. So much so that this is the biggest one-day decline that we have seen come in for copper there. Also, tariffs will be reviewed in July 2026, but until then, this is how it stays. And it's not just about copper, which also, by the way, has seen a decline in China and the London markets there. But the gold prices, after declining 1% overnight, are now trading at a one-month lows below $3,300 an ounce, a level that it has been holding for the last 3 months now. Silver fell 2% overnight. That one is trading at a 3-week lows. Platinum prices are down by 5% overnight. That is holding at a 4-week lows in the markets right now. Well, the US has kept interest rates unchanged in the US Fed meeting. That was on expected lines. But the US putting 25% tariffs on India, may not, India being one of the largest or the biggest growing countries right now. And that number also seems to be impacting metal prices within the Asian countries there. The other factor that's impacting is the dollar index, which is trading at a one-month highs, inching very close to that 100 level mark, is what is weighing on many of these dollar-denominated commodities.
All right, Manisha, thank you so much for joining in with all those updates. So with that, we'll slip into another break. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.
Welcome back. Back above 24,800 on the Nifty. The recovery continues from the lows of the day. The broader markets too are looking to stage a bit of a rebound. The Midcap index still down 500 points, but is recovering from the lows, led by the banking names HUL and ITC. We take your leave on this edition of Trading Hour. From Rima, Sonal and me, thank you for watching. Halftime report on the other side.
Stocks recover after a lower start. The markets take concerns of a high tariff fallout on businesses in its stride and hopes for a trade deal soon. Realty and energy are the big drags, while FMCG sees some green.
Jio Financial Services will make a preferential issue to promoters of over rupees 15,800 crores that will see them up their stake to 51% post the issue of equity capital. The stock perks up on this news.
Tata Motors is set to buy Italian CV maker Iveco for 3.8 billion euros to gain access to key technologies and build a presence in Europe and South America. The move precedes the demerger of Tata Motors CV business.
Infosys CEO Salil Parekh tells CNBC TV18 there will be no layoffs and the company is on track to hire 20,000 graduates in FY26, and he also sees AI expanding the market for IT services and expects large deals soon.
US President Donald Trump says the US will levy a 25% tariff on India along with a penalty for using Russian crude, even as he calls India a friend and holds out the possibility of a deal soon. Experts believe a trade pact is still in play.
Hello, good afternoon and welcome to Halftime Report on CNBC TV18. You've tuned into CNBC TV18. We're coming from the Motilal Oswal CNBC TV18 studios. I'm Vinny Motiwala. With me is Ekta Batra as well. Ekta, good afternoon, and surely a good afternoon that's shaping up. I should run away from the morning given that the fall that we're seeing, but a good recovery in the markets. And I think a lot of earnings that were reported as well yesterday, we're seeing a good move coming in, right? Whether you look at HEG, gains, Sagility, managing to hold on to gains, recovery coming in the markets. That worry of 25% tariff surely is there, but that's something we'll be watching out for.
Hi, Vinny. Yes, absolutely. You know, the markets are still a little under pressure, you'd have to say, for the mid-cap or the broader markets, at least at this point in time. So there is definitely some amount of uncertainty with regards to what the future could hold in terms of the impact on businesses with regards to a 25% tariff, whether or not there will be a trade deal going forward, and, what the trajectory of a couple of these sectors would look like in terms of earnings. But nonetheless, it is the Nifty levels of around 24,598 which we would be watching out for. So that would be a crucial level to watch out for in terms of the intraday low that we could expect. And of course, it is FNO expiry, so that's the other key to watch out for. Separately, earnings today, we do have around 6 Nifty companies which will be reporting their numbers. HUL has already come out with its numbers, but separately we have Sun Pharma, Maruti, Coal India, all of these companies which will be reporting their numbers. So we have a lot to watch out for in terms of stock-specific cues today. But on to the big story then. United States announced 25% tariffs on imports from India and an unspecified penalty, quote-unquote, over India's purchases of Russian weapons and energy. Let's go across to Hormuz. He has the list of stocks and sectors that are likely to be impacted.
Well, US President Donald Trump's announcements of a 25% tariff last evening on India, along with these unspecified penalties, has come as a surprise to many who were hopeful that a trade deal would be signed before the 1st of August deadline, while some were hopeful of a lower tariff rate in case the talks do prolong. Now, this has now put almost all of India's export-oriented sectors in the spotlight. Now, take a look at these sectors that may be impacted. Auto component makers, shrimp feed exporters, industrials and consumer electricals, now gems and jewelry, textile stocks, mobile and electronics, and all of these sectors now are in the spotlight. Now, let's break it down sector-wise for you, and starting with the auto components first. Now, Nuvama believes that the tariffs on CV and other components, which was currently 10%, will now increase to 25%, and that will have negative ramifications for stocks like Bharat Forge, Ramkrishna Forgings, and Balkrishna Industries, which has a significant export exposure as well. And the negative ramifications also will be because of the demand falling and costs rising. Now, textile appears to be the most impacted here, as this list of companies from Gokaldas Exports to Wellspun Living, Pearl Global, Indocount Industries, all of these companies have exposure of anywhere between 50 to 70% of their overall top line coming from the US market. Unsurprisingly, these stocks are down anywhere between 6 to 10% in today's trading session. Now, Elara believes that this will have a limited impact on the cables and wires segment, and most of these companies only have a 2 to 5% exposure to the US market. However, within the industrials basket, Elara has signaled out APAR Industries as one that could see an impact, as it has a 15 to 20% exposure to the US market. The other one in this list is KC International, but its exposure to the US is through its subsidiary, and that to a small number, that is 5%. Now, India's capital goods companies are also in the line of fire, where Cummins is 12 to 15% exposure to the US is mostly to its parent company, Cummins Inc., while MTAR Tech has 62% of its overall top line from the clean energy business, which has a US-based company as a major client. Now, most of the EMS companies of India like Dixon, Amber, they don't have any significant exposure to the US. Keynes Tech also has only a 2 to 3% exposure, and on expected lines, Keynes is moving higher today, also reacting to results, of course, but Dixon and Amber have not seen a heavy fall either. Now, within the turbine companies, Elara has singled out two names: Azad Engineering, where 23% of its FY25 revenues came from the US, while for Honeywell Automation, the US market brought about 8 to 9% of the overall top line. Now, gems and jewelry is another sector that is impacted here. In a statement issued last evening, the GJEPC said that the Indian gems and jewelry sector in particular stands to be severely impacted, and that nearly 30% of industry's total global trade comes from the US. It's also said that the blanket tariff of such magnitude will inflate costs, delay shipments, and distort pricing. Well, it's been a resilient reaction by the market so far, but the affected sectors are certainly taking it on the chin. We'd only hope that a deal is signed soon and more clarity emerges on what the future entails.
Absolutely, Hormas. Thank you so much for that. Important sectors and stocks to keep an eye out on. It's 25% tariff and what's actually going to be happening there. But on that note, we're going to slip into a very short break, and a reminder for our viewers: unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18. Access our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and master classes, and curated lifestyle benefits.
Welcome back. Well, for the markets, we have the Nifty, which is down around 61 odd points. Just want to point out Orchid Pharma. That stock is up around 5 odd % today. And the news is that they've bought back rights to an antibiotic that they themselves had discovered many years ago to the company that they had outlicensed it to, Allecra. So interesting news coming in there. As you can see, the stock is locked in upper circuit, doing well in today's trading session. But let's talk about numbers then. Indigo's Q1 earnings missed street expectations with muted revenue growth and a decline in profit. We did speak to Peter Ebers, who's the CEO of Indigo, to discuss what the impact was of the quarter gone by and what's the outlook here on. Listen.
After that positive start in the first 2 weeks, we have seen quite some adverse events for the industry. Clearly, it was the Pahalgam attack, then Operation Sindoor, then airspace closures, then more airspace closures, and then obviously the tragic AI 171. And despite all these elements, the market has still grown, and Indigo indeed has been able to grow even more. So I think it shows a lot about the resilience of the Indian market. The start of July is on a positive note. We can call it normalization of what's happening. Traditionally, Q2 is a somewhat softer demand and has a somewhat softer demand as Q1 and even as Q3. But clearly, we see a normalization and we see demand coming back. Despite these circumstances and some of the adverse scenarios unfolding in this quarter, still there was a growth in the market, and we see that actually continuing in Q2, and we're optimistic on the further normalization and further growth in Q3 and Q4 of this year. The fact that we have a capacity guidance, which we gave at the beginning of this year, and we maintain our capacity guidance for the full year. We have a planning for the second quarter in terms of capacity, which is still a growth compared to last year, but a growth less significant as we see in Q1 and Q3 and Q4. A young fleet translates into an efficient fleet, and with that we are one of the leading operators in the world when it comes to fuel efficiency. Secondly, we had a couple of damp leases in previous quarters, which we have not operated in the last quarter, and we will also not operate those in the second quarter for two reasons really. One is we see a reduction of the AOG situation, the number of planes on the ground. That situation today is markedly better than it was at the same point last year. And secondly, clearly we adjust our capacity based on seasonality in the market. So with that, we do expect to continue to benefit from that fuel environment also for the quarter ahead.
Okay, that was the management of Interglobe Aviation. Just a quick point, I'll just make the flashes at the bottom of your screen. The sources are saying that there is no immediate impact of 25% tariffs on smartphones, laptops, exports from India to the US. The US had provided tariff exemption on these equipments, and this is for a period of 90 days. That is till the 14th of August. And that's when the review meeting will be held for that section 232 under which that exemptions are there. 14th of August, that's where this will be reviewed. Currently, obviously, there's no immediate impact of this coming in here. So that's something that we'll be keeping an eye out on. But, keeping it going with the earnings as well, then we have SIS that have reported their numbers as well. Overall, it looks like an inline set of numbers that came in from the company. But exciting is that the revenue growth, now that's back to the double-digit mark. The margins have come in stable as well. To talk to us about the outlook of the company, we have Dheeraj Singh, CEO of SIS, joining us right now. Mr. Singh, good afternoon. Thank you so much for joining us on the show. Let's start by talking about that revenue growth number, right? Y'all have spoken in the past as well that you all do want to achieve that double-digit growth. FY26 has started on that good note. Do you see this continuing through the rest of the years? Because last couple of years was high single-digit is what you all managed.
Correct. And our aspiration is not just to be in double-digit, but to be in the mid-teens. So we have given the guidance of around 14-15%. And we are near that. We are up almost 14% year-on-year basis. We see the trend continuing for the next few quarters. Our run rate for June, for the first time, it has crossed more than 1,200 crores. And Security India is more than 500 crores run rate. Security International is more than 500 crores. Facility Management is more than 200 crores. These are all-time highs. And on just this run rate basis, we are confident that we should end the year at about 14.5, 15,000 crore and in line with our aspirations.
Okay, all right. What about margins? If you could just give us a little more details in terms of margins, because we understand that in FY25 you did manage to weed out a lot of the low margin contracts which had impacted your business. So now what are we expecting in terms of margins? Because if I do look at your trajectory, it's actually a multi-quarter low in terms of margins.
If you look at the EBITDA growth from on a year-on-year basis, because our business does have seasonality impact. The first quarter, there are a lot of churn in the contracts. There's a lot of SG&A impact with the annual increments, etc. So on a year-on-year basis, we've grown about 10% on the EBITDA in absolute rupee terms. India, in terms of margin percentage, security has held ground, and it's now around that 5.4, 5.5%. We are very happy that our facility management business, which we had been saying is on the upward trend on the margin percentage. It's now almost 4.8%, which was about 4% a year ago. So both the India businesses are doing well on the margin percentage, and we see this improving definitely on the facility management side for the next few quarters. International has definitely come under pressure this quarter on the margin percentage, but if you look on the normalized basis compared to last year, it is a slight improvement. What has hit the international business margin are the grants that had come in the last quarter in the Singapore business, the government grants. Those have not come. We had won a lot of the contracts in the defense sector in the last quarter, which have started in this quarter, and there are a lot of setup costs which have depressed the margin. And lastly, in one of our businesses in Australia, SXP, we have restructured the entire management team, which involved a one-time cost in this quarter.
Okay, so these were the impacts that came in on the international business in Q1, but from Q2 onwards, could we expect it to come back to those normal levels, especially in terms of margins also around that 4% mark and growth also that we are watching out for from the international business? Also, talk to us about the Australia side of the business as well.
The growth in the revenue side for international business is very robust. As we mentioned, last year was the highest ever new revenue, new sales that we had booked of more than 100 million Aussie dollars. A lot of that will now get translated in this year in terms of actual revenue. And so the revenue for the next few quarters will remain very strong. We are working very actively on the margin side to bring it back towards the 4% plus.
Okay. Tell us a little more about the facility management business. How many contracts did you manage winning this quarter? How much are they worth? And from which sectors?
So facility management, we got more than 25 crores of new contracts per month billing and in the quarter. And they have been across all sectors. We have seen very strong growth in the manufacturing, in the healthcare side, in the logistics side. So facility management continues to be working across all sectors quite actively.
Okay. And just a quick word in terms of your current status for the DRHP that was filed by the company for SIS and Prosegur. This was filed somewhere around in March. So any update there, listing plans, what is it? Anything that you could highlight?
Yeah, so the good news is that just 2-3 days ago, we got the approval for go ahead from the BSE and the SEBI. So now we are, our clock is ticking for the 12 months window, during which time we'll have to list.
Okay. Thank you so much, for joining us on the show, giving us insights, and obviously we'll be waiting out for that listing that will be coming in as well. But on that note, we're going to slip into a very short break, and here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens. Welcome back to Halftime Report on CNBC TV18. Let's pull up what the market is doing right now. We are seeing a sharp recovery that's coming for the Nifty bank as well. Sensex is up more than 800 points from the day's lowest point. Look at the Nifty inching toward that green, right? It's almost there. Nifty bank is just flip-flopping between the green as well. It was a slight bit of a green that we're watching out for, but a sharp recovery that we're seeing coming in from the markets. Nifty has reclaimed the 24,800 level. And let's not forget a lot of movers that have come in for the Nifty 50. You have HUL, you have Eternal, Axis Bank. That is something that in the last 20 minutes has seen a bit of a gain coming in. And top gainers, obviously, Jio Financial Services, HUL today, managing to pull up some bit of that market.
Yes, absolutely. And I think, the recovery is also coming into the broader markets because that was really taking the brunt. So the mid-cap index, when we started the show, was down close to 1%. And now that's recovered to around a 0.7% cut at this point in time. The advanced decline ratio should probably also come up for you because as of now, it stands at around 1,600 stocks advancing to around 2,300 stocks declining. So let's see whether that ratio narrows or not. Coming back to the Bank Nifty, we have the likes of Kotak, which is seeing buying from the lows. As you can see, there is some amount of a gap, which is less than before, at least for the advanced decline ratio. In terms of the Bank Nifty constituents, we have Kotak Mahindra Bank, Axis, IDFC First Bank, ICICI Bank, Bank of Baroda. All of these stocks which are currently trading in the green. On the downside, it's PNB, which is reacting to its numbers. So separately, we have HDFC Bank, which is recovered from the lows. So that too is probably just about going to push into the green anytime soon. And State Bank of India as well, just about lower by around 0.13%. So overall, pushing our way through to probably recover and, push through to the green for the Nifty, which is just about lower by around 23 odd points. That's what's taking place in terms of the markets. We seem to be shrugging off those tariff concerns at this point in time. Maybe there could be a trade deal that we could probably be anticipating or hoping for. But Vivek now joins in. He has a more comprehensive list of all of the stocks which are buzzing at this point in time. Vivek, over to you.
Well, thank you so much for that. Given the fact that what we've actually seen, especially in the last half hour, has been a significant recovery. And like you mentioned, the advanced decline ratio from a large divergence now converging towards one another. What are the key stocks today that are worth looking at? HUL, results came in early morning. Actually saw good commentary coming in, especially as far as margin recovery was concerned, on the back of that higher by 3.5% today is HUL. Navin Fluorine, now this particular stock from the broad end of the market, saw a good beat as far as the estimates were concerned. Pricing action as well as operating leverage play out. That stock higher by over 3% today. Jio Financial Services, a large fundraise in a warrant issue. Most likely promoter would be hiking stake. That stock, the top Nifty gainer today. HEG, and along with that, some of the other names like Graphite India, very strong Q1. Company spoke to us earlier today. They're talking about price hikes. That stock high by over 12.5%. And the entire EMS space has recovered quite sharply. Keynes within that particular space, good set of numbers. Along with that, the company has maintained their revenue guidance. Remember, it's a sharp revenue uptick that they anticipate for FY26 of almost 60%. That stock, the broad end of the markets, up almost 10%. Quite a few laggards as well. Top amongst the list being Hindustan Copper. Remember, today is the last day. That particular stock will be in the FNO space. Copper prices yesterday fell significantly, almost saw a 20% downtick, so that stock lower. Indus Tower, while the numbers were largely in line, there is a lack of visibility as far as dividend payouts are concerned, and that has spooked the street. You're talking about CSE, the numbers largely in line came came post-market as yesterday, but the Malecon Discom loss is something that have expanded. That is something that the street doesn't like. CAMS, now this particular stock, just going into the results had corrected quite sharply. And today, the results were a significant miss. That stock has seen quite a few multiples as far as valuations are concerned, getting cut almost 4% lower. And Apar Industries, now this particular stock, remember, the company actually has quite a large amount of exports to the US market as far as conductors are concerned, 6% lower, the top NSE 500 laggard today.
Okay, Vivek, thank you so much for that. Important stocks to watch out for. A lot of movers on the back of their earnings. But let's go across to Nigel, who's here to tell us what's happening this afternoon in the world of FNO, given that we're seeing that slight bit of a green come in and the recovery from the day's lowest point has been quite good. Nigel, over to you. Now, what are we keeping an eye out on?
Well, Vinny, at the start of Chartbusters, what did I say? Don't roll out a recovery today, right? That's the way we started Chartbusters. And given that it's expiry day, it makes things even more interesting. And in Bazar itself, in our chat in the morning when we had highlighted all the FNO cues, we suggested that maybe, in fact, the markets were prepared. They were sniffing that there's going to be some bad news on the tariff front. The rupee was very, very weak. That was one indicator. You have shorts that are loaded in the system from the FIs. And the last 1 month or so, the Nifty actually has underperformed. And the July series, we're going to be going on probably towards the lower end of the range. So that's telling you the markets were sniffing that, in fact, there could be some possible bad news. Now, the India VIX was surging away earlier this morning. If we look at it, well, that's come off a little bit from the top. And just take a look at the Nifty. Big recovery is what we are seeing. And when the Nifty recovers, both the pillars of the market need to hold its ground. So you have the Nifty Bank that's now moving towards the 50 DMA if you look at the intraday chart out there. And the tech index that's under pressure earlier today, that's recovered more than 1% from the low point of the day. So tech as well is making a bit of a fight back. Moving to the options data then, the 24,700 put, there's a mix of activity out there because the premium up there is only around 10 rupees. It was around 15 rupees at the start of today. So there is a bit of a punt that's taken in case we do see a slide yet again because this is an intraday recovery and we have expiry that will play out today. The 24,750 put as well, premium in that vicinity of around 18 to around 20 rupees. So there's mix of activity being seen out there. But on the upside, the 24,800 call, the premium's down from around 100 rupees, it's come down to around 60 rupees. That's an important strike. And just looking at the options data and the recent highs and lows that you're looking at, the 24,925 to around 24,950, those are the levels that in fact the bears believe they can defend for today's trading session because those contracts will expire in the next few hours by around 3:30 p.m. today. So that's where the resistance comes in at. Support levels will be today's low, which is at around 24,635. And, a low that we had a couple of sessions ago, which was 24,600. So you don't want that level to get breached on the downside. That's the low that we've seen for the series. Stocks that I'm looking at, there is some long addition that we are seeing on RBL Bank. Remember, just come out of the FNO ban. That's moving higher on good volumes, up close to 2.5% the last time I checked, with big surge in open interest. And on the flip side, you also have Aditya Birla Capital that's seeing a bit of a short covering bounce. So the Nifty on the whole has seen a good bounce. You'll watch for that mark of around 24,925. If the bulls can get past that, then you can clearly see a big short covering bounce on the upside. But as of now, it appears that that is where the crucial resistance does come in at. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on the FNO space. Just want to point out for the BSE IT index, there's been a recovery of around 280 odd points from the day's low. So that's the kind of intraday spike that we've seen in terms of IT stocks at this point in time as well. The Bank Nifty just about 60 points lower, so just about lower by around 0.1%. We'll take a short break. We'll get you more on the markets, a lot of stock-specific action once we're back. Stay tuned. Welcome back. Well, for the markets, like we mentioned, has recovered. So we have the Nifty, which is now in the green, up around 15 odd points. The Nifty at around 24,870. The Midcap index also is now incrementally seeing buying from the lows, so is just about lower by around 0.5%. The Bank Nifty, one of the key constituents for the entire Nifty moving into the green this afternoon, is now up around 90 odd points, so up around 0.15%. Overall, the texture of the market is looking much better. Seems as though the street is just about shrugging off the concerns with regards to what could take place on the tariffs. Maybe there could be some hope that the tariff amount would probably not go through in what is stated at this point in time. The advance decline ratio currently standing at around 1,664 stocks advancing to around 2,300 stocks declining at this point in time. Overall, markets looking good. The Nifty Pharma Index as well as a couple of other indices such as the oil and gas index. Two of these indices were in the red. So let's see whether there's any kind of incremental recovery which takes place in both of these indices.
Absolutely, will be important to watch out for in terms of whether this recovery is something that is going to be sustaining. But, you know, let's pull up some of these EMS player names as well, whether it's Dixon Technologies, Amber Enterprises, Keynes Technologies. Why are all these in focus today? Specifically also, just a short while ago, we had an important update that came in from sources saying that there was no immediate impact on this 25% tariff on smartphone, laptop exports, as well as this is from India to the US. So there's no impact of that. There's an exemption that was there for the 90-day period till 14th of August, and that's when this will be picked up and reviewed again. Now, after this, we have seen a recovery that has come in for all these stocks. So can Dixon Tech also, sharp recovery, and obviously with the market, we're seeing a recovery as well. But Keynes Technology, let's put the spotlight on that. Today, it's running away in trade, and this is, you know, after the management had reported their numbers, mixed set of numbers that came in Q1. Now, we're joined by Jairam Sampath, the whole-time director, as well as the CFO of the company right now, to talk to us about the outlook, what should we be watching out for as well. Mr. Sampath, good afternoon. Thank you so much for giving us your time this afternoon. Let's start with, obviously, you have the latest update that's coming in terms of tariffs, but your exposure is not much, I believe. It's only 2-3%, right, overall, in terms of your revenue. One, overall revenue growth for FY26, that's come in at 34%. I think you'd guided for around 60% previously for FY26 as a year as a whole. So would you still stick to your guidance? And also, if you could just highlight any impact or any talks that you're having with your clients in the US as well, what is it, even though your exposure is lower?
Yeah, thank you. Thank you for having me here. And I think the global cues and the global let's say, geopolitical happenings don't impact so much in the short run. Of course, in the long term, they do. On that brief comment, I would like to say that this year's guidance still is intact. We see very strong uptake. Order book is as expected growing, about 7,400 crores of orders end of June. And the good news is that we see a good let's say, increase in profitability across the different sectors, not just one or two clients, but a broad brush. Our efforts during last 2-3 years have yielded some results, and now we are seeing an increase. And as we go towards other quarters, we probably have a better operating leverage too. So overall, we hold our guidance of totally consolidated level, about 4,500 plus crores of revenues. And of course, we had guided for 15.6% of EBITDA. So certainly minimum at a minimum, we'll probably achieve that number. The comment on the tariffs, etc., we had always considered a world which will become a little more insular and people would insist on local manufacturing. So strategies that we have said is geographical expansion. So that is also paying dividends to us now, because it takes about a year and a half to set right those factories in the US. So we have now 2 factories in North America. So all in all, I think we are gearing up for whatever the markets and geopolitical forces throw at us.
Okay. So you're confident of your guidance in FY26, and you have laid out that you could probably achieve $1 billion in terms of revenue by FY28. You're factoring in any kind of gyrations when it comes to the entire tariff situation around the world into this guidance?
Yeah, so we think that at this point in time, if you really see the kind of exports that we will actually be doing, it will be either semiconductor, which is generally not touched by tariffs by any country generally. It's the more value-added products that are touched. And then, of course, there are critical areas wherein we export. And those areas, the alternative to the OEMs, if they are in the US too, are limited. And so these tariffs only kind of is a small, let's say, a small dampener to that demand. And most of the orders that we have for export execution, they're all placed for 10 years and 5 years time frame. They last longer than the government of the day. And so from that perspective, we don't think there is any impact. And we have factored in any such, let's say, downtrend that we may see because of our portfolio, which is very diversified. So I think this $1 billion by FY28 is very much reasonable and very much possible.
Okay. And sir, what about your OSAT business as well as the PSB business as well? Because I think you're aiming to focus and become more of that high margin, high electronic kind of manufacturing side is your focus. Next 2-3 years, what will be the contribution that will come in from both OSAT as well as PSB? Yeah. And what is the current revenue there?
Yeah, so of course, currently these projects are just greenfield projects. Factories just getting prepared. So by September, we'll have the first buildings ready and maybe the entire factory. And in OSAT, we do business this year. For last quarter, we targeted about 100 crores, and I think we would definitely well on our way to do that. In PC board, we'll start from the first quarter of next year. And in both the cases, we have got tied up anchor clients. And in fact, in OSAT, we had earlier 2 anchor clients. Now the third one, which has joined, and we're really getting very good traction in those 2 businesses. They're decidedly margin accretive businesses. So our plan is basically to make sure that we're able to grow those businesses even post-government subsidy regime. And
what will be that % of revenue, sir, from them in the next 2 years?
FY28, we had earlier said about 2,000 crores from these 2 businesses out of the 9,000 crores that we had planned about. So maybe they would exceed this 2,000 crores number. So maybe we'd probably exceed the guidance of $1 billion too.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So confident in terms of the $1 billion guidance for FY28. That's Gains Technology, not too deterred in terms of the tariff situation. Those are the DCB numbers as well. So maybe that should come up for you. It seemed as though the asset quality was quite intact at this point. So maybe the stock should come up for you, up around 1% for DCB Bank at this point. We'll take a short break, get you more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. That recovery is what we're seeing coming in for the market right now. We're seeing 24,850 levels. About that is what the Nifty is trading at. But US President Donald Trump has actually said that US will levy the 25% tariff on India. Sonal is here to decode the impact of this that could come in for OMCs as well as the chemical sector. Sonal.
Thank you so much for that. Well, do remember that India is importing 25% of its oil from Russia. And Donald Trump, apart from that 25% tariff, did say there'll be a penalty because India is importing that oil from Russia. So important to note that as well. But if we talk about the impact, there have not been very specified contours of this tariff on oil and gas in particular. So DAM Capital says, though there is no current incremental impact, so to say, as a part of the overall trade deal with US, it could be the most impacted sector after autos once more granular details come out. They say it could be about commitment to purchase US ethane, US gas. Now, do remember, we do have a lot of imports coming in from the US when it comes to gas. So they say there could be a possibility that there will be incremental contracts, there will be incremental capex that the US could ask India to make, and that would mean higher capex from companies like GAIL and Petronet LNG. But again, there is no finality on this one. Nuvama says that oil marketers and refiners could be hurt as India currently imports around 1/3 of oil at meaningful discount from Russia. However, important to note that there have been sanctions earlier by the European Union as well on Russia when it comes to crude prices, crude capping as well, and that hasn't impacted OMC so much, and this is something that they had indicated in the last quarter as well. So it is the developing story that we are talking about. In terms of chemicals, there is no meaningful impact till the time there is some clarity on tariffs on China, because that's the biggest competitor in terms of inputs and final products as well. So all depends on what happens with China when it comes to the final tariffs. If it is lower for China, we will be at a disadvantage, but it could be vice versa as well. So all in all, more details are awaited. So far, we are watching out for details on what happens to imports coming in from the US when it comes to shale gas, ethane and spot LNG as well. And overall, what happens with Russian crude oil prices, which we are importing on a large scale.
Okay, yes, absolutely. Lots of moving parts. Thanks very much for that, Sonal. In fact, for pharmaceuticals, it'll be interesting to see because as of now, there's no clarity in terms of whether or not or what the tariff situation would be. But in any case, the feedback that I've got is that if it's till 25%, there's a likelihood that it's going to be passed on to consumers in the US, and there will be a churn of portfolios. The products which cannot actually have high margins on account of that will probably have to be removed from the portfolios that Indian pharma companies do have. Well, on that note, we'll take a short break, but we'll get you a lot more on stock-specific action. Stay tuned. Welcome back. Well, picking up pace for the market, so up around 18 odd points currently for the Nifty. We have the Midcap Index, which is just about lower by around 0.5% now, and the Bank Nifty is seeing incremental gains. So at the high point of the day currently for the Bank Nifty, up around 134 odd points. In terms of stocks, it is a medley of stocks. It's completely sector agnostic at this point in time in terms of the Nifty stocks which are gaining. So the top gainer is HUL reacting to numbers, followed by JSW Steel. We do have Nestle India, ITC, Power Grid, Hero MotoCorp, Britannia, all of these stocks which are gaining at this point in time. Maybe there's a little bit of veering towards the FMCG space because of some amount of defensive buying. Axis, ICICI Bank, all of these stocks from the banking space currently in the green. Well, with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead. Stay tuned.
Stocks recover after a lower start to trade, and they are now in the green despite the Trump tariff concerns. FMCG, private banks and media lead the sectoral gains, while pharma and realty continue to drag.
Jio Financial Services will make a preferential issue to promoters of over 15,800 crore rupees that will see them up their stake to 51% of the post-issue equity capital, the stock perks up on the news.
Tata Motors is set to buy Italian CV maker Iveco for almost 3.8 billion euros to gain access to key technologies and build presence in the Europe and South American markets. The move precedes the demerger of Tata Motors' commercial vehicles business.
Infosys CEO Salil Parekh tells CNBC TV18 there will be no layoffs and the company is on track to hire 20,000 graduates in FY26. He also sees AI expanding the market for IT services and expects large deals soon.
US President Donald Trump says that the US will levy a 25% tariff on India along with a penalty for using Russian crude, even as he calls India a friend and holds out the possibility of a deal soon. Experts believe that the trade pact is still in play. It is a remarkable recovery that the bulls have staged from the lows of the day. We'll talk about all of that right here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Patakia. With me, as always, is Vamakshi Dhoria. This comes straight out of a Please Believe It or Not series, if you can call it that, because from the lows of the day, we are up, more than 250, 260 points now. We're reaching that same resistance zone of 24,900. But there's no reason to complain because it's a fabulous, fabulous recovery.
Absolutely, Hormaz. There's absolutely no reason to complain. It's been a very good recovery, and the recovery is being led by the Nifty Bank as well, right? If I look at the Nifty Bank, it has managed to recover by almost over a percentage, from the day's lowest point. What's also done quite well is the FMCG index. Of course, we did see numbers come out from HUL and, largely inline set of numbers. Nothing bad this time around, and resultantly, the stock is surging higher. For now, HUL is close to the day's highest point, up almost 3.5%. Nifty Media as well is another index that is in the green, and what's driving it higher is Zee Entertainment as well as Saregama. Saregama, I believe, reported its numbers just a short while ago. That stock is surging higher today. Apart from that, what's not doing too well is the pharma index. All of these pharma counters, given the kind of developments that have taken place overnight, all of these pharma counters are down and out in trade, Hormaz.
Indeed. And of course, there are a lot of other result reactions. We are counting down to 5 other Nifty companies reporting results later in the day. We're counting down results from Maruti. We're counting down results from Coal India. We are also counting down results from Sun Pharma. And there are lots of other results from the broader markets as well that we need to keep an eye out for. Now, on to the big story of the evening yesterday and for the better part of this day as well. US President Donald Trump has said that imports from India will now face a 25% tariff and also announced an unspecified penalty over India's purchases of Russian weapons and energy that could be imposed on the 1st of August. However, at a press conference later, he said that US was negotiating with India, quote unquote, right now. Listen in.
Well, we're negotiating right now, and it's also BRICS. They have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. And it's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. It doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country because money is going to pour into the United States like we've never seen before.
Well, and amid the tariffs that are imposed on India, there are specific goods which are exempt from the proposed list. My colleague Parikshit is joining us with all of those details. Parikshit?
Well, yes,
important details coming from the White House. We reached out with them to them with a query as to how the tariffs will come into effect from the 1st of August. We were told that yes, the tariffs will come into effect from the 1st of August. There are items like semiconductors, minerals, you've got pharmaceuticals which are already exempted. So those exemptions will continue. Also, steel and aluminum were being tariffed at 50%. You had 25% tariff on the auto sector. All of that will continue as it is. No additional tariffs on these sectors. What about the additional penalty? We're told from White House officials that the additional penalty has not been decided, and the tariff schedule starting from the 1st of April is not out. We only know a broad top line 25% tariff. Also, what we will have to now keep in mind is that the exporters will have to brace for more uncertainty. There could be more action from Donald Trump in the next few days, including secondary tariffs. He has set a 10-day deadline for Russia to have some sort of deal with Ukraine to end the war. If that were not to happen, there could be secondary tariffs on countries like India and China because we purchase energy from Russia. So that could be a further blow. So we're looking at the next few weeks of uncertainty. Two major items are going to be under scrutiny right now. One, India's purchases of Russian oil. In the month of July itself, 35% of our oil, crude oil imports came from Russia. Our defense ties with Russia. We use the S-400 in the conflict with Pakistan. We have more deliveries of the S-400 coming till 2026. All of this will be under scrutiny by the United States.
Indeed. Parikshit, thank you for all of those developments. We've been tracking them very closely since for the last many months, ever since the negotiations have been ongoing. Now, sources have told CNBC TV18 that there will be no immediate impact on smartphones and laptop exports from India to the US. And Ashmit is now here to bring us all of those details. Ashmit, what are you picking up on this front? Because it is definitely an important development here.
Well, by all respects, as far as the smartphone export story is concerned, that's been the poster boy of Indian manufacturing story, and that is something that was also inspiring some concern on account of statements that came out of Donald Trump, that came out of the United States. Now, what sources are telling us is that there will be no immediate impact as far as smartphone, laptop, telecom servers are concerned. The reason being is that at the time of imposition of these duties, initially in the months of April and May, there was subsequently another order that had been passed, a presidential memorandum, which had provided for exemptions for particularly exports such as smartphones. Now, recently, the smartphone shipments that have been going from India to the United States, they have been availing of those exemptions. They have been availing of those benefits for a zero duty applicable as far as smartphone exports is concerned. That is essentially something that was contemplated in the month of May. There was a 90-day period for which this exemption had been granted. That 90-day period ends on August 14th. So what sources are telling us is that these exemptions, at least for now, will continue. There will be no immediate impact on exports that are going out, especially with respect to smartphone, laptop, servers. There will be no impact in terms of a duty hike. The 25% duty hike will not levy immediately as far as these exports are concerned. One aspect, however, to bear in mind is that there will be a review meeting in the United States. This will be on or before the 14th of August. And that meeting will then decide on the continuity of these exemptions, whether the zero tariff, whether the exemptions should continue, or whether there should be imposition of the fresh numbers posted by Donald Trump. So that August 14th meeting will be critical. But for now, no immediate impact, no levy of 25% tariff. Back to you.
Well, thanks so much for that, Ashmit. Important development out there, and resultantly, we did see some recovery in some of these EMS counters like Dixon. Dixon has moved into the positive territory. Keynes too reported a good set of numbers. The commentary again coming in, sources suggesting that this could be not impacting the EMS players. The stock is flying high in trade today. But earlier, we spoke to economist Neelkant Mishra to get a perspective on the likely impact of the tariffs on the Indian economy as well as its impact on India-US relations. Let's listen into that conversation.
We're talking about an increase of about $6 billion a year on last year's export numbers. And clearly now, I think, as you said, the second order impact on what happens to electronics exports, what happens to apparel exports, there was a lot of expectation that we may have an advantage. At these prices or these rates, we may have a 5% disadvantage. Some of this, if these indeed stick, see, I think the The message here is that even South Korea was threatened at 25%, but they ended up at 15%. So maybe this is the preliminary, the pre-final step to the final tariff.
And we also spoke to Nilesh Shah, the managing director at Kotak Mahindra AMC, on the impact of the US tariffs on the Indian markets. Here's what he had to say.
We are in a perfect storm right now. Valuations are on the higher side. Earnings growth is in mid-single digit to high single digit this quarter. And on top of it, from being somewhere favorably placed on tariff, we are now probably placed on the slightly unfavorable side. Domestic investors will have to be long-term investor and they'll have to moderate return expectation. There will be always U-turn in US policy making as longer-term strategic interests of India and US are aligned.
And now the US president has also confirmed a 15% tariff on imports from South Korea, although he described that as part of a quote-unquote full and complete trade deal between both the countries. The South Korean president is expected to visit the White House for bilateral talks within the next 2 weeks, with tariffs likely topping the agenda. The US has also concluded a deal with Pakistan, whereby Pakistan and the US will work together on developing the country's massive oil reserves. Let us now cut across to the other big story of last evening, which was Tata Motors' mega acquisition. The management is speaking about this.
Kind of a ROCE business. And together we believe we can actually generate substantial value. We can triple our revenue and quadruple almost some of our profitability numbers amongst the two of us to ensure that it still generate a 20% kind of a ROCE. Which is, and this has happened at a very limited risk because these are well-established businesses that are already there, number one. Therefore, this acquisition is a very strategic and meaningful acquisition in terms of why we are doing what we are doing. At the same time, there's also complementarity of capabilities that Girish just talked about. And we also believe for the Indian business, it's going to get you cutting-edge technologies that are there. One of the questions that just comes up is that how is this different from JLR acquisition? I think the portfolios are substantially different. Here, actually, the portfolios sit next to each other. So the ability to actually synergize our thinking and approach the winning markets together is substantially more. And therefore, we'll need to leverage that to the hilt. And at the same time, Tata Motors has never been more stronger in terms of its financial position to take on such a transaction. And these transactions, the next question is why now? I think, one, we are financially in a very good place compared to where we were earlier. And also, transactions of this nature are far and few between. And you, as and when they are available, you will need to move fast. And with Iveco deciding to spin off its defense business, this then becomes a very attractive opportunity for us to scale up our business and think global, leverage each other's strengths, and use this to diversify our portfolio. We have been always saying that everything is good in the commercial vehicle business in terms of market share, profitability, cash flows. The only fly in the ointment is about cyclicality of the cash flows that you get. By diversifying such a meaningful acquisition at scale global, you also find a way to ensure that the consolidated entities' cash flows are less volatile, which helps you get a better value as far as the market is concerned. So it's great for the country in terms of getting cutting-edge products in terms of safety, autonomous, connected, new energy vehicles. It is great for Tata Motors shareholders because it's able to give them a very strong return profile. And thirdly, it is also great from an Iveco standpoint because it's giving them scale to a business. If you look at their EBITDA line, they're actually very competitive. But EBITDA to EBIT, it falls quite sharply because for the kind of investments they know, they can now amortize that cost over a larger volume base. So that also helps us.
Welcome back. You're watching Business Lunch on CNBC TV18. Well, CNBC TV18 quizzed the HUL management at the earnings press conference earlier today about the macro environment in India. Here's what they had to say. Listen in.
The macro atmosphere for consumption is looking more positive. The amount of liquidity increase in the country, number one. The lower inflation, which has been really hurting for the last few years, that is now much better, including food inflation. We have seen positive news in terms of taxation relief in the country. And if I add all those things put together and then take the factor of monsoon, which has been pretty good last year, and also encouraging monsoon in the current year. If I add all those factors put together, overall macro atmosphere looks encouraging. Equally, as mentioned internally in the company, we have strengthened our core portfolio and further improved our future core market maker. So overall consumption climate, the sequential improvement that we have seen, we expect it to be sustained, the gradual recovery that we've seen. And even for our business, very similar conversation. The growth has been for FMCG industry led by rural, where rural growth has been ahead of urban.
Now, we also asked Rohit Java, the outgoing managing director and CEO, about the leadership change at HUL. Here's what he had to say.
I've spent 37 years with Unilever, a large part of that with HUL and also with Unilever. So personally, I've come to a stage in my career, and you would agree that 37 years is a long time, that I want to now do something else in the second stage of my career and life. Priya is another homegrown talent like me. She has spent more than a quarter century in the company. She's been on the management committee for 7 years, on the Unilever executive for 3-4 years. She's headed big global businesses, B&W or Beauty and Wellbeing. You know that 2 years ago I split the division and made B&W a specific division because that's really a driver of value growth. So she's also therefore absolutely well casted to drive that forward.
Well, on that note, let's slip into a very short break for now, but don't go anywhere. More news and updates on the other side. Welcome back. You're watching Business Lunch on CNBC TV18. Well, some updates from the Parliament then. The Lok Sabha has been adjourned till 2 p.m. while the Rajya Sabha was adjourned till noon following opposition ruckus over special voter list revision in Bihar and several other issues. Well, on that note, that's all we have on this edition of Business Lunch. We're leaving you with the Nifty slightly below the 24,900 mark. Don't go anywhere. Midcap Radar comes up next.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. What a day, what a recovery from the lows, and this despite a lot of trade tensions looming over the economy and what's happening with the global uncertainties as well. Of course, today is the expiry day, the final day of this month, so last 1 hour still remains very crucial.
That's right. You encapsulated all the key points, tariffs, expiry day and key results. So markets have a lot of cues that they are taking, and on the back of that we're seeing quite a bit of volatility, but the name of the game is the sharp recovery that we've seen. We have a lot lined up on the show, some key corporate conversations. So let's start off with the top headlines. Sharp recovery on Dalal Street as Nifty and Sensex back in the green, showing resilience to Trump's tariffs. Mid-caps to recover but still in the red. FMCG, private banks and media lead sectoral gains, while pharma and realty continue to drag.
Gains Tech surges in trade after a good show in Q1. The company surpasses full-year guidance of 50 basis point margin expansion. Management tells CNBC TV18 that guidance for this financial year remains intact and they do not see any major impact of tariffs and have factored in the plausible downtick.
Weak Q1 hurts Hitachi Energy as the company reports a miss on revenue, profit and margins, even as order inflows remain healthy.
Indus Towers lower in trade as the company's profit declines and EBITDA comes in below street estimates. Tower additions also come down sequentially.
CAMS is the other stock reacting negatively to its Q1 performance as revenue, EBITDA and net profit miss street estimates, while margins come in slightly above what the street was anticipating.
Okay, all right, those are the top headlines. But as we've been talking about the big recovery that is taking place, but important flashes for you at the bottom of your screen. Sources on US tariffs, trade discussions in virtual mode are likely to continue. Looks like there will be more decisions on this, and maybe that's what the market is factoring in as well, that this is not the final tariff that has come by. And India is unlikely to jump the gun before knowing any details in a dynamic situation. I think that's what markets are factoring in already, and that is the reason we have seen that sharp uptick from the lows. The Nifty is up 75 points in the green, and it was down 0.7%, but now it's up 0.3%. So basically, it's a 1% gain that we've seen from the lows already. Let's talk about all the mid-cap movers that we have in trade today. Hormuz is joining us as always to take us through that. Hormuz.
Proper expiry session, if you want to say it that way as well, rounding off the month on a high. But yes, the tariff impact is being felt on specific sectors, even if the market has recovered from the lows. Take a look at Pearl Global, take a look at Adani Industries, Waaree Energies, most of them at the lows of the day, almost losses of anywhere between 5 to 8%. Take nothing away from earnings, because there are a lot of positive earnings reactions that are coming by in today's trading session. And look at HEG, now 16% higher on that stock. Gains Tech is up 10%, Sagility is up 10%, and Gillette, the numbers came in at one point was up 4.5%, but still holding on to some healthy gains. And some negative earnings reactions as well in today's trading session. A green panel is one of them, trying to recover from the low, still 8.5 lower. Sonata Software, we spoke to the management earlier in the day, 5.5 lower, and DCB Bank, a very sharp knock after the numbers were out, 6.5% lower now after the results that were just announced a few minutes earlier. On the volumes front, Greaves Cotton reported results yesterday, but it's making those gains today, 10% higher on that stock. Graphite India is up 6 in tandem with HEG, and Alkyl Amines is at the highs of the day, 4.5% higher on very strong volumes. And lastly, stocks that are at a 52-week high today. Cartrade Tech continues to move higher. Nesco's numbers were out earlier this week. That stock is up 5.5 as well. And Dhanuka Agritech at a 52-week high with gains of around 2.25%. Back to you guys.
Thank you so much, Hormuz, for taking us through all of the stocks that are moving around as far as the broader end of the markets are concerned. Well, a couple of stocks, have a look at a name like Adani Industries. Now, this particular company, makes those conductors as far as the power equipment space is concerned. That particular stock, earlier today had taken quite a bit of a big knockdown, over 6.5%. Which are the stocks that are recovering quite sharply? Some of the capital goods names. Have a look at Cummins India, near the day's highest point. Have a look at IndusInd Bank. That stock has recovered very sharply. The entire PSU banking space has recovered very sharply. Names like SBI, PNB, these are some of the stocks that are doing very well in the session. Some companies that just delivered their results and the reactions to that, have a look at Jubilant Ingravia. That particular stock delivered a set of numbers largely in line to a slight beat. That stock doing quite well. But a very important corporate conversation lined up for you. Tata Steel reported a strong Q1. They beat street expectations. Their EBITDA beat was led by cost transformation and improved European performance. TV Narendran, who's the CEO and MD at Tata Steel, joins us now. Thank you so much, Mr. Narendran, for joining us. Before we go into the results, 25% tariffs have been announced by President Trump on India. What is the impact on the global ferrous industry and for Tata Steel in particular?
Tariffs on Indian exports to the US doesn't have a significant impact on us because, firstly, we are not selling anything from India to the US. The next question is then, does it impact us indirectly because some of our customers may be exporting to the US? Yes, the answer is yes, but it's not such a big component of our volumes. The second part is, this is what he has announced, but as we've seen in the past as well, I think it eventually depends on where it lands at the end of the negotiations with the Indian government. So I think it's too early to draw conclusions. But yes, it's something which concerns India because non-steel exports like pharma and many other industries are dependent on the US market. So I think we should watch that from that perspective.
But it's safe to say there is steel that is exported from Europe to the USA?
That is certainly being impacted by the actions taken by President Trump. In the UK, there is a 10% agreement on the exports. I think the conversation between the UK government and the US is more on the melt and pour conditions because, as you know, we are currently shipping steel from Netherlands and India to UK for converting from slabs into hot rolled coils and downstream products. So that's the only part which we are waiting for clarity. From Europe, while recently there's been an agreement, but on steel, our current understanding, it still stays at 50%, which is very significant. So that's a matter of concern. It has an impact on us, but some of these costs are being passed on to our customers because, unfortunately, for the US customers, they don't have domestic options to source the steel and are dependent on imports. So there is a part of that cost going on to customers in the US, and part of those costs will have to be borne by us. So we're taking some mitigating actions. It's about 10% of our volumes, so it's not that material from a volume point of view, but they're all profitable and high-end products. So it's not easy to develop alternate markets for that either.
Understand, not easy to develop alternate markets. You will be bearing a certain proportion of the cost, but 10% of total European volumes is what you mentioned. So what does that mean in terms of steel in absolute terms?
Yeah, that's right. About 700,000 tons in Netherlands, slightly less than 100,000 in UK. So in the UK, it's less than 10%. It's about 10% in Netherlands.
Okay. And what was the benefit of coking coal realized in Q1 FY26? And will there be a similar benefit that we'll see in Q2 as well?
Yeah, I think last quarter we had guided a $10 reduction. We are in that range. $10 to $15 reduction is what we had guided. Both for Europe and India, we are in that range. Next quarter also will, or rather this quarter will also be about $10 lower for coking coal in consumption costs.
Okay, so that is as regards coking coal. Now, in terms of Q2, how are the current steel prices trending when you're comparing it on a sequential basis?
I think the guidance we are giving is that it will be about 2,000 rupees per ton lower in Q2 compared to Q1, for Tata Steel, because some products, move up and down a bit, and on an aggregate basis, we are guiding 2,000 rupees per ton below and lower in Q2 compared to Q1. We had guided 3,000 rupees higher in Q1 compared to Q4. I think we ended up at around 2,600 higher in Q1 compared to Q4. In Europe, it will largely be flat, maybe 5 to 10 euros per ton higher. It won't be going down, maybe slightly higher, but more towards flat.
Okay, and if Europe gets benefit of higher prices and lower coking coal costs, then EBITDA per ton, that can be in the scale of $30 to $40 a ton?
Not really, because there are other costs which are going up in Europe. There are other input costs. So I wouldn't give that guidance. I would say that Netherlands will be in this range, maybe slightly better. UK, we also will be in the range. I wouldn't go say that there would be a big increase in the numbers, the improvement in the numbers, because market conditions are still tight. We're waiting to see the impact of Trump's actions, etc. So, so I think we will say that the guidance on Q2 will be similar to Q1, maybe slightly better.
Q2 slightly better compared to Q1. Also, we are talking about cost transformation savings. How confident are you that you will realize savings of close to 11,500 crore in FY26?
That's right. So this was the targeted saving for this year, and it is backed by very granular level projects which are being undertaken across geographies. We are pretty much on track for most of those projects. There are some areas where we are lagging, but there are some areas we're trying to make up. But we stick with our guidance of 11,500 crores.
Mr. Narendran, what would the difference be between India prices right now, given we do have some safeguard duty and imported costs coming in from China as well?
Difference is narrowed because Indian prices have dropped and domestic prices in China have actually gone up about $30 in the last week or so, right? $30 to $40. So it's not yet attractive to bring in material from overseas. There is some material has come from Russia some time back. So the threat of imports is always there. The other concern is because Indian market is growing, we are able to sell in India, but export prices are not very remunerative. So because the Chinese steel has depressed prices globally. So that's a concern. So it hurts the sentiment. People are always watchful. But it's not as if huge volumes are coming in, but the threat is always there.
Okay, take that point. Now to the balance sheet. Debt is hovering around that 84,000 crore mark. What is the capex plan? What does it mean about the debt reduction plan that you have in FY26?
We are expecting our debt to be lower by the end of this year than where we started. We started at around 82,000 crores. We expect it to be lower. I'm not giving you a specific number, but we'll certainly be lower than that. The capex guidance stays at that 15,000, 16,000 crores that we've guided at the beginning of the year. We are on track for that. We are obviously trying to do what we can to release more from working capital. We've done a good job in Netherlands of releasing a lot of money out of the working capital there. We need to do a similar work in UK and to some extent in India as well. And if our profitability stays at these levels or thereabouts, then we'll be generating the cash flows which will help us bring down the debt.
Thank you so much, Mr. Narendran, for talking to us about Q1, how prices are panning out in Q2, as well as the debt reduction plans going forward. Now we'll slip into a short break, but before we do that, a slight reminder for our viewers: unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18. Access our prime members-only experience on cnbctv18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and master classes, along with curated lifestyle benefits.
Welcome back. Well, you just saw TVS Motors numbers flashing for you. Sudarshan is joining us now to tell us how did these numbers look. Sudarshan.
So as expected, it's a steady set of earnings from TVS Motor because both TVS Motor and Eicher Motors have been outperforming the peers as far as the volumes are concerned. And that's the reason volumes have helped company report healthy revenue growth. But on the margin front, we'll have to see if the company has included PLI incentives too. Now talking about the headline numbers, profit has increased by almost 35%. It has come at 780 crore. Revenue too has increased by more than 20%. EBITDA has seen a jump of 32%, and margin has come at 12.5% against 11.5%. So here also almost 100 basis points expansion. Good part is realization. It has seen a healthy increase not only on YY but also on a sequential basis. We were expecting there might be an increase of 1% both year-on-year and QOQ, but here realization has improved 8% year-on-year, and on a sequential basis it's up 6%. So overall, it's a steady set of earnings from TVS Motor.
Thank you so much, Sudarshan, for joining in. And TVS has been a very, very sharp recovery from the intraday lows, post the results that appear to be a beat to our own CNBC TV18 poll. But before we slip into a short break, it's a good time to remind our viewers to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and for the Global Lens at 8:30 p.m. Welcome back to Midcap Radar. Well, we have a very important corporate conversation lined up. Hitachi Energy, that particular stock, has seen a bit of selling pressure after reporting its Q1 results. Now, we are seeing a quarter where the ordering activity was very strong and the order inflow too was quite strong. We are now joined by Mr. N. Venu, who's the MD and CEO at Hitachi Energy India. Thank you so much, Mr. Venu, for joining us. First up, what we want to understand from you is order inflow this time around was very, very strong. Help us break this down in terms of both HVDC as well as non-HVDC orders, and how's the non-HVDC order side of the book grown this time around? And a quick clarification, do you have any exposure to the US market in terms of exports?
So thank you, Vivek, and good afternoon, everybody, and it's a pleasure joining you on your show. So let me take 30 seconds to demystify our whole strong Q1 results, which we have produced yesterday. And as you have seen, our orders are very strong, 365% year on year, and our revenues are also pretty strong, 15% growth on year on year. And we have also have all-time high of order backlog, close to 29,000 crores, and which is also, and since our revenue has grown 50%, and our gross margin is also improved by almost 650 basis points, and which is also culminated into EBITDA margin improvement of close to 700 basis points. And we have also had a very strong, generation of the cash. So all these things is showing us a very strong, momentum to our entire FY 25-26. And coming back to your second question on our thing, our exports, as you know, our exports are generally in the range of 25%. And our exports to the US is very, very low at this point in time. And it is also for us, any additional tariffs, etc., is a cost neutral, it's a pass-through mechanism. So that way, at this point in time, we are not really concerned about the tariffs. But as you know, tariffs is a bigger item, agenda, and we really need to look at it, how it will pan out on an overall basis.
We take that point, and it's an ongoing situation as well. So we'll keep assessing that as and when there are more updates there. Revenue growth at 11%, it's healthy, but maybe the street was expecting more basis the order inflow. Has there been any delay? Do you think that is something that will be accounted for in Q2? And for FY26, what kind of margin number are you looking at?
No, there are no delays, first of all, and as you know that the large projects we have been saying like HVDC projects, it's basically a 48-54 month schedule completion, and normally the first year the revenues won't come, and the revenues will start picking up the second year of the ordering down, and that's what we have been saying for HVDC projects which we have booked. So the revenues we can expect in the next financial year, that to the second half of the next financial year, will come in a quite substantial impact. And last year we had a very good growth. On the overall basis, we had a 24% growth. On top of that, we are growing 15%. I think it's a very good growth in my view. Without considering the large orders.
Understood that. Mr. Venu, one thing that the street wants to know is that I believe you've actually told the analyst community that you're anticipating close to 2 large HVDC orders every year. How is the order prospect pipeline looking at? Have you placed bid in all of the recent ordering or the tendering that has happened? And probable size of the order that you're expecting in FY26 and FY27?
So what I have told the analyst community is that, to manage the complexity of energy ecosystem in India with so much of renewable coming in, country needs to have, many HVDC projects. And we see the pipeline of 2 HVDC projects coming into the market for bidding every year from now to at least next 3 to 4 years. This is what we are saying. It comes from the market. It's not that we're going to get it. We will be bidding all the projects. We will be bidding every project. We look at every project, how it will fit into our delivery schedule, our manufacturing schedule, our risk reward. All those parameters will be looked into it, and we will be bidding for those projects. And we are also, as you know, we are also expanding our manufacturing in anticipation of not only the HVDC, but also other demands in the country. We are, as you know, we have announced our 2,000 crores capex, which we have been, spending in all of our portfolio expansions, both the brownfield expansion as well as greenfield expansion.
Mr. Venu, last question before we let you go. What's the margin differential between HVDC and non-HVDC orders? That's something that everyone's been eyeing out for.
No, margin difference, every project we are looking at, and it is in line with our margin aspirations. So we don't.
That's around 10.5%.
So we don't want to say, as I said, we are improving it, and I made it in your own show last year that we entered into double digit. We entered much ahead of the curve, and we are improving further. And this year also we will do better than last year.
Okay, thank you so much, Mr. Venu. A very short conversation this time around, but we hope to get you soon to discuss more, especially as far as the ordering prospects are concerned for your company for the remainder of FY26. Thank you once again. But with that, it's all the time we have on this edition of Midcap Radar. The market recovery continues. Your stocks when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra and with me as always is Vinny Motiwala. We have spoken about the big Trump tariff data or the update that came by, and we have this series where we talk about our CIOs as well, or fund managers. Know your CIO, and that's exactly what we are going to do today and understand what the larger impact on investments could be.
Absolutely, that's what we're going to be doing, and today that's the focus mainly. Understanding the strategies that they follow, investing in mutual funds, how do they actually decide on asset allocations? And at times when we see those 25% tariffs coming in, how do you analyze that? How do you, what do you tell your clients? How do you navigate the risk that you see in terms of market volatility, I beg your pardon? That's what we're going to be understanding. And today to do that, we do have Sri Datta Manwaldar, who is the head of equities at Canara Rebecca, who is the fund manager over there as well. He's handling a lot of funds. Sri Datta, good afternoon. Thank you so much for joining in with us. First, let's just start with the basics in terms of understanding your investment philosophy. What do you all follow there? How do you all, evaluate equity strategies? Let's start with that.
Good afternoon, Vinny. Thanks for having us on the show. I think interesting times, but before that, as you said, let us delve into how we look at basically our equities piece and in terms of the core investment philosophy. We as a house are fairly focused on basically underlying businesses, and thus the focus actually runs around what is happening in the business, the scalability, growth, capital efficiency, etc., rather than what is happening in terms of the narratives and noises. Having said this, from this clearly flows the core investment philosophy that we have, which is invest in robust growth-oriented businesses which are run by competent managements at a reasonable intrinsic value. These are and when you look at these factors, clearly the three key parameters come out in terms of the starting point or the core pillars of the investment philosophy are what kind of management or quality of management that you are dealing with, what kind of business that you are dealing with, and intrinsic value of the business, which should be reasonable rather than just the statistical cheapness of the that we look at. That is the starting point. We call it as BMV, business management valuation. From there, of course, once you have actually spent time on these things, so we have roughly 380 companies under our coverage. Each of the company, when it comes in the investment universe, it goes through the filters of actually checking in terms of, are we comfortable with the quality of management? Are we comfortable with the quality of business? And are we actually okay with the balance sheet quality? Having said this, these are of course, the core filters in terms of getting the names in the universe. But beyond that, when the portfolio construction happens, predominantly the two key factors that we look at is incrementally. What is the incremental superiority or inferiority of growth in particular sector company that is happening versus the rest of the market? That is one. So incremental capital efficiency and incremental earnings growth. And when we say earnings growth, typically we also mean cash flow growth, not the pure accounting earnings growth. That's one. Second is also over last few years, the one factor we have started paying a little more attention to is clearly what we are observing, that understanding the positive or negative significant capital deviations, capital efficiency deviations or earnings deviations is becoming more and more critical because of the basically compression of the business cycles. The business cycles are compressing predominantly because of effectively the abundance of capital that is available, which you guys are observing. Equity is very easily available. The distribution network democratization has happened, and a customer who's willing to actually experiment. And if all those three things are together, you are actually experiencing a lot of capital deviations, which can actually give an opportunity to save you money because the businesses can derate, or sometimes actually creates an opportunity to make a lot of money. And that's additional factor that we are looking at.
So, Mr. Sridatta, when we talk about markets currently, we've been talking about how high growth stocks as well. How are you balancing both? Talking about growth stocks, value stocks within your flagship equity funds right now?
So you don't overtly or actively try to manage the combination of growth and value. As a house, we have a mix of growth stocks as well as value stocks. But of course, as a house, we also have a tilt towards growth. Predominantly, the reason for having that tilt has been the abundance of growth that is available in India. If you actually just look back for last 25 years or 20 years in India, average nominal GDP growth rate is roughly 10%. And if you have so much of growth available, naturally, it makes sense to actually play on that part more as compared to the value. Having said that, we have nothing against buying relatively cheaper names or value stocks, but we don't want statistical cheapness. We typically tend to actually focus on buying value stocks when we know that there is a time-bound, tangible, and discernible driver in place. Because you clearly need a earnings driver or capital efficiency driver to be in place for that value to get discovered. And when we get that, we are actually more than happy to add the stocks on the value side as well. But you don't overtly manage it. That's the starting point. Beyond that, whether it is a value stock or growth stocks, the starting point is always, are we comfortable with the quality of management? Are we comfortable with the quality of business? Are we comfortable with the quality of balance sheet? And beyond that, everything is what offers you superior relative earnings growth and what offers you superior relative capital efficiency. That decides whether you are buying into a value stocks or growth stocks. We are actually agnostic to either side, as long as some of these key fundamental tenets in terms of the characteristics as well as the growth parameters is in place.
Absolutely. That's interesting. But, at such a time, specifically today, we just saw that move coming in, right? 25% announced. Then you did see that sharp fall that was there in the market. We had a gap down start, then that recovery coming in. Now, your thoughts coming in on this tariff front as well. And how do you handle such periods as well, which come in the markets as well, whether it's volatility or underperformance? How do you manage to handle that?
I think volatility, outperformances, underperformances is a part of the game over a period of time. I've been around for 20 years now, and you have seen this multiple times. What we tend to focus on is, on relative basis, can we identify every year 10, 20 businesses which on a relative basis can deliver better growth, can deliver better capital efficiency? Because the rest of the stuff that we witness, and it's not that it is not important, but time to time we have seen that if you actually look back over last 10, 15 years, you had GST, you had COVID, you had basically temper tantrum, you had Fragile 5. So you had multiple events, and still actually, if you had actually focused on, rather than focusing on a lot of this noise, if you had focused on actually owning good quality businesses which have compounded over a period of time, there is a lot of wealth creation that has happened. And that's what we are focused on. We are good at, actually, as a house, we believe that we are good at security selection, stock selection. Even during the periods of outperformances or underperformances or volatile times, we're more focused on identifying companies where we think there's an opportunity to actually differentiate ourselves in terms of our assessment of basically the cash flow or earnings growth, and actually play those opportunities rather than worrying about the volatility. Volatility is the name of the game. The first thing when one comes into equity market has to remember that equity is actually an asset class which exploits the land, labor, and basically cost capital to generate higher return than the cost of capital, typically, if it is well run. And that's where it has to have a relatively superior outcomes over a period of time. It doesn't happen every month, every day. That's what we are focused on. That's how we look at the volatility or underperformances which come from time to time.
Volatility, as you said, is the name of the game. The recent volatile event has been what we saw with Trump tariffs. How do you assess that situation currently? Do you think it could have a longer-term impact?
Our initial assessment, and nobody can call out how it will play out, but our initial assessment is it is transient. It's a negotiation tactics. There are certain aspects on which clearly India is stuck, and so particularly related to agri, which we can't give in. But our sense is over next 3-6 months, it will settle at a lower rate, in line with most of the other basically tariff deals that you have seen. Having said that, yes, in near term, for a month or two, till the time you have final settlement, you are going to have impact on certain sectors. Some of it is very, very well understood, like part of basically pharmaceutical, part of auto, part of textile, part of industrials. These are few of the sectors where you have few companies, not all of them. You have few companies which will get impacted for a month or two. As long as you don't change view and say this is here to stay at a much, much higher rate, which creates a disadvantage for India versus others, I think you should be okay. But our initial assessment is it is more transitory, probably 3-6 months, and you would also be largely aligned in terms of the trade deal as it has been with the other large economies that US had.
Okay, on that note, actually we're going to slip into a very short break. We'll continue this conversation after the break as well, so stay tuned in.
Welcome back. You're still tuned into MF Corner. We still have with us our guest, Mr. Sridatta Bhandawaldar, who's the head of equities at Canada Robeco Mutual Fund. Mr. Sridatta, we spoke about what your strategy is, but in terms of spotting promising new sectors or business models, how do you do that in the Indian context? What is the entire process that takes place?
Sure. I think fundamentally the process is both bottom up and top down. Let me start with the bottom up because we as a house cover roughly 380 companies, and when we say we cover, which means we have our basic understanding, earnings models, and everything in place for all those 380 companies. So when you are doing the bottom-up research, naturally you have a team of 18 people, investment team people, which is covering these 380 companies. And when you do that on daily basis, you have interactions, you have channel checks, you have management meetings, and as that happens, a lot of times you come across basically new companies, adjacencies where the opportunity is getting created. So that is one way of actually idea generation or opportunity creation that happens, where you identify businesses and then you actually dwell deep into it, and you take position sometimes, you don't take position sometimes, but that's a more bottom-up approach where it's the traditional research leads to new ideation. This other way, which is more top-down, whereby if you actually look at the long-term, Indian economy has been evolving, and as economy evolves, you have profit pools which emerge. There are a lot of profit pools which were not available 10 years back, which are there. For example, platform companies were not there 5 years, 7 years, 10 years back. In listed space, at least, those are there. Basically, exchanges were not there. Capital marketplace were not there. They are there now. So as market economy evolves, as market evolves, you get basically new profit pools that coming in. You have profit pool expansions. You have basically consolidation of profit pools in several sectors, where the consolidation of the sector happens. You have several sectors where the competitive intensity goes down and thus the opportunities get created. You have sectors where the value migration happens, and that's a big theme again, where the value migrates in terms of the profit pools migrating from one set of companies to the other. Fundamentally, you get basically effectively new opportunities or new sectors where the profit pools are either expanding or getting consolidated or migrating from one actually set of companies to the other set of companies. And that offers an opportunity to evaluate new set of companies where you can actually spend time and actually eventually come to find opportunities. So these are predominantly two ways to find opportunities or come across the opportunities in terms of new themes, new stocks, new sectors, which over market caps.
Sridhar, how should today, if someone wants to start investing in mutual funds, SIPs, what is the best allocation approach for investment that one should follow, a golden rule that comes in while starting, and the perfect asset allocation you would suggest in today's scenario?
First of all, there is no perfect asset allocation strategy for anybody. But let me attempt to answer this question. I think the first starting thing is, and which most of the people ignore, is probably at a starting age or at a younger age, save more. So first starting point is, of course, save more. Second, decide your long-term, medium-term, short-term, long-term goals. Based on these goals, then you decide how do you do asset allocation. Of course, you have to take your advisor's view on this. But even before, when you do asset allocation, one has to be kind of fundamentally understanding himself or herself very well. Because when you do asset allocation, your asset allocation should be along your appetite of volatility, your appetite of risk, your expectation of return, one's expectation of return, and actually one's horizon. When you consider all these things, different allocations actually work for different people. For example, you might want a 15% CAGR over next 15 years. I might be comfortable with 12%. So our asset allocation will be fairly different. And it will be a reflection of our basically inherent personality and ability to take volatility. Everybody will make returns, but you need to have differentiation in that. I think that's very, very critical. And once you have that, then you start allocating based on the asset allocation that you have decided. Naturally, if you're starting young, and this is based on the past track record, you are generated something like 13-14% CAGR return in just the main Nifty Sensex indices over last 20 years. And if that is the base rate, then naturally, if you're starting young, where you don't have other liabilities and you have long runway ahead, the largest compounding is likely to happen in equities. And so to have a higher equity allocation, particularly when you're doing SIPs, actually is a better way to approach the asset allocation. Of course, as you grow in terms of age, you should have a different allocation as compared to that. So that's I think there is no golden rule. There is this basic stuff that save more, invest more, start early. I think that's what matters. What is more difficult is actually to follow it, because I think more than 90% of the people actually give up on these things when the CAGR of any asset class becomes low.
Sure. So, basics always work. That's the thing with every process that you follow in life, right? So, last question before we let go of this interesting conversation, Sridatta. Are there any sectoral thematic trends you believe are currently underappreciated by the market? If you can quickly tell us that in terms of a quick revision for our viewers as well.
I think in terms of valuation overall, there is no underappreciation. But in terms of pockets, clearly, while statistically they are not cheap, but mass consumption part of the market, low ticket mass consumption items, whether it is staples, whether it is consumer durables, whether it is your building material, some of these spaces, and we're just giving indicative kind of list, where over last 2-3 years the earnings have been relatively weak. That part of the market, while statistically it is not cheap, it seems like a part of the market which is relatively more underappreciated. That is one space. Second is, and exactly contrary to this, is part of manufacturing, where probably some of the companies eventually will become part of the global supply chain, and so scalability is very high. Statistically, they look very expensive today. Again. But the opportunity pie is expanding, and the opportunity pie is far larger for them than what people are actually thinking today. And I think that's the combination of the part of consumption and part of manufacturing, which both sides I see some underappreciation. Although in most of the other parts, we don't see valuations being really very, very comfortable. They are largely in fair zone or expensive zone.
Okay, those are some of those interesting themes maybe you can keep an eye out on. Thank you so much, Sridatta, for joining in with us this afternoon, giving us your insights in terms of how one could look at mutual fund strategies. But with that, we're absolutely out of time on this edition of Mutual Fund Corner on CNBC TV18. Thank you so much for tuning in. Up next, we have Closing Bell to take you through the last hour of trade.
go beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
Korean markets too are trading with gains, but not substantial ones after the US announced a deal with South Korea.
India was the highest or just about the highest tariff nation in the world.
We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get.
Low that we saw day before yesterday, 24,598 is in focus. Will we break it right at the word go?
From being placed in the front category in terms of favor, we have now moved towards the back category.
Including the mobiles and electronic stocks as well, all of them likely to face an impact.
170 points lower on the Nifty, 24,676 is where the index is.
If 25% sticks, then we will be at $18 billion. So there is a $10 billion extra impact.
Let's see whether or not the bulls have something in store, but I wouldn't really rule out a fight back.
What we need to speak about that recovery that we're seeing in the markets.
We always are grooming people. And she was ready, and I was ready.
Tariff schedule starting from the 1st of April is not out.
Triple our revenue and quadruple almost some of our profitability numbers amongst the two of us.
And India is unlikely to jump the gun before knowing any details in a dynamic situation.
Well, that was the day so far, and we're coming to you live from, the CNBC TV18 Motilal Oswal studio. You're watching Closing Bell. What a recovery it's been for a market. Who would have thought in the morning, gap down opening 150 points lower. The Nifty straight away went below that 24,700 mark, reeling under pressure of that 25% tariff imposition. But now it looks like it could, the overwhelming opinion seems to be that Trump is using it as a negotiating tactic. And finally, we're still not at the end game. The end is going to be a lot better. It's not going to be as bad as what it appears, and markets are reflecting that.
Well, that's right. Rima, President Trump showed us red. The markets showed it green. Yeah. And it appears that our markets were positioned for some kind of a shocker coming in from President Trump because the rupee yesterday was the weakest.
4-month low.
Today it's shown some kind of stability. The rupee, you had the FI shots in the system were very, very high, and the Indian markets underperformed itself. So it appeared the Indian markets were positioned for some kind of shocker coming in from President Trump, and that's why we saw a bounce. The good news is the July CD is low, which was in that ballpark 24,600 odd. That's got defended. But the problem is at around 24,950, that's where the resistance comes in at. And in the next 60 minutes, it'll be interesting to see whether or not we can get past that. Even at the midday when I had done the FNO corner, I had mentioned this, that 24,925, 24,950, that's where the resistance zone is, going by the options data, which Manglam will tell us in just a bit, and going by today's high as well. The Nifty bank, that needs to get past the 50-day MA. Very, very briefly, it went towards that mark, and it slipped a little bit from there on. So the Nifty bank and the 50-day MA, it's going to be important because then it gives us some more ammunition to try to move towards the 20-day MA. And the advanced decline ratio on a day that Trump delivers this sort of a shocker, well, you have almost pretty much even Stevens. We started the day with only 300 stocks that were advancing. Those two got very, very close to each other. And currently you have more than 1,000 stocks which are advancing. So I think that's an encouraging sign, Rima.
And look at the way the FMCG index has powered on. The FMCG index is up close to about 1.8%. It's not that the numbers were a great or a big beat. They were in line, stable set of numbers. But unlike IT or unlike banks, where there was a negative surprise, the FMCG numbers at least lacked any negative surprise, and markets are rewarding that. HUL is higher, Imami. Revenues are flat, but the stock is up close to about 5%. Expectations were muted. Gillette, that's another big mover. I think on the top line, they've delivered a 9.5% revenue growth. So FMCG is clearly the star in today's trading session. ITC numbers will be out on Friday. But we'll talk more about it. Let's quickly tell you what we have for you. It's an action-packed closing bell coming up in the final hour of trade. We'll take stock of the Bazar, Sagility, Greaves Cotton, Keynes Tech, all on the back of high volume. Two-wheeler major TVS Motors delivers a steady Q1, numbers in line with expectations. Revenues picked up on the back of strong volumes. We'll get to the fine print. The management of Dabur will be joining in to discuss the earnings and the way forward.
We'll wait for those numbers to come in from Dabur. Sun Pharma also just reported their numbers. There is a huge one-time loss of 800 crore in the bottom line on account of drug discontinuation and impairment. We'll get to the details, and then we're awaiting numbers from Coal India and Aisha. So, action-packed 1 hour coming up. So how should you position yourself in the last hour of trade? Mitesh is now with us with a few closing strategies. Mitesh, are you surprised by this intraday pullback? And it's not falter. We've come, actually now it's faltering.
Now it's faltering. Yeah.
Now it's faltering. You know, when we started the show, we were at 24,900 and swiftly in minutes, we've given up 40 points. So now just about holding on to that green line. So from the lows, it's still a, 200 point plus recovery, but we've come off a bit.
Good afternoon. One, I think, I'm not surprised by the bounce back for two reasons. One, I was not looking at the possibility of a big downside. There's always a chance that the price starts breaking below 24, 550, 500 zones and then we decline. But the indicator setup was suggesting that most likely we'll be sideways and range between 24, 550 to broadly about 25, 250. I still hold that belief. I think most of the weekly indicators are turning flat, which means that it will not be a volatile market, but it will be a ranged kind of a market. To me, right now, it looks like a 700-point kind of a range. It could be narrower as yet, but for the timing, I think these are the two important support levels and resistance levels, which is 24,550 and 25,250. So in that sense, the index, the idea is that once your belief is that it will be a market which will consolidate, then you deploy range strategies, which is basically try to buy near the lower end of the range. So I would want to buy in case we get below or just around 24,600 and try to take profits as we get closer to about 25,200. So next couple of days, weeks could be spent within this range.
What about stocks, Mitesh?
I have one buy and one sell. Dabur is, along with other other consumer stocks, is making a fresh swing high. So Dabur is a buy. Keep a stop below levels of 522. Look for targets in the range of 545 to about 550. And Ambuja Cement, after a good rally, there's first signs of profit booking on the charts of Ambuja Cement. So a short-term sell call with a stop at 613 and a target of 615 and a target of around 580.
Got that. Surbhi is also joining in. Surbhi, you had a hectic last 1 hour.
Yeah.
But we've got an action-packed 1 hour ahead.
Absolutely. Tariff talk. And folks, you should definitely check out this week's editor's playbook on CNBC TV18 Access. We discussed this whole issue of tariffs threadbare in terms of what it means for India, for the markets, for the economy. The absolute numbers are very large, Rima. I mean, we earn almost $90 billion in all our exports that go to the US. And that's not even services. That's what you look at.
Yeah.
Just goods exports. It's pretty significant. But as a percentage of GDP, it's not too bad. It's 2.2% of our GDP because we're a domestic story. And the market will hope that eventually this gets resolved and the eventual numbers are lower than 25%. So we'll see. But yes, it's an added sentiment negative. Weak earnings, FPI outflows, tariff uncertainty. So not what the market needed.
Correct. It's, it definitely be a bit of an overhang. But I'll tell you what, the market doesn't like uncertainty.
Yeah.
And this at least is out of the way. It's 25%. Now it can only be down from here, hopefully.
No, it'll get better from here, right?
It'll get better from here.
It's not, I'm sorry to burst the bubble, it's not 25% because the penalties that they are going to impose, because we're buying Russian oil, we don't know that penalty number.
Correct.
Now, whether he does it, doesn't do it, that part is still a
So 20 basis points, 30 basis points or 40 basis points at most, right?
He said up to 100% penalty.
I'm saying going by that as well, the hit on the GDP will be 20 to 30 basis points at most, right? I mean, and the other couple of factors, the rupee is weaker, so at least, it helps us in terms of exporting it to other parts of the country other parts of the globe as well. But that said, earnings. We get back to focusing on the fundamentals of our market. And Sun Pharma just came out with its numbers. Ekta is joining us to give us a quick snapshot of those numbers. Ekta?
Well, yes, it seems as though it's a largely inline set of numbers, at least in terms of the revenue for Sun Pharma this time. It's come in with a growth of around 7% odd. What seems to stand out is the margin performance, which is better than estimates, so 31% versus estimates of around 27.8%, and a net profit growth, which is around 20% higher. But this time round, they have been, in fact, hit by a one-off outflow of around 800 odd crores. So that is the one key thing which was factored in on account of a settlement. So that was one of the key things which would probably weigh down. US sales at $473 million versus an estimate of around $476 million, so largely in line with estimates. So no real big surprise which is coming for Sun Pharma. We'll wait by for the specialty sales number. But revenue growth in single digits, margins better than expectations, and the profit is hit by a one-time outflow of around 800 crores.
Okay. All right, Ekta, got it. Thanks very much. Sun Pharma in focus. Let's quickly get in a word from Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, joining in. Sudeep, we have lots of stocks in the market to discuss, but let's start with Sun since those numbers just came through. What's your call on the stock?
Well, I think one thing, Survey, is interesting is that the US sales numbers are pretty much in line with what was being estimated. And that's a good news. The one-time hit, I think we have to look beyond that. And, if we do look beyond that, I think, markets will recover and things will start looking up for Sun Pharma. I won't read too much into this correction, which has happened post the announcement of the results. Fundamentally, we do like Sun Pharma from a long-term perspective. You have to look beyond all these tariff-related tantrums. And if you do that, I think Sun Pharma is a good stock to buy.
Okay, that's a bit of an overhang still on Sun Pharma to wait and see how the tariff issue plays out. But let's now put the spotlight on the top movers at this hour at 2:30. Hormis joins in.
Well, you can see the earnings reactions, not just in Sun Pharma, but look at the broader market names that are reacting to results. And they are on the extreme end and on very, very high volumes. And look at Kaynes Technologies first up, 9.5% higher. It's slightly off the highs though, but it's the biggest single day gain since the stock has seen since November of 2024. There's a big move there. And now take a look at the volumes here. 35 lakh shares have been traded today compared to a 20-day average of just 2.5 lakh. So a big volume mover is Kaynes Technologies. The other one, of course, and before we move to the other one, look at Kaynes Technologies here. In the last year and a half, there's 17 months gone by, the stock has delivered positive returns in 15 of those. So big moves for Kaynes Technologies. Sagility is the other one, and that's one name the management has told us earlier that 100% of its business comes from the US. And here another result reaction, 10% higher on the stock, comfortably above its IPO price of 30 rupees, and 18.5 crore shares have been traded today compared to its 20-day average of just 2.5 crore shares. And in the last 10 sessions though, the stock has been a bit of an underperformer. This is only the third time that it has gained in the last 10 trading sessions. The third big earnings mover is Greaves Cotton. Now numbers came out yesterday and it's building onto those gains today. It's slightly off the highs, 8.5% higher though, and 5 crore shares have been traded already compared to a 20-day average of just 16.7 lakh shares. So 5 crore compared to just a few lakhs. And despite this move though, the stock is still down 15% this year, which is in 2025 the first negative return that it may see after 2020. Now on the flip side, Newgen Software is the other one. It snapped a 5-day losing streak today. It's significantly off the highs as well and still up around 6.5%. But take a look at the volumes here as well. Here too, the stock has moved on big volumes and 3 lakh shares have been traded compared to a 20-day average of 14,000 shares. So that shows the kind of volumes that you have seen on Nucleus Software today. And lastly, Steelcast. This name is a top loser on the small cap index, 12.5% lower on the stock. And of course, here too, the volumes have been very significant here. And if you take a look at the volume figure that will come up on your screen, and it's that kind of moves that you see on the volumes front on Steelcast. Almost 3 lakh shares have been traded compared to a 20-day average of just 21,000 shares. So enough and more earnings reactions, but Steelcast, one of the movers on the downside as well.
But you got plenty of buzzers on the upside, so lots of green.
You take a look at the positives.
Yeah, always look at the glass half full and not empty. Absolutely. Speaking of the positives, I mean, one of the stocks that has rocketed on earnings, like Hormas just pointed out, is Kaynes Technologies. Stupendous market expansion, margin expansion. That's what the company has exhibited. In the first quarter alone, their EBITDA margins are up more than 300 basis points. We caught up with the management. Hear out what Mr. Jairam Sampath had to say about the performance and the expectations for the rest of the year.
Global cues and the global, let's say, geopolitical happenings don't impact so much in the short run. Of course, in the long term, they do. On that brief comment, I would like to say that this year's guidance still is intact. We see very strong uptake. Order book is as expected growing, about 7,400 crores of orders end of June.
And the good news is that we see a good, let's say, increase in profitability across the different sectors, not just one or two clients, but a broad brush. Our efforts during last 2-3 years have yielded some results, and now we are seeing an increase. And as we go towards other quarters, we probably have a better operating leverage too. So overall, we hold our guidance of totally consolidated level about 4,500 plus crores of revenues.
Holding their guidance, and they're as optimistic about their OSAT business as well, the semiconductor business. They're saying that revenues should start coming through towards the end of the year and definitely over the course of next year. 10% on Keynes. Sudeep, I remember in this entire universe, even Dixon delivered very good numbers when you can argue on valuations, etc. Amber was very good. Amber, the stock was up 4-5% after numbers. Now we've got Keynes. Do you like anything here? One of them, some of them, none of them?
Well, I do like all of them. The only challenge is the valuation. So, I still can't make up my mind whether to buy at this kind of valuations or not. But performance-wise, they all have done very well. I'll wait for, maybe another 15-20 days, because if you recollect, this 25% tariff, which US is proposing to impose from tomorrow, doesn't cover smartphone and laptop, exports into US, because they were exempted under a separate document, and that comes up for review, I think, in mid-August. I think all these companies have significant exposure in that particular segment. So I'll wait and watch for maybe another 15-20 days what happens on the tariff scenario before I make up my mind on buying one of these stocks or recommending a buy on these stocks. But performance-wise, very good. Opportunity-wise, great. Only the multiple is something which disturbs.
All right. Sudeep, I think Vedanta is a stock you like, right?
Yes.
I'm just looking at their numbers which have just come out, and for Vedanta, always we have Hindustan Zinc that's already part of, the numbers, consolidated numbers that come out. But the aluminium business has more than 100 crore beat out there. The Zinc International business as well that they've delivered is better than what Kotak was working with, and even the oil and gas business. So all those three verticals that you normally look out for, well, that's a little bit better. The problem is uncertainty on the global front. What's your view at around 427 rupees? Is it looking exciting enough to you?
Oh, absolutely, Nigel. I think I've been positive on Vedanta for last almost a year. I think, beyond everything else, there is a significant value unlocking opportunity, which will definitely reward the investors in the short to medium term. The demerger is happening. It's a matter of time whether they complete it in September or November. So that's where the value unlocking happening. Second, overall, we believe that globally the metal scenario is changing for the better for Vedanta, and they will benefit. Leave aside the daily fluctuations in global metal prices and all this tariff-related shenanigans. But metals as a basket, particularly Vedanta's basket, is definitely very promising as things stand today.
Sudeep, thank you very much for joining in. Numbers flowing in. It's Chola Investment, where it's slightly lower than street expectations. Net profit at 1,136, falling short of estimates by about 50-odd crore. Get into a break. Here is a reminder for all our viewers. Unlock a world of exclusivity, expertise, influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBCTV18.com. The membership, that includes access to CNBC TV18's flagship events, interactions with the journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Well, keep an eye out on the bottom of your screen. The Supreme Court has observed that Bhushan Power and Steel review play. Prima facie, they say they are of the view that the Supreme Court Bhushan Power and Steel judgment, it requires reconsideration. Now, this would be in the direction of JSW Steel and it would be viewed positively. They go on to make this point that ground reality is that 25,000 people will be thrown on the road if Bhushan Power and Steel is liquidated. And the purpose of IBC is to make a company which is in doldrums functional. Currently, the hearing is still on, but this will be in the direction that it's moving in favor of what JSW Steel would like. To give you a background, a couple of months ago, the call was for liquidation of Bhushan Power and Steel, which would mean, it would be very, very confusing. What would happen to the asset? Will it be put up for bidding again? But now this plea is being taken on board and the commentary that's coming out appears as favorable for JSW Steel. Ashmit will join in to give us further details on what exactly is transpiring on that front. Well, we'll keep an eye on that and we'll keep getting you the latest on that front. Keep an eye on the ticker as well. We have Tushar Pradhan, Director, Hexagon Partners, who joins us on the show. Hi, Tushar. Good afternoon. Good to see you. Earlier this morning, we were making this point that this market is net short. The Indian markets have underperformed close to around 4% in the last 1 month or so, while the US markets and the Chinese markets were higher. And the money market, that's the rupee as it is, was seeing, some kind of weakness. So Indian markets were sensing some kind of negative. And it appears today, at least, that the possibility, since the FIs were so aggressively net short, there could have been a bit of a short covering bounce that's playing out. What's your view? Is it just for the time being that the markets are shrugging it off aside and then maybe, in fact, the fear will come to fore? How do you read it?
I think one can take any view here because, as we know, markets are a very dynamic animal, so nothing is for sure. But from where we stand and what we can look at is, I think there is a lot of noise at the current moment, whether it is due to announcements, whether it is due to expectations, whether it is due to uncertainty. Whichever way you look at it, I think that is causing a lot of noise. I think investors should really focus on how much will it really impact. Say, for example, we take the trade situation. Out of the listed universe, how many companies really get directly affected by it? And you have to remember that the increase in tariffs is not only for India, it is uniformly across all countries, which means that unless our industries actually actively compete with other countries, which will have a possible lower tariff, is only when a business situation can become pretty critical for an Indian exporter. But otherwise, really speaking, if everyone gets the same level of tariff, which is not actually happening, that's why the uncertainty is there. But just assuming that it's the simple.
Okay, Tushar, we seem to have lost your audio, so we'll try and reconnect. By the way, the markets have given up all their gains now. So we're nearly about 100 points off from the top. From the lows, it's still a recovery of more than 200 points, but the intraday high on the Nifty was a level of 24,956. So we're exactly 100 points off from the session highs. Remember, today is also the monthly expiry, so especially post 3 p.m., expect a fair amount of volatility. Stocks which have lost ground, one of them is Adani Enterprises, so that's down nearly 3.5%. It's breached the 200-day moving average. Shriram Finance has slipped into the red. Sun Pharma posts the numbers. Numbers were in line, but the bottom line has been hit by that impairment charge of 818 crore. Hindalco, Tata Steel are some of the stocks which have been hit. Midcap index too has slipped some more, now down nearly 450 points. But let's get a quick update on what's happening on the India-US tariff situation, even as US President Donald Trump announced a 25% tariff and penalties for procuring Russian arms. Sources within the government say that India is not jumping the gun on tariffs as yet. Abhimanyu joins in with what he's picked up. Abhimanyu?
On the US tariffs, sources have indicated that India is unlikely to jump the gun before getting any more clarity on the details of penalties and the associated duties which are going to be imposed by the United States from the 1st of August. It remains to be seen what kind of strategy would be formulated by the Indian government based on any further information which may come out of the United States with respect to the applicability of tariffs and also importantly on the applicability and the quantum of penalties which have been announced by the United States. Also, for now, the sixth round of negotiations for the first tranche of a bilateral trade agreement between India and the United States are slated to be held on the 25th of August in New Delhi. And it's also likely that trade negotiations via the virtual mode are going to continue between both the sides. While more clarity is still awaited, the strategy with respect to enhancing India's overall exports to the United States and also to different parts of the world, the strategy would be formulated in due course based on the dynamic set of developments which are still unfolding, and also importantly on the quantum of tariffs and penalties which are going to be announced by the American government.
Thank you very much for that. We managed to reconnect with Tushar. So Tushar, we spoke about the tariff and that situation, but on the earnings front, pretty much half of the earnings season is now behind us. What has been your key takeaway, and has it thrown up any opportunity in terms of portfolio management?
Yeah, I think that's a good connected question. What we can see is that some of the earnings have not come up to expectations. Some of them have been big misses. But we also have seen pretty significant increase in orders, especially the capital goods sector. So, for example, we see a significant pickup in those expected areas. I think it might just be a lag effect again. And I'm very, very confident that the second quarter, which is ending September as well as into the third quarter, ending December, is where we'll see the actual momentum on a YOY basis come through. So while the first quarter has been a little bit mixed, I think the second and the third quarter seem to be positioned very well. So that actually has opened up a significant amount of opportunity. We can see some of these stocks having corrected 20-30% across the board. And that, because of weak numbers, gives us a very significant opportunity to enter at this time now.
Okay. Tushar, hi. Good afternoon. So I think this is the kind of market where people are also looking for areas of possible safety. So till now, pharma was providing a decent safe haven. Pharma stocks have actually done well in the last couple of weeks in all this uncertainty. But now we still don't know what they're thinking on pharma. What do you feel about this space, whether it's intermediaries or generic companies? Or would you prefer playing, say, hospitals and healthcare?
Yeah, that's an interesting side question, because in India, actually, the pharma sector has been the largest market share in terms of market cap available to buy for investors. But if you look at the entire therapy end to end, then hospitals will start to play a significant part in the overall healthcare space. I mean, including diagnostics, including all of these, I would say, ancillary companies to the pharmaceutical sector as such. But having focused on pharma for long, we don't tend to think of that sector beyond just the companies which make formulations. I think there is enough opportunity across the space, especially even in hospitals and even in diagnostics.
Okay. Okay, all right, just hold on to that thought. We have a very, very important flashes that are at the bottom of your screen, and this will be viewed very, very positively for JSW Steel. The reason is that the Supreme Court is saying, the order is saying, they're allowing the review petition, filed by the lenders and JSW Steel. And they're saying that, prima facie, they are of the view that the impunged judgment does not correctly consider the legal position as laid down by previous Supreme Court judgments. They go on to say that this is a fit case where the judgment needs to be recalled, matter needs to be considered afresh. Remember, this is actually a relief, because the review is going to be considered and the commentary as well is in favor of JSW Steel. They are the ones that had taken over the asset 5 years or so ago. They are the ones who had put in a lot of money, and they are the ones that turned it around as well. So we'll wait for Rashmi to join us out. But I think, this is definitely a relief to JSW Steel and that appeal that they have made, with regard to the comments that are coming in.
No, absolutely, not just JSW Steel, and like JSW's, I think lawyers are saying,
logical and rational that
for the entire IBC process, because this judgment or the earlier judgment had become so huge, because it was not just about JSW Steel and the amounts that they've put up to turn this asset around, but what happens if an IBC proceeding can simply be disrupted like that. So I think that's exactly what they're saying. That's what the lender submission is as well. So it's a win. I mean, for the time being, it's a relief and a small win for JSW Steel, for the lenders of Bhushan Steel and Power. And that's what the lenders are saying, that the plan had been approved by the NCLT and NCLAT. The company had been revived. So the court rejecting the resolution plan was only due to non-adherence of a timeline. So this needs to be reviewed. The Supreme Court has agreed that indeed the review petitions will be admitted. So huge relief for JSW Steel, for lenders, and for the overall, I guess, financial community, as well as people who are involved in IBC as well as restructuring, that this has not been suddenly thrown out entirely. We'll get in Ashwin as soon as he can step out. He's been, of course, hearing all of these proceedings live as they're happening in court, and we'll get to him as soon as it's possible. But Tushar, many thanks for joining in. Good to have you on the show today. We'll let you go on that note. We are rounding up to 3 p.m. So last half an hour left, and it's gotten very quiet. The index is just about 1 to 3 points lower. Maruti numbers are also on the screen. The 3,712 crores, that's substantially higher. I mean, that profit
plus number looks, 20% beat on the bottom line.
That's a huge bottom line beat. So we'll look at the EBITDA line. We'll look at what overall numbers for Maruti are saying. Let them come through. The revenue is also above estimates. This is looking actually substantially higher, and the stock is shooting up as we speak. So, yeah, some good news coming in, at least this afternoon. Let's do one thing. As we get the margin calculations going with Maruti, let's quickly hop across to Mangalam. This is the all-important monthly, F&O expiry that's playing out. And it's a little volatile right now as we get into the last half hour. Mangalam, over to you. What are you looking at?
Well, it's gotten relatively quieter as we move towards the last hour, and that's because a lot of the volatility is now out of the way. This morning we opened much lower, but after there was this big recovery that we saw. And more importantly, if you take away all the news pieces, just look at the levels. The Nifty's lows have moved higher. All of June we saw lows of 24,500, slightly below 24,473 thereabouts. But all of July, the lows have been maintained between 24,600 to today's low as well, 24,635. From there, we've moved. So this is a very important zone as we look into the August series going forward. Today, the good part is that, one, there was some short covering that took place in the morning. But more importantly, it's the domestic-facing sectors which are now doing a lot better. So if you look at the FMCG stocks led by HUL's numbers, or you look at the Nifty Bank as well, they have shown a lot more recovery given the volatility that we're seeing in the global environment right now. And Maruti's numbers, like you just spoke about, look better than expectations. So the focus moves back to domestic themes itself. Now, as we move towards the business end of the expiry, the street believes that the market would be in this range. What is this range? 24,900 on the Nifty. The call has seen a fair amount of writing. So the expiry is likely to be between 24,900 to 24,850 because the 24,850 put 2 is fairly active in today's trading session. Were we to stay above 24,900 for an extended period of time after 3 p.m., then maybe the 24,950 level comes up. But that is unlikely because, the way the market is right now, it tells you that the option writers are pinning themselves between this very narrow 50-point range. Remember, Nifty in July series is down almost 670 points, and that's after 5 series, or that's the first series loss in 5. After 4 series of nearly 3,000 points of gains, we've seen a loss in July, and this is the first July, series where we've seen a loss in the last many years as well. So what are the triggers for the August series as we start tomorrow? We have the global uncertainty that still is underway, global updates around tariffs, RBI policy outcome the week thereafter, remainder of the first quarter results, and finally the festive season kicks off as well. So what the commentary is around domestic sales around festive season would have all these domestic facing stocks in focus.
Okay, all right, thanks very much for that, Mangalam. So far it's okay. And yeah, I mean, from being absolutely flat at 3 o'clock, now we're about 60 points lower. So let's see how this plays out, but not too much of a decline coming through. On Maruti, by the way, I mean, this is a complete top-down beat. The revenue is above estimates. The EBITDA is 300 crores higher than what the estimates were. Maruti's EBITDA is now almost touching 4,000 crores. And the margin, it's, of course, down year on year. It's fallen quite a bit year on year. But again, it's above the 10.2% that we were expecting. They've done about 10.4%. So it's looking good. We'll have to wait by to see if, they've done slightly better on realizations. And some things definitely work for them this time around. And that stock has shot up smartly. I mean, big move on Maruti, almost 1% higher. I think we'll just try and get some more, reactions to play through. But yeah, this is good.
Yeah, but the 3 p.m. move is playing out for the Nifty because Maruti's moved to the high point of the day. It can do little with regard to the weight. The 3 p.m. move is the reason that the Nifty has suddenly seen a sharp slip, in the last few minutes. Just pull up the intraday chart on the Nifty. And I think the Nifty Bank as well. Quick 100-point decline is what we're seeing on that one. Let's get the intraday chart. L&T, that's a large name, and I think that should come up for you on the screen. And maybe you get a couple of other names like an ICICI Bank almost in the red. heavier weights slipping. Well, we'll slip into a short break. On the outside, Nimesh is joining in. He'll be telling us what he's picking up in D-Street chatter with a couple of stocks as well. We'll also go to our technical expert who will tell us what to buy or sell.
Welcome back. Slipping some more now for the markets, but one stock bucking the trend is Maruti Suzuki on the back of good set of numbers. Sudarshan now joins in with the key highlights.
So it's a healthy set of earnings. If you look at the earnings, you might see the revenue growth is just 1 or 2%, but the expectations are very muted in this current environment. And it seems that what has helped the company to report a healthy set of earnings is the export segment. If you remember, for FY26, company is expecting a growth of almost 20% in the export segment. And price realization has seen a significant improvement both year-on-year and on a sequential basis. Our expectation was that it might see an improvement of 1 to 2% both year-on-year and sequentially because of the recent price hike that company had taken. But if you look at the realization, it's up 13% sequential, 7% year-on-year and 8% on a sequential basis. So while domestic business has been under pressure because of the demand concern that company has been facing in the entry-level segment, it seems that export segment has seen a major boost, and that has helped the company to report a healthy set of earnings. Profit was up almost 2%. It has come at 3,712 crore. Revenue was up 8%. It has come at 38,414 crore. EBITDA too has increased by 11%, and margin has fallen year-on-year, but it's higher than our expectation of 10.2%. It has come at 10.4%, down almost 200 basis points year-on-year. So overall, healthy set of earnings in this current environment by Maruti.
Okay, all right. Sudarshan, just hang on. We're also getting Dabur's numbers on the screen. I think we'll just put them back up. First glance, even Dabur looked okay.
In line.
Yeah. Profit up 3%, 508. Remember, Dabur's already in their first quarter commentary. They already said that it's the beverage portfolio that's still, slightly subdued and soft. But other parts of their business have been doing okay. Our volume growth expectation is either negative 1%, so no growth. I mean, slight decline in volumes, or best case, just about 1% growth. So we'll see. Wait by for that. But as we're going through all these numbers, very quickly on, I think we have Ashwin Patil joining in since we're discussing Maruti. Do we have Ashwin? Yeah, Ashwin, hi. Very, very busy afternoon. So just very quick, broad thoughts, Maruti. It's been a little inspiring, at least in Q1. What is your read-through and what's your call on the stock?
Well, the revenues are, quite subdued looking, and if you look at the, numbers quite deeply, then you can see other income, which has grown almost double as compared to on a YOY basis. Also on QOQ basis, it is quite high. So, if you split that number, then the profit will be, in a lower range. That is, we can see a decline in the profitability. Also, you can see that the margins have declined on a, on a YOY basis at about 10.4%. So I think, there is nothing exciting about the numbers which I would see at this point in time because, already there is a lot of pressure from the domestic lower-end business. Also, though the exports are looking quite heartening, but the domestic, which is a big chunk of the overall, volume numbers, which are not really very, not very positive as such at this point in time. So I would say that the numbers are not really very great to look into it. There's a margin decline, there's a big element of other income. So, also the top line has not grown up to that extent. So, fine. I mean, the numbers are looking okay kind of to us from, on a prima facie.
Got that. Ashwin, thank you very much for joining in. Point taken. Margins are down 230 basis points year on year, and the profit growth is largely led by the jump in other income. The profit has gone up by 700 crore year on year, while the other income has gone up by 800 crore. So that explains the beat on the bottom line. But it's time now for a D Street segment. Nimesh is now joining in with his insights.
Hi, Rima. Hi, Rima. So normally we see that volatility because of the expiry day. So that's playing out in the last 30 minutes of trade. But given that, we had such a big negative news with the US tariff, still the way markets have reacted, it's kind of positive, and also because of the positioning, right? I mean, the FIs were extremely net short on the Nifty, and you're seeing a bit of short covering in today's market. So that's playing out as far as the expiry is concerned. Flows are not much to talk about because of it's an expiry day, so it won't have an impact much. I guess what this tariff means is will add further uncertainty, as well as it alters the long-term narrative of India being a safe haven, because we don't know exactly what's the kind of penalty which is going to be levied over and above the 25% tariff. So that's something which will add to the uncertainty in the near term. I guess from a flow perspective or from a sector perspective, OMC is something to watch. You've seen a bit of a recovery from the intraday lows, but again, the LPG subsidy is a big trigger for the stocks to watch out as far as the OMCs are concerned. Technically, I think 24,600 is a big support on the downside, so that's to watch out for. And for the time being, 25,300 is acting as a big resistance as well. So Nifty has been in that range for a while now, but it needs to break out on either side for a decisive move. But today, I think the volatility is largely because of the monthly expiry and the fact that we had this big negative news coming in as far as tariffs are concerned.
Well, that's right, Nimesh. And that 24,950, which I had pointed earlier today, proved to be the resistance mark from where the markets U-turned. What about individual stocks? What do you have on your radar?
So the first stock on my list is Kajaria Ceramics. That's been buzzing in trade today. In fact, post earnings, despite the few upgrades, the stock has actually underperformed or been in a narrow range. Looks like there is a selling pressure going on from a larger FI. That seems to be largely over. And I understand one large family office has been a buyer as well in Kajaria at this level. So that's the first name. Second stock is Coforge. Within the IT name, it's not fallen much compared to the IT index or for that matter underperformed. Largely because there are buying flows is what I understand from larger FIs. So that stands out. Kotak Mahindra Bank is the third name. Well, the stock has recovered intraday sharply, but there are sell flows and also there is a big buzz of a large block coming in Kotak Mahindra Bank very soon. Remember, this block will be essentially from a large FI investor and not from strategic. So could be a potential FI seller in Kotak Bank very soon. And the last one is Union Bank. Within the PSU banks, Union Bank stands out today in terms of aggressive selling. So expect high delivery volumes, but on the sell side in Union Bank today.
Okay, all right. Lots of buzzers as always in a volatile market digesting what's been a big blow in terms of just global tariffs and those global headlines. By the way, the cabinet meeting seems to be over and a couple of central government schemes have been approved. There was a lot of, chatter, buzz and expectation that, of course, the cabinet is also going to discuss what's happened with tariffs and then maybe take a view. Now, we don't know if we'll actually get a formal statement from either the Commerce Secretary or the Commerce Minister, but let's watch for this. But it seems the meeting is over and maybe in the second half, we'll get some more commentary on how India is looking at the statements that have come out from the US and, of course, the US president's social media posts today. Well, with that, let's get back to the market. Mitesh is back with us for a final call. Mitesh has been volatile, topsy-turvy, again down about 0.3%. What's the final advice and final trades?
On the advice side, I think, very clearly, as I said, the index is not doing much. So avoid the index. But on stock side, I have STBT on Gas Authority. Keep the stock at about 179. Maybe look for a target of around 175 for tomorrow. That's one stock, which gapped down and didn't recover. While there's some positive traction happening on the charts of JSL Limited. So it's BTST with a stop at 688 for targets of 705.
Thank you very much for that. Let's quickly talk about Aurobindo Pharma and the acquisition that they've made. Ekta joins in.
Well, yes, Aurobindo Pharma is going to be acquiring US-based Lanitco LLC. It is going to be for a deal with an enterprise value of around $250 million. They are basically the manufacturers and suppliers of complex generic pharma drugs, including controlled substances. The acquired portfolio mainly focuses on non-opioid controlled substances, particularly in the ADHD segment. Now, Aurobindo, remember, has a limited presence in that segment, so hence it should be positive. They also have a GMP facility in Indiana with an annual capacity of around 3.6 million tablets. FY24 sales stood at around $286 million versus $314 million. So Aurobindo is probably going to benefit because they'll get an addition of around $300 million to the top line immediately. Gross margins, however, are lower than what Aurobindo records, so that's something to watch out for. The estimated EPS accretion is around 5 rupees from the deal.
Okay, all right, got it. Thanks very much for that, Ekta. With that, let's move on. Welcome in our next guest on the show. Amrish Baliga is with us to take us through the final stretch of what's been a real news-heavy day. Amrish, we'll talk about earnings, tariffs, all of that in a bit. But I think your stock pick today is an interesting company from the consumer space, Varun Beverages. Tell us what makes you optimistic on Varun.
See, that's the second largest franchisee of PepsiCo globally outside US. Indian footprint is about 26 states and 6 union territories. Close to 90% of PepsiCo's India volume comes from Varun Beverages. And they have franchisee rights in about 10 countries, distribution rights in 4 countries. In 2024, they acquired Bevco of South Africa, and this has helped them expand their footprint in the African region. And last quarter, they made a Sri Lankan acquisition. In India, they have about 40 lakh retail touchpoints and growing at about 10 to 12% per annum. But the available retail touchpoints is about 1.2 crores in India. So there's a huge headroom available for expansion. And if you look at the Q1 earnings, they were better than expected. Sales volume, although it dropped a bit, but EBITDA margins improved 82 bips. And international markets, especially the African markets, helped it perform much better than what the analysts were expecting. Expected revenue growth over the next 3 years should be 20% CAGR. PAT CAGR should be about 25%, primarily driven by the international growth. Expected EPS for calendar year 27 would be about 15, and my target price is 645 for this. And when you talk of tariffs, I think this is one stock, one company which is possibly tariff-proof.
Got that. Ambrish, any thoughts on Sagility? It listed recently. It's like a tech pharma sort of a play, caters, to the US. And numbers were good. The company reported a 23.1% year-on-year revenue growth. Of that, organic growth came in at 15.4%, which is ahead of the management's low to mid-teen growth outlook. And plus, they went ahead and raised the margin guidance slightly higher. Now, it's trading higher than the issue price, which was about 30 rupees. But at this price, does it make sense to look at Sagility?
Yeah, looking at the earnings clearly, I think, if they continue at this pace, I think the next couple of quarters, you should see the valuations. The current valuations seem extremely attractive. So I think there's a decent, headroom for this stock to move up. I'll not be surprised if we see levels of about 58.60 over the next possibly 6 to 8 months.
What about Ambuja Cements? Ambrish, the numbers look pretty good. The stock, I think, has rallied 15-16% in under 3 months. The stock has come in for some profit taking. Your view around the 600 rupee mark?
If I see a further correction from here, it would clearly be a buy, because just not Ambuja, I'm talking of the cement sector overall. What we have seen in the past couple of years is the volume expansion, but not too much of margin expansion. But going ahead, there would be demand-supply mismatch, and because of which we should see the margins improving, because it takes a decently long time to set up a greenfield or even a brownfield expansion. A greenfield takes, anywhere between 30 to 36 months, if not more. Brownfield takes about 24 months. So there would be some amount of mismatch going ahead. So because of which I expect the margins to improve.
Stay on, Ambrish. Need to get into a break. And remember to tune in to all our viewers to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts, their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime, 12 noon for the Global Reset, 1 p.m. for the Big C, Global Lens, 8:30 p.m.
Welcome back. Just under 5 minutes before the day's action closes out, it's a 100-point drop on the index. So we've not gone back to the morning lows, but we've not been able to hold at the flat line either. And that's how the story is. It's been a decent day for actually FMCG earnings. I mean, Lever is going home as the top winner on the Nifty. Let's pull up Dabur as well, because like we just saw a while back, Dabur's numbers are not bad at all. In fact, looking at the final tally, the margin flat at about 19.6. The revenue growth, as was expected, is very, very flattish, 1.7%. But there's no fresh disappointment, at least, from Dabur. Yeah, so those are some of the numbers that are on your screen. Let's quickly get Ambrish's take on this. Ambrish, FMCG, would you look at anything positively?
Yeah, absolutely. In fact, I've been positive on FMCG for a while. And the best part was managements of most of the FMCG companies have been cautious. So naturally, the analyst expectations were tapered down, especially of Dabur. And compared to that, we are seeing the performance actually meets expectation or slightly better than expectations. And now looking at the tariff issues, I think people start looking at sectors which would be least affected. And clearly, the domestic consumption story will be the least affected because of tariffs. So I think one should be looking at stocks like Dabur, HUL, Emami, HUL. I think these are the ones to be looked at. And also Jyoti. I mean, these are the 4-5 stocks where we are positive on.
Indus Stars, Ambrish, second quarter where shareholders have not got that, a dividend or any buyback. They were so hopeful that once they start, the company started getting money from Vodafone Idea, the receivable situation improved, the shareholders would get rewarded. But that's not happened yet again.
Yeah, that's what is quite surprising, and because of which we are seeing the reaction for Indus Stars. I mean, after performing decently well in the past couple of months, we again seeing that disappointment, because of which the stock I think would underperform going ahead. So I'll not be surprised if we see levels of about 320, 330 for the stock quite soon.
Any view on Shilpa Medicare, Ambrish?
No, Nigel, I don't track Shilpa Medicare, so I really can't comment on that.
All right. Just pull up the intraday chart out there. That's one of the stocks actually from the broader markets that was trading, I think, with a bit of a cut. Suddenly it made a big spike up. So I think we should get the intraday chart of that particular name up for you on the screen. Wondering what's going on there. Did see a bit of a spike. Jaiswal Neko, that's the other one, moving again on very, very large volumes. But that ARC disclosure is important. They still hold closer on 5 crore shares out there. Amrish, any view on HEG? I spoke to the management earlier today, and they are talking about better times ahead. It's a very volatile business, so that's the issue. The stock actually, from the top, it's halved its gains. Any view on this name? Graphite India, the electrode players on the whole?
See, I think the whole game is like looking at supplies from China. And if China starts dumping that in the market, we see that the margins of all these players actually reduces. So it's more of I wouldn't say it's a cyclical play, but I think one needs to keep a close tab on what China is doing. But for the time being, the space still looks good, at least from a short to medium term angle. So from that point of view, one can hold on. But longer term, like I said, clearly depends on the China play.
Okay, very quickly, Ambarish, NSDL, tomorrow's the last day to subscribe. It's the big daddy of CDSL. Would you recommend subscribing?
Yeah, surely, because once listed, I clearly see that there will be some investors who would possibly reduce their positions on CDSL and possibly buy NSDL. Unless, of course, it lists at a very decent premium, which I don't see that. Possibly it could be a 10 to 15% sort of a premium. Even at those levels, it would be cheaper to CDSL valuation-wise. So there could be some shift from CDSL to NSDL.
Okay. All right, Ambrish, thank you very much for taking us towards the end of day's play. And what we have is a 100-point cut, which is not bad, considering the headlines were so negative, 25% tariffs levied on India with the threat looming of more penalties. This is not a bad close from the bull standpoint, perhaps. It's less than a 0.5% decline. So let's talk about what got hit. Adani Enterprises, 4% lower. Tata Steel, Sun Pharma, Dr. Reddy's. The pharma stocks are weak because you don't know what's coming next and if there's something more in store for pharma. So that definitely has to be taken on board. Reliance was a drag for the bulls today, 1.5% down on that stock. Coal India, Adani Ports, these were some of the stocks on the weaker side. Even Hindalco, for that matter, losing some more ground. Maruti saw a very volatile day. I mean, after the results came in, initially the stock got very excited, but then as it dawned upon investors that this is because of other income, then some of that excitement fizzled out. Finally, the stocks ended just about 1% lower. On the winning side today, you've got HUL, you have Eternal, you have ITC, you have Nestle. So FMCG and consumption, that's standing tall. And Jio Financial Services, where promoters have pumped in additional money and they're increasing their stake, that stock was up almost 3%. The Bank Nifty, by the way, not much help. Neither IT nor banks, not much help. Bank Nifty is down about 0.25%. That's the large cap screen.
Well, Midcap Index ends with a cut of about 1%, advanced decline ratio 1:2, but lots of Midcap reactions. You had Keynes Tech, 10% upper circuit, Sagility, HEG, Greaves Cotton. So lots of activity on the way up, on the way down. Indus Stars under pressure, Hindustan Copper weak, Aarti Industries, Brigade Hotel Ventures too had a subdued day one, ending below the issue price by nearly 5%.
Well, on that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.
Market fails to hold the intraday recovery and closes in the red after Trump's tariff in India. Nifty ends the session below 24,800 after recovering levels above 24,900. Most sectoral indices in the red except for FMCG, which gains over 1%.
Tata Motors is set to buy Italian CV maker Iveco for €3.8 billion to gain access to key technologies and build a presence in the Europe and South America market. The move precedes demerger of Tata Motors CV business.
Shares of HUL rebound from lows after reporting its June quarter numbers, which was in line. It's the top Nifty gainer in an otherwise weak market. Sun Pharma skids after reporting with its Q1, which was also in line.
Hello and welcome to Markets Forward on CNBC TV18, your go-to show where we aim to get you all key data points to gear up for the next trading day, what's happened in today's trading day as well. I'm Vinny Motiwala. With me is my colleague Ekta Batra as well. Ekta, an interesting day we could say, right? Given the handover that we have coming in. Today what we're seeing in terms of a close for the Nifty 50, it's not bad. 25% tariff, those announcements there, that caused a bit of a jitter in early morning trade. We saw the recovery, but did manage to hold on to that. 24,800 below that is what the Nifty closed.
Well, Vinny, yes, definitely disappointing, you would have to say, in terms of a close. But we would have to say that overall, the market was resilient despite the bad news and the expectations that we had overnight in terms of what the markets could do. So the Nifty ended 86 points lower. It was below 24,800. We had the mid-caps, which took a broader brunt, down around 0.9%, and the Bank Nifty, which reversed a couple of its gains that it saw, so down around 0.3% for that one. HUL, however, was the top gainer on the Nifty today, so that managed to buck the trend with a gain of around 3.5%. But let's tell you what we have lined up on this show for you today. We start with the top movers and shakers of the day with Vivek. Also on our radar, HUL, Sun Pharma, which came out with their Q1 numbers, and Tata Motors was under pressure after the company announced their decision to acquire Italian CV maker Iveco. Last but not least, we delve into the key market events to watch out for in tomorrow's trading session.
Okay, and let's go across to Vivek for our first segment for the day, and that is the top stocks and top movers and shakers of the day from the big wall. Vivek, over to you. A lot that has happened today.
Absolutely right. Thank you so much for that. Well, you did see a session that you started off significantly lower, then the breadth improved significantly, and again towards the last hour, you did see some selling pressure emerge, especially in the broader end of the markets. In terms of the top movers, you have to look at HUL. Numbers came in early during the trading session. The numbers were in line to slightly above what the street was anticipating. Commentary was positive in terms of margin trajectory improving. Stock higher by over 3% today. HEG was the other stock, one from the graphite electrode space. That particular company gave a very strong set of numbers, and the management also indicated to us earlier today that they are likely to take price hikes towards the end of the year. The other stock on the radar, one from the EMS space, Keynes Technologies. Now, this particular company gave in line to strong set of results, and in the conference call or in the analyst meet, they actually reiterated the very strong revenue trajectory that they had anticipated for FY26. Street clearly took positive signs from that particular commentary. Imami and in fact the entire FMCG pack, strong set of results, very positive commentary in terms of margin improvement. That stock higher by 6%. And Sagility, one stock from the broader end of the markets, slight upgrade in terms of EBITDA guidance. That is something that the street like almost higher by 10%. On the other hand, quite a few laggards as well. Hindustan Copper, one of the top laggards in the session today. Overnight copper prices actually saw a 20% dip, and the stock took cues from that particular fall, down by almost 6%. You did see Industar, while the numbers were in line, street clearly upset by the lack of the dividend, on also no clarity in terms of when will be the next dividend or the buyback. The stock lower by 6% today. CAMS, this particular capital market play, did see a weak set of results. Multiples getting cuts as far as brokerages were concerned, almost 4% lower. This is after a significant underperformance going into the results. Apar Industries, remember this particular company that manufactures conductor exports largely to the US market, the top laggard as far as NSE 500 was concerned. And Sonata Software, this particular stock, mid-cap IT space, muted set, EBITDA margin missed estimates. Soft quarter for the company, down by over 5%.
Okay, all right. Thanks, Vivek, for that. Now, let's go across to our independent market expert, Amrish Baliga, and Richard Jain of Motilal Oswal Financials to get more perspective in today's trading session. Amrish, as well as Richard, thanks very much for joining in. Well, Amrish, let's start with you. It was a choppy day. The Trump tariffs really weighed in terms of sentiment. But overall, do you think that we did better than what at least the expectations were?
Absolutely, because the expectations were that possibly we will have a gap down opening, which actually happened. But then post that, it was expected that we could see further selling coming in, and we could see much lower levels. But instead of that, we saw a spirited recovery, and then possibly a small sort of a correction. So I think. The worst seems to have been priced in unless we have more bad news coming in from US. But then I think this news has been digested for the time being. We know which are the sectors which will get affected. So I think, I really don't see too much of a downside from here. Possibly 24,500 would be extremely good support for the markets. So I really don't see breaking that.
Okay. Richard, what's your view coming in on the markets as well? What are the levels that you are keeping an eye out on in terms of the Nifty as well as the Bank Nifty? We did manage to touch those highs again in intraday high of 24,900. But then we've seen a fall coming in. So resistance, support, what are we keeping an eye out on now?
Yeah, very good afternoon, Vinny. Good afternoon to everyone. Well, in last 1 month, we have already seen a price-wise corrective phase in the markets. If you look at exactly a month ago at the end of the June, Nifty had made a high of around 25,650, and today we are around at 24,650, 700 mark. So there has been a 1,000-point price-wise corrective phase in the markets. Now 24,600, 24,500. This remains a very important support in terms of previous swings low supports as well. And the kind of price action that we have seen today, in spite of such negative sentiment, before the market started, we managed to hold about the 24,600 mark, which was the low couple of days ago. So I think that markets have done most of the price-wise corrections in last 1 month. We could see some time-wise corrective phase in the short term. So maybe next 1 or 2 weeks could be the phase where markets would remain within a range only. 24,600, 24,500 would be acting as a very crucial support, while 25,000 remains a resistance which needs to be broken out. So maybe some time-wise corrective phase still could be seen in next few days.
Okay, all right. So that's on the technicals of the market. Well, I'm looking at Sun Pharma in today's trading session, and that is because the company did report its Q1 numbers in the second half of the day. Well, overall, you'd have to say that the revenue was a shade below estimates. It was up around 9.5% on a year-on-year basis. The US markets were in line, but the margins improved all the way to around 31%. The profit was impacted by a one-time loss of around 818 crores on account of drug discontinuation and impairment. Margins, like I mentioned, were improved year-on-year as well as Q-on-Q. US was largely in line at $473 million. Which is around 29% of their sales. India did well. It was up in double digits. Their global innovative medicines, which is basically the specialty business, was up around 17% year-on-year and came in at around $311 million. API did well, and the R&D business was around 6.5% of their total sales. So overall, good performance which came in for Sun Pharma, you would have to say, especially on the margins. Revenue also up around 9.5% this quarter. Amrish, any thoughts on this?
If you look at the numbers overall, the numbers were, quite decent. But then the issue is exceptional expenses. Because exceptional is no longer exceptional, because you keep seeing this every 3 or 4 quarters. If you talk of exceptional, if it comes once in 3 or 4 years, understandable. But in case of Sun Pharma, we keep seeing that every 3 or 4 quarters. So I think that's something which is bothering the investors.
Okay, all right. Well, Richard, what about you? What's your sense in terms of the technicals of Sun Pharma and the entire Nifty Pharma Index, which was in focus today as well?
I think for Sun Pharma, still the trend remains sideways only. If you look at just historical data, then at the start of the February month this year, the stock was trading around 1,700. We are starting the August month and still the stock is at same 1,700 levels only. So last 6 months, we have not seen any kind of trended phase coming in Sun Pharma. So as of now, until the stock gives a breakout above 1,800, the technical trends would still be range bound only. But yes, overall, the pharmaceutical stocks have managed to do well in last 15-20 days, where we have seen certain stocks such as Glenmark, Laurus Lab, had doing quite well. So I think Nifty Pharma as a space looks positive, but very selective stocks within that sector which are doing well, especially more focused on the healthcare space. hospital stocks such as Apollo Hospitals is there, Fortis is there, KIMS is there. Now, these are all stocks where the momentum actually is much on the positive side. I think pharma and as healthcare as a space should do well, but healthcare stocks should continue its relative outperformance.
Okay, that's a word coming in there for the healthcare space. But let's just focus and talk about the auto sector. We have Tata Motors that is set to buy the Italian CV maker Iveco for 3.8 billion euros. The management says it is a very strategic and meaningful acquisition. What more are the details and the key takeaways? We have Sudarshan joining in with us to give us the highlights of this deal. Sudarshan.
So it's a very important deal as far as Tata Motors is concerned. Company has announced that it's going to acquire Italian Iveco Group. So Iveco Group has two major businesses, auto business and defense business. So defense business will be delisted. Tata Motors is acquiring Iveco Group's auto business, and that will be acquired for 3.8 billion euros. In rupee term, it comes around 38,000 crore, and transaction is expected to be completed by April of 2026. So what does it bring for Tata Motors? First, it strengthens its portfolio by securing access to emerging technologies. Second, it creates a platform and allows company Tata Motors to compete on a global scale. And third, it diversifies the exposure and reduces the impact of cyclicality if company has a global presence. So suppose that there is a down cycle in India and in European or South America, there is an up cycle, so company can benefit. Now, Iveco Group currently has 12 to 13% market share in LCV in Europe and 8 to 9% market share in M&H CV segment. Also, it has market share of more than 50% in intercity bus market. Apart from Europe, it also has market share in South American market, where it doubled its market share from 4% in 2023 to almost 8% in 2024. And Tata Motors management is very bullish. It believes that Iveco Group's revenue, which currently stands around 3.8 billion, it will rise to almost 17 billion euros in next few years. And it believes that it's very strategic in nature. And as far as synergy is concerned between two companies, Tata Motors and Iveco, it will benefit and it will be positive for shareholder. So, and fundraise is concerned, company is saying that it's going to raise fund in next 18 months. And also, this will be funded by syndicated debt. So overall, I believe that it's positive for Tata Motors because both CV business and PV business will be demerged, and most probably it will be done by the end of this year. So after once the CV business is demerged, then Iveco Groups would be taken under CV business of Tata Motors.
Okay, all right, Sudarshan. So that's on Tata Motors. Well, eventful day in terms of news. Then Ambrish, Tata Motors, what would your view be?
Because of for this acquisition, people are reminded of how long they took for JLR to turn around, and I think because of that, we have seen the correction. But I would surely utilize this correction to buy in because Tata Motors has proved itself doing these large acquisitions and turning them around, and which is exactly what will happen as far as this is concerned. So any sort of a weakness should be utilized to buy. And I think, going ahead, that demerger of the passenger cars, I think that also should be positive for the shareholders. So overall, I'm bullish on Tata Motors.
Okay, you're bullish on Tata Motors. That's what you are highlighting. Ruchit, any word on Tata Motors as well from you?
Technically, I think still one should wait for surpassing 710, 720 kind of resistance, because if you look at the stock made a high of around in last July it made a high of around 1170, and post that whatever the auto space has done, the stock has been an underperformer. So I think still no signs of any kind of resumption of the uptrend. So unless we see good volume based buying happening over there, I think the stock could see some more consolidation at least in the short term.
Okay, all right. Well, HUL posted largely an in-line set of numbers, while profit and revenue rose, margins declined year on year. Earlier in the day, Manglam, that's when the numbers came out earlier in the day. Manglam is here, however, to tell us more about it.
Well, HUL indeed is the top Nifty gainer today after reporting what was largely an in-line set of numbers, because a couple of internals do suggest that perhaps the worst is behind for the consumption sector and at the same time the consumption major as well. Why do I say that? The company reported an underlying volume growth of 4%, the higher end of street expectations of 3 to 4%, revenue EBITDA largely in line. The net profit was further aided by lower tax expense as well. But the internals out here tell you that, demand is improving. The management in its commentary post the results did say that there has been gradual improvement in demand, and the underlying macros do suggest that that is sustaining. So on the demand side, it is good. On the company's own parameters, they've said that over the last 5 quarters or so, they've gained market share in some of their growth categories, and they will be chasing growth as the share of premium also has increased by about 5 percentage points over the last couple of years. More than that, the acquisitions of both Oziva and Minimalist have aided nearly 1,000 crores to the company's consolidated top line. On leadership changes, Rohit Jawa did indicate that, it's been a long time that he's been working for, looking forward to the next phase of his life, a decision that was made collectively by both the company and him, and believes that Priya Nair is ready to take Unilever to the next leg of growth. Ritesh Tiwari did say that he's currently the CFO of HUL, and if that changes, he will definitely inform the exchanges. His role, obviously, is to transition or help the leadership transition of the company as it moves from Rohit Jawa to Priya. But importantly, along with demand and growth of the company, the raw material environment is fairly suitable as well. They are saying that they're beginning to see some signs of softening in key commodities, so gross margins will improve from here on, and the company will plow that back into ad spends and brand building to support further growth from here on, which will largely be volume-led. The street likes that, the stock doing well.
Okay, thanks for that, Mangalam. But we also had Dabur that reported their numbers as well. This was also an inline set of numbers that came in from the company. Revenues came in at 3,405 crore rupees. Margins was around 19% this time. And the management says that unseasonal rains impacted the beverages as well as the revenue, excluding summer-centric products. Now, also adds that excluding the seasonal portfolio, volume growth was up 2% this time. So Dabur also saw a bit of an up move after the numbers were reported. But there were a whole host of earnings also during the day and post market close yesterday as well that we saw coming in. Upasana is here to highlight those key earnings for us. Upasana?
Well, first up, let me start with Hitachi Energy. Overall, it's a miss across the board. The revenue saw an uptick of 11% on a one-year basis. Margins stood at 10.5% versus the poll of 11%. Now, company told us on the US tariff impact, that exports to US is very low at this point of time, and it is not concerned about the tariff impact on the company. Next up is Interglobe Aviation. The number misses the estimates. The revenue is up just about 4% on a one-year basis, and EBITDA margin is down 170 basis points at 28%. Company tells CNBC TV18 that it is hoping for a better growth in Q3 and Q4, and it maintains the capacity guidance for early double-digit for the full year FY26. Next up is Jubilant Ingravia. The net profit is up 53% for this counter. The revenue is up about 1.3%, and margins has also expanded sharply from 10.8% to 13.7%. Now, specialty chemical segment continues to perform strongly, aiding the margin expansion here. And lastly, Indus Towers was also in focus today as the companies reported a revenue growth of 4.3% sequentially, and EBITDA margin is a big miss. The EBITDA margin stood at 54.5% versus 57% sequentially, and PAT has also declined 2.4% sequentially, which is why the stock was under pressure today. So all in all, we saw a whole host of result reactions playing out today.
Okay, all right. Well, on that, thanks, Upasana, for that. On that note, we'll take a short break, get you the top corporate voices along with key market events to watch out for on the other side.
Welcome back to Markets Forward on CNBC TV18. Now let's get you some top corporate voices from the day that we had. Keynes Technology is the first one. The stock surged in trade after reporting a strong Q1 number. The management was upbeat on the profitability. It expects good increase in terms of profitability across different sectors and adds that the guidance for FY26 remains intact. It is optimistic about that by FY28, that $1 billion target of revenue is what it will achieve.
Well, that's not all. We also had the management of HEG on our channel says US is an important market for the company, as around 10 to 12% of the company's products go to the United States. It is anticipating 10% price rise going forward. The management is optimistic that its EBITDA margin of 27% will continue to improve. The stock has rallied in trade after reporting its Q1 numbers.
Okay, so it's surely been a very interesting day that we've seen coming in, where we've seen a lot of stocks rally based and on the back of their numbers as well. A lot of commentary that came in, Keynes, positive commentary on that front. We had Sagility that reported a good set of numbers as well. A lot of these mid-cap companies that actually managed to report a decent number coming in. But let's go across to Upasna, who's here finally to tell us which are the key events to watch out for in tomorrow's trading session.
Well, one of the most important event for tomorrow is the Trump reciprocal tariffs. Mind you that the new tariff rates come into effect tomorrow onwards. Now let us look at the other key economical data that is important for US markets. US will be reporting its unemployment rate data for the month of July, manufacturing PMI, non-farm payroll, and even ISM manufacturing data. Next up is Europe. Europe will be reporting its core CPI data for the month of July on a one-year basis. UK will be also reporting its S&P Global Manufacturing PMI data. And lastly, back home, India will be reporting its S&P Global Manufacturing data for the month of July and even foreign exchange reserve data. Now, let us look at the key results that we'll be closely watching out for tomorrow. Companies like ITC, Tata Power, MCX, Honeywell Automation, UPL, all these counters will be reporting their numbers tomorrow. And lastly, in terms of IPO, NSDL 4,000 crore IPO closes for subscription tomorrow. So all in all, looks like quite an eventful day tomorrow.
Okay, all right, Upasna. Thanks very much for that. On that note, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates. Stay tuned.
30% से 50% तक एडिशनल ड्यूटी लगाने की बात कही गई थी। 10% की बेसलाइन ड्यूटी 5 अप्रैल 2025 से लागू हो गई है। भारत पर एडिशनल ड्यूटी 10% के बेसलाइन टैरिफ सहित कुल 26% की घोषणा की गई थी। मूल रूप से फुल कंट्री स्पेसिफिक एडिशनल टैरिफ 9 अप्रैल 2025 से प्रभावी होने वाला था, लेकिन इसे शुरू में 10 अप्रैल 2025 को 90 दिनों के लिए स्थगित कर दिया गया और बाद में 1 अगस्त 2025 तक और बढ़ा दिया गया। भारत और अमेरिका ने मार्च 2025 में एक न्यायपूर्ण, संतुलित और पारस्परिक रूप से लाभकारी द्विपक्षीय व्यापार समझौते BTA के लिए बातचीत शुरू की, जिसका लक्ष्य 2025 के फॉल यानी अक्टूबर-नवंबर 2025 तक समझौते के पहले चरण को पूरा करना था। दोनों पक्षों ने 29 मार्च 2025 को नई दिल्ली में आयोजित पहली फिजिकल मीटिंग की चर्चा के दौरान द्विपक्षीय व्यापार समझौते की बातचीत शुरू करने के लिए विस्तृत टर्म्स ऑफ रेफरेंस TOR को अंतिम रूप दिया। इसके बाद दोनों पक्षों के बीच नई दिल्ली और वॉशिंगटन DC में 4 दौर में फिजिकल मीटिंग्स हुई हैं ताकि निर्धारित टर्म्स ऑफ रेफरेंस के अनुसार द्विपक्षीय व्यापार समझौते के अंतिम रूप के लिए काम किया जा सके। इसके अलावा दोनों पक्षों के बीच कई वर्चुअल बैठकें भी हुई हैं। सरकार हालिया घटनाक्रम से होने वाले प्रभावों का परीक्षण कर रही है। वाणिज्य एवं उद्योग मंत्रालय निर्यातकों और उद्योग सहित सभी हितधारकों से संवाद कर इस विषय पर उनके आकलन की जानकारी ले रहा है। सरकार हमारे किसानों, श्रमिकों, एंटरप्रेन्योर्स, उद्यमी, निर्यातकों, सूक्ष्म, लघु और मध्यम उद्योगों और उद्योग जगत के सभी हितधारकों के कल्याण की रक्षा और संवर्धन को सर्वोच्च महत्व देती है। हम अपने राष्ट्रीय हितों को सुरक्षित करने और आगे बढ़ाने के लिए सभी आवश्यक कदम उठाएंगे। मात्र 1 दशक से भी कम समय में भारत फ्रैजाइल 5 अर्थव्यवस्थाओं में से निकलकर दुनिया की सबसे तेजी से बढ़ती प्रमुख अर्थव्यवस्था बन गया है। हम अपने रिफॉर्म्स और अपने किसानों, MSME और उद्यमियों की कड़ी मेहनत के बल पर 11वीं सबसे बड़ी अर्थव्यवस्था से शीर्ष 5 अर्थव्यवस्थाओं में से एक बन गए हैं। यह भी अपेक्षित है कि हम कुछ ही वर्षों में तीसरी सबसे बड़ी अर्थव्यवस्था बन जाएंगे। आज अंतर्राष्ट्रीय संस्थाएं और अर्थशास्त्री भारत को वैश्विक अर्थव्यवस्था में एक ब्राइट स्पॉट के रूप में देखते हैं। भारत वैश्विक विकास में लगभग 16% का योगदान दे रहा है। पिछले दशक में सरकार ने भारत को विश्व की विनिर्माण केंद्र के रूप में बढ़ावा देने के लिए मेक इन इंडिया के अंतर्गत परिवर्तनकारी कदम उठाए हैं। भारत की युवक, कुशल एवं प्रतिभाशाली वर्कफोर्स भारतीय उद्योग की इनोवेशन और प्रतिस्पर्धा की क्षमता को निरंतर मजबूत कर रही है। पिछले 11 वर्षों के दौरान हमारे निर्यात में लगातार वृद्धि हुई है। तेजी से संरक्षणवादी होती दुनिया में भारत ने संयुक्त अरब अमीरात, यूएई, यूके, ऑस्ट्रेलिया और एफ्टा देशों के साथ पारस्परिक रूप से लाभकारी व्यापार समझौते किए हैं। हम अन्य देशों के साथ भी इसी तरह के व्यापार समझौते करने के लिए प्रतिबद्ध हैं। हम किसानों और भारतीय कृषि के कल्याण के लिए निरंतर कार्य कर रहे हैं, जिससे खाद्य सुरक्षा और समृद्धि सुनिश्चित की जा सके। सरकार को विश्वास है कि हम विकसित भारत 2047 के लक्ष्य की ओर समावेशी और सतत विकास की अपनी तेज गति वाली यात्रा जारी रखेंगे। आत्मनिर्भरता की ओर भारत आत्मविश्वास के साथ बढ़ रहा है। धन्यवाद। सर, आपकी अनुमति हो। सर, मैं अंग्रेजी में भी पढ़ना चाहता हूँ।
एक मिनट हो जाता। शून्यकाल बैठना चाहते हो, शून्यकाल करना चाहते हो, बैठिए। चला शून्यकाल। श्री वीके श्रीकंदन, चंद्र प्रकाश चौधरी, रामवीर सिंह विधुड़ी, श्रीमती कला।
Well, that was Commerce Minister Piyush Goyal speaking in Parliament. The first response coming in from the government. They did issue a statement yesterday, but this was the Commerce Minister addressing the issue of the tariff imposition announced by President Trump overnight, saying that India will take necessary steps to protect her interests, but also adding that 4 rounds of negotiations have taken place physically, several rounds virtually. Of course, not getting into details of what is expected from here on, only suggesting that the Commerce Ministry is in dialogue with exporters and with industry to understand the impact of the tariff imposition, and of course alluding to the fact that the Indian economy continues to be resilient. But that's the first reaction there from the Commerce Minister on the imposition of tariffs announced by President Trump. Let's talk about some of the other headlines that we are tracking this evening. President Trump ramps up the rhetoric hours after hitting India with a 25% tariff and a penalty for buying Russian oil. Calls India a dead economy, says he does not care about what India does with Russia. The White House does not provide any details on the proposed penalty when asked by CNBC TV18. Trump's new tariffs are likely to impact India's GDP by about 50 basis points, say brokerages. The new tariffs are likely to impact steel exports. Sources say the export of smartphones, laptops and tablets and pharma are exempt till at least the 14th of August. US is likely to hold a meeting to review the continuation of tariff exemptions. Hours after hitting India with tariffs, President Trump announces a deal with Pakistan to develop oil reserves. Says Pakistan could be selling oil to may in fact end up selling oil to India someday. Trump also inks a deal with South Korea imposing a 15% tariff. A roller coaster ride on Dalal Street. The Sensex and the Nifty rebound sharply but then failed to hold on to their intraday gains and close with losses. 39 out of the 50 Nifty stocks close in the red. The Supreme Court admits a petition seeking a review of its own judgment ordering the liquidation of Bhushan Steel and scrapping the insolvency process. The court observes this is a fit case where the judgment needs to be recalled and the matter needs to be reconsidered afresh. Tata Motors to acquire Italian commercial vehicle maker Iveco Group for 38,000 crore rupees. Plans to launch Iveco's products in India and other markets. This is the second biggest acquisition by the Tata Group since steelmaker Chorus was bought for $13 billion in 2007. Maruti reports a steady first quarter, meeting muted expectations. Revenue up 8%. Other income boosts profits. Margins contract by over 200 basis points, but in line with estimates. HUL meets estimates in Q1 as it gears up for a CEO transition in August, with Priya Nair succeeding Rohit Java. Domestic volume grows by 4%. The management says it expects a gradual recovery to sustain.
Microsoft beats estimates in Q4 with $77 billion in revenue. Annual revenue from cloud computing hits $75 billion. Meanwhile, Facebook parent Meta beats estimates thanks to strong advertising revenue. Mark Zuckerberg says super intelligence is now in sight. The Federal Reserve keeps key interest rates unchanged despite pressure from President Trump. Chairman Powell gives no hint on the future of rate cuts. Two governors dissent against the status quo decision for the first time in 3 decades. More people die of starvation in Gaza as the humanitarian crisis worsens. At least 30 people waiting food assistance are gunned down by Israeli forces. After France and UK, Canada says it could recognize a Palestinian state by September. President Trump warns that the move could derail the trade deal. A special court acquits all 7 accused, including former BJP MP Pragya Singh Thakur in the Malegaon bomb blast case. The court observes the prosecution failed to bring any cogent evidence to prove the culpability of the accused. 6 people were killed, nearly 100 injured, when an explosive strapped to a motorcycle exploded near a mosque in September of 2008. Well, the top story that we are tracking here this evening, President Donald Trump has ramped up the rhetoric hours after hitting India with a 25% tariff and a penalty for buying Russian oil and defense equipment. In a post on Truth Social, President Trump has said, and I quote, "I don't care what India does with Russia. They can take their dead economies down together for all I care," end of quote. Now, these statements come a day after President Trump said that India has the most strenuous tariffs and the most obnoxious non-monetary trade barriers compared to any other country. Commerce Minister Piyush Goyal telling the Lok Sabha just a short while ago that India will take all steps to protect its interests. Here's President Trump on imposing 25% tariffs and a penalty on India.
Well, we're negotiating right now, and it's also BRICS. You know, they have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. And it's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. It doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country because money is going to pour into the United States like we've never seen before.
Well, that is President Trump, and we reached out to the White House for clarification on President Trump's tariff announcement. Parikshit is standing by now. Parikshit, you've been in touch with officials in the White House. What exactly do they have to say about the tariff imposition, but more importantly about that penalty, because that's where the big question mark is?
That's right, Shireen. Lots of questions there for exporters and the Indian government. We reached out to the White House and yes, Donald Trump has imposed a 25% tariff on India with an additional penalty. So what does this mean? A White House official has said that reciprocal tariffs will come into effect from August 1. The tariffs currently in place have exemptions for goods such as semiconductors, copper, timber, energy, minerals and pharmaceuticals. These exemptions will continue, and so will the exemptions for steel, aluminium and autos that are subject to Section 232 tariffs, and they will continue for now. The final paper on tariffs, according to the White House, beyond the 1st of August has not been released so far. What we know and what is clear right now is only the top line tariff rate of 25%. No additional details on the penalty are available yet. However, Trump's announcement has certain major implications for India. The US is unlikely to accept any deal without concessions on agriculture and dairy. Number two, we'll have to remember that Russia-Ukraine talks will have to be followed closely. If the talks fail and there is no progress on ending the war, then there could be secondary tariffs on countries like India which buy Russian oil. Therefore, India is likely to be in a wait-and-watch mode rather than coming up with any immediate response or retaliatory measure. Thirdly, an additional penalty could be announced soon, and therefore there could be more action that exporters will have to be ready for. Number four, India will have to start looking at more bilateral trading partnerships. Trump's tariff will have a long-term impact as the next US president may want to continue with the same tariff rate. India will have to start focusing more on markets in the East and Africa over the next few years.
Well, all of that, of course, will be in play. Parikshit, many thanks for joining us. We are still awaiting the fine print from the White House on the tariff imposition and, more importantly, that penalty. The other big question that we're asking today, how will the Trump tariffs impact Indian industries? Sources tell us that the immediate impact will be cushioned by the exemptions that are in place till at least the 14th of August. Remember, the 14th of August was the exemption timeline provided when the Trump regime announced the tariffs in April. Ashmit is standing by now with more details. Ashmit, what are you picking up on things like smartphones, laptops, etc.? The exemptions that were announced previously likely to continue, at least for now?
Well, what we're given to understand is that there will be no immediate pain on account of the 25+% tariffs that Donald Trump had announced by way of his post on Truth Social. What sources are telling us is that at the time when these tariffs had been promulgated, had been announced by the United States, at that time, there was a separate order passed as well. There was a presidential memorandum which had provided for exemptions for multiple products such as smartphones, such as laptops, telecom equipment, such as servers. Since then, the exports that have been going from India to the United States have been claiming benefit of that presidential memorandum, have been claiming benefit of that exemption, paying zero duties at this stage. What we're given to understand is that this exemption was introduced with a 90-day limit. That 90-day period expires at the end of August 14th. That exemption period continues to be in effect, and therefore smartphones, which is essentially the poster boy of the Indian manufacturing story, continues to be safe as of right now. That's no immediate setback as of right now. But having said that, let's also point out, for the benefit of our viewers, that it is only interim in nature. There is an investigation underway in the United States. There will be a review meeting that will be held on or before the end of August 14th that will decide the fate of these exemptions. Should they be allowed to continue? Should they be scrapped altogether? That's a decision that is keenly awaited now from the United States, at least as far as the electronics industry is concerned, on the continuation of those exemptions, which continue to be in place as of right now, at least up until August 14th.
All right, Ashmit, appreciate you joining us. Now, the US and India's trade equation is a crucial one. The US imported goods worth $87 billion from India in 2024 alone. So what do brokerages make of the tariff imposition announced by President Trump? Surbi is standing by to explain. Surbi.
Well, the India-US trade relationship is important and the numbers are large. The United States has been India's largest trading partner for the last 4 years. And the value that we derive out of all our exports to the US is almost $88 billion. So it is indeed a big deal. Now, the problem of the US running a constant deficit, the value of that trade deficit that the US is running, in our case, it's a trade surplus for us, is about $41 billion. And all of these are numbers as of last count, FY25. So if we talk about what the implications are then, I mean, clearly these are big numbers. That deficit is something that the US cites as a problem. Now, is it really a problem for us, the Indian economy? Thankfully, because we are a domestic-driven economy, there the numbers are not that big. Because if you're looking at US exports as a percentage of Indian GDP, then the number is about 2.1 to 2.2% of our GDP. So it's not that huge. But there will be a GDP impact. That's what most economists are saying. And I looked at a lot of estimates. Some of these estimates came in April when the first round of tariffs was announced, when we were at 26%. Today, we're at 25%. So if this 25% holds, then what are the views on the street? We are talking about estimates ranging between 30 basis points to 60 basis points of GDP impact. In fact, if I could just sum it up, SBI is saying that at 20% tariff, their original April estimate was the impact is going to be 50 basis points on GDP. They're saying every 1% rise in that tariff rate leads to a 0.5% decline in our exports to the US. Morgan Stanley sees the risk of about 40 to 60 basis points impact on GDP. Cities, again, is at about 30 to 40 basis points impact on GDP. And Nomura is saying that there will be a 2 percentage point impact. There's a downside risk to their FY26 GDP estimate, which is 6.2% growth for Indian GDP. So therefore, the absolute numbers are big, but in terms of as a percentage of India GDP, the impact is not extremely substantial. But the trade relationship, of course, is very, very important.
Yes, it certainly is. Surbi, many thanks. But let's talk about Dalal Street now. A very choppy session. Despite staging a massive intraday recovery, markets finally failing to hold on to their gains and closing in the red. In fact, 39 out of the 50 Nifty stocks closing in the red. The Sensex down 296 points, 86 lower on the Nifty. The mid-caps lost 541 and 188 points low on the Nifty Bank. But this doesn't tell you the story. The way that we saw the market stage that intraday recovery and then, of course, close in the red. Very, very volatile day today. Of course, also expiry day. Meanwhile, the rupee closing at an all-time low of 87.60. However, the rupee's intraday fall was less than 0.5%. It's remained resilient despite the US tariff news that has come in. Now, hours after hitting India with tariffs, President Trump has announced a deal with Pakistan to develop its oil reserves. In a post on Truth Social, the president said, and I quote, "We have just concluded a deal with the country of Pakistan whereby Pakistan and the US will work together on developing their massive oil reserves. We are in the process of choosing the oil company that will lead this partnership. Who knows, maybe they'll be selling oil to India someday," end of quote. Pakistan's finance ministry has said the deal will lead to a reduction of reciprocal tariffs on Pakistan's exports to the US. Well, a deal there being inked overnight between South Korea, the US and Pakistan as well. Time for a break, but coming up next, the Supreme Court admits a petition seeking a review of its own judgment ordering the liquidation of Bhushan Steel and scrapping the insolvency process. Significant relief for JSW Steel and its lenders. That and more coming up. The Supreme Court has admitted a petition seeking a review of its own judgment ordering the liquidation of Bhushan Steel and scrapping the insolvency process. The court observed that this is a fit case where the judgment needs to be recalled and the matter needs to be considered afresh. Ashmit is standing by with more. This is a big relief coming in for JSW Steel and the lenders and overall for the IBC process itself, Ashmit.
Indeed, a number of these concerns had been raised by the lenders themselves, by JSW Steel as well, that this is taking back the IBC process right to its inception. The clock has been set back, that there are numerous investments that have been made by JSW. All of that have not been considered. That on the mere issue of timelines and adherence to that timeline, on that mere issue, a resolution plan of nearly 20,000 crore rupees was scrapped. Now, all of these arguments appear to weigh on the minds of the Supreme Court. The Supreme Court today, as a part of these proceedings, mentioned that prima facie it is of the view that there has been an incorrect application of law by the Supreme Court judgment which had scrapped the JSW Steel resolution plan, going on to say that this is a fit case for reconsideration. This is a fit case for hearing the review, and on that basis allowing for these review petitions, and now saying that next Thursday this matter will get taken up for further hearing. The Supreme Court had some strong words. The Supreme Court said that the powers that have been used by the court should only be used to do justice and not injustice. Also, in fact, putting across how 25,000 people will be brought on the roads if this company is sent into liquidation, and then going on to say that this is a case which is weighing on the minds of the judges, that they will want to consider right from scratch in terms of how this resolution plan is to proceed. So on that count, relief being granted, the review petitions being allowed, and on that count, the hearing, we understand, will begin next week from Thursday. Back to you.
All right, Ashmit, appreciate you joining us. Relief there for JSW Steel and also for the entire IBC ecosystem. Tata Motors has announced that it will acquire Italian commercial vehicle maker Iveco Group. The deal will be valued at 38,000 crore rupees, and the all-cash transaction is said to be Tata Motors' biggest acquisition to date. The deal is also expected to close by April of 2026. Replying to CNBC TV18's question, the company's chief financial officer, PB Balaji, said Tata Motors may need to raise €1 billion for the acquisition. Take a look.
We have not yet made up our mind in terms of the magnitude of the equity raise. It obviously has to be discussed with the rating agencies as well. But we believe close to about €1 billion kind of a fundraise is what in the ballpark range will come on to. How much exactly it will be, let's work through the problem. And we are comfortable with respect to the metrics that we will land with that kind of a fundraise. And also, other thing is that monetization of Tata Capital stake, that also needs to be factored in. And together, that's more or less takes care of it.
Well, that's the management of Tata Motors on that big acquisition and how they intend to fund it. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Stay tuned. We're back in a moment with more.
The US president had issued an executive order on reciprocal tariffs, imposing additional duties ranging from 10% to 50% on imports from its trading partners. A baseline duty of 10% has been effective from 5th April 2025. The additional duty on India was announced at 26%, including baseline tariff of 10%. Originally, the full country-specific additional duty was to be effective from 9th April 2025, but was postponed initially for 90 days on 10th April 2025 and further extended up to 1st August 2025. Honorable Chairman, sir, India and the US entered into negotiations for a fair, balanced and mutually beneficial bilateral trade agreement in March 2025 with a target to complete the first tranche of the agreement by fall of 2025. The two sides finalized the detailed terms of reference to enter into negotiations of the BTA on 29th March 2025 during the first physical round of discussions held at New Delhi. Thereafter, 4 physical rounds of negotiations have taken place between both sides in New Delhi and Washington, D.C. to work towards finalization of the BTA in accordance with the agreed terms of reference. In addition, there have been many virtual meetings between the two sides. Mr. Chairman, sir, the implications of the recent development are being examined by the government. The Ministry of Commerce and Industry is engaged with all stakeholders, including exporters and industry, for taking feedback of their assessment of the situation. The government attaches the utmost importance to protecting and promoting the welfare of our farmers, workers, entrepreneurs, exporters, MSMEs, and all sections of industry. We will take all necessary steps to secure and advance our national interest. Mr. Chairman, sir, in just over a decade, India has rapidly transformed from being one of the fragile 5 to the fastest growing major economy in the world. We have risen from the 11th largest economy to one of the top 5 economies, driven by our reforms, hard work of our farmers, MSMEs and entrepreneurs. It is also widely expected that we will become the 3rd largest economy in a few years. Today, international institutions and economists see India as the bright spot in the global economy. India is contributing to almost 16% of global growth. Mr. Chairman, sir, in the last decade, the government has taken transformative measures to promote India as the manufacturing hub of the world, driven by the Make in India initiative. India's young, skilled, and talented workforce is driving innovation and competitiveness of Indian industry. Our exports have steadily increased during the last 11 years. In an increasingly protectionist world, India has done mutually beneficial trade agreements with UAE, UK, Australia, and EFTA countries. We are also committed to similar trade agreements with other countries. We are consistently working for the welfare of the farmers and Indian agriculture to promote prosperity and ensure food security.
Dolaji, I hear me. Please come up. Please. Dolaji, please. Please. Dolaji, bahar wahan se. Dolaji, don't disturb. Please. Don't disturb. Please.
The government is confident that we will continue our fast-paced journey of inclusive growth and sustainable development towards the goal of Viksit Bharat 2047. Chairman sir, आत्मनिर्भरता की ओर भारत आत्मविश्वास के साथ बढ़ रहा है। बहुत बहुत धन्यवाद। अंग्रेजी में भी हिंदी में पढ़ना चाहिए। अंग्रेजी में भी पढ़ना चाहिए। अंग्रेजी पढ़ लिया। अंग्रेजी हिंदी में भी पढ़ना चाहिए।
Well, that is the Commerce Minister reiterating what he said in the Lok Sabha to the upper house in the Rajya Sabha there. The Commerce Minister saying that India will take the steps needed to be taken in response to the US action, but not specifying what those measures are likely to be, and saying that the Commerce Ministry is at this point in time assessing the impact of the tariff imposition. A break, but a lot more coming up. Stay with us. US President Donald Trump has hit India with a 25% tariff, and this is the shocker, a penalty for buying oil from Russia. But we don't know what that penalty amount is. Now, Trump, while calling India a friend in an otherwise very terse statement where he called India's tariffs most strenuous and India's non-trade barriers obnoxious, quote unquote, Trump followed this statement with another statement calling India and Russia, I quote, dead economies. The Indian government's reaction so far has been measured. Sources say many goods, including electronics and pharma, are likely to be exempt from the higher tariffs. This was in fact the case even in April, when the Trump administration had first announced the set of tariffs. Now, the stock market seemed to be betting on the taco trade. Trump always chickens out, because we've seen a dramatic recovery and a rebound from the lows of the day. So how will this tariff tussle pan out for the markets and for the Indian economy at large? This is the editor's playbook. I'm Shireen Bhan. Joining me on the show today, my colleagues Parikshit Luthra, Prashant Nair, Nimesh Shah, Surabhi Upadhyay and Sriram Iyer. Guys, thanks very much for joining us. Before we begin, let's first listen into President Trump on the tariff imposition on India.
Well, we're negotiating right now, and it's also BRICS. You know, they have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. And it's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. It doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country because money is going to pour into the United States like we've never seen before.
Well, that's President Trump, and of course he's been posting pretty much overnight on Truth Social. But you know what President Trump said there? Not surprising. He's been calling out India for high tariffs, calling India the tariff king and so on and so forth for months, even before he was elected. So that's not new. What's also not new is President Trump going after the BRICS nations, saying that the BRICS countries and the BRICS grouping is anti-America, they're anti the dollar. We've heard that several times in the past, so that's not new either. What is, however, a cause for concern is the manner in which President Trump was tweeting or posting on Truth Social, the language that was being used in those posts. But more importantly, this business of a penalty, the penalty imposition is the new factor. The fact that there would be tariffs coming in because we hadn't been able to work out a deal by the 1st of August, I think everyone had pretty much factored that in. This penalty amount, which, by the way, hasn't been specified as of yet, is the one that's taken people by surprise. Now, Parikshit, let me start by talking to you because you've, of course, been in touch with sources in the government here in India, but also with people in the White House. Let's first address what the White House is saying, because all we know at this point in time, what is official, maybe not certain, but what is certainly official at this point in time is that 25% tariff imposition from the 1st of August, which President Trump has said is going to happen. What we don't know is what this penalty amount is likely to be. What does the White House say?
Well, the White House is clearly saying that the 1st August deadline is clear. The tariffs will kick in from there. So 25% immediately across the board is what the Indian exporters have to be ready for. Number two, what are the exemptions? All the exemptions that are continuing right now, such as steel and tariffs, which have a steel and aluminum, which have a 50% tariff. You've got autos, which have a 25% tariff. Those exemptions continue. Also for certain metals, pharmaceuticals, semiconductors, electronic items, which the US
laptops, smartphones.
Exactly. So those exemptions were earlier. Those exemptions continue
till the 14th of August.
For now, till anything changes further.
I mean, the earlier deadline was the 14th of August. Right. So that's where we currently find ourselves.
Where we currently stand. And finally, the penalty has not been decided as yet. Currently, you don't have a tariff schedule. You only have an across-the-board 25% tariff, which the US is saying. And that leads to uncertainty because, you know, Russia-Ukraine talks are happening. Trump has said if within that deadline, the war is not resolved, there will be secondary sanctions. So there could be more coming India's way.
Well, you know, we will have to wait to see. But as you pointed out, at this point in time, the White House itself is saying that, look, penalties, we don't know just yet what the amount is going to be. But let's now talk about the Indian government, Parikshit. We saw that statement coming in from the government yesterday that they're assessing the situation and so on and so forth. And whatever is done in the nation's interest. What are you hearing at this point in time? What is the approach likely to be? The 6th round of negotiations were expected to take place with the US team coming to India in the second half of August. Does that stand? Is there expected to be any retaliation at this point in time? What are you hearing?
Shireen, it's quite clear we're not close to a trade deal at all. What Donald Trump's anger shows on Truth Social is his frustration with India. He's wanting access on agriculture and dairy, and India has said that we can't even bring that into the negotiating room. And clearly, Donald Trump is very upset with that. He wants an across-the-board deal with India, unprecedented access, major investment commitments, which India is not giving at this stage. Is India going to retaliate? Highly unlikely. One, because there is going to be more action from Donald Trump in the next few weeks. As I spoke about Russia-Ukraine, he will impose tariffs on economies which buy oil and defense equipment.
He said that,
So there is going to be more coming. So even if we do some sort of placating right now, we will again be hit by some sort of penalty 10 days later. So India right now is going to wait and watch. We've been told by government sources today we'll have to weather the storm.
Yeah, in fact, the term being used is India will not jump the gun.
Not jump the gun. And lastly, we now have to realize that what Donald Trump has done today with imposing a 25% tariff, and if he imposes a penalty, it's going to have a long-term implication. The next US president who comes will not reduce this tariff. That will be the beginning of the negotiation with the next US administration. This is a worry in the government.
Well, you know, it is a worry in the government, but also as we've heard several commentators say that, look, what these tariffs do in a multilateral system, in a system that's governed by the WTO, etc. These are unilateral tariffs that are being imposed by the force of an executive order. You know, we had several commerce secretaries and WTO envoys, former WTO envoys, calling these acts illegal, calling this trade anarchy. But this is the Trump era, and this is an era that we are going to have to navigate. And, you know, to your
end
point,
of multilateral institutions.
Well, I don't know, end of multilateral institutions per se at this point in time, but certainly the rules of the game have been upended. But, you know, here's the interesting thing, Parikshit, and I'll come to Surabhi to really understand what the impact is likely to be if it is what President Trump claims tariffs to be. What's interesting is that India and the US were expected to be the first off the block in terms of signing an agreement.
We gave a lot of concessions.
And we gave a lot of concessions.
The Google tax was removed.
Google tax, the digital tax
Tariffs
was removed.
on EVs, cars
Tariff
was
on
reduced.
EVs was reduced. Bourbon, whiskey. All of that was done even ahead of the Prime Minister's visit to Washington, D.C. in February. So India had made its intent on wanting to get an agreement done with the Trump administration very, very clear. And we put a lot of eggs on that table, in that basket already, even ahead of the Prime Minister's visit. And here we are, where he signed deals with you know, a whole host of countries, including, by the way, with Pakistan. That's the development that's taken place overnight. I mean, Pakistan has got a deal with the US. But Surabhi, you know, let's talk about the world as it is. And it may change with a tweet. We don't know. But what are brokerages telling you at this point in time about the impact on the economy if the 25% tariff stays and we don't know what the penalty is?
No, absolutely. Just on the penalty and on Parikshit's point, because I've been following every single tweet wherever he's spoken about Russia, Ukraine, and how he'll penalize Russia's trading partners very carefully all through the week. And in one of those statements, he said, I can impose tariffs of up to 100% in terms of penalties with all those who are doing business with Russia. So let's see what he eventually, you know, hands out to us. Now, just talking about the numbers. So why is this important? There is no denying it. The US is India's largest trading partner, and it has been so for the last 4 years in a row, ahead of China, ahead of UAE, and ahead of a lot of other geographies. The value of bilateral trade as of FY25 has crossed $130 billion. India is earning almost $90 billion in exporting goods to the US. So these are large numbers. You cannot ignore them entirely. If I just talk about now the GDP impact. So the numbers by themselves, absolute numbers are large. But as a percentage of GDP, we're a domestic story, right? And that's where there's some comfort coming in. As a percentage of GDP, US exports amount to about 2.1 to 2.2% as of the latest numbers. So this whole deficit business, which he keeps talking about, the deficit with India, and yes, there has been a deficit, no denying that. So as of the latest numbers, FY25 numbers available, we've exported goods worth almost 87 billion to the US. We've imported worth about 45 billion. That leaves a trade deficit for the US, surplus for us, of about 41 billion. And that's his problem. He wants to wipe that off. But it seems it's not just about the deficit. Now it's about geopolitics, it's about Russia, it's about so many other things. Quickly coming to the estimates. So if things stand at 25% tariff, then what could the implications be for Indian GDP? SBI, some of these estimates came in April because we were at 26%. Some are, as of this morning, very, very new numbers. So SBI is saying a 20 to 25% tariff impact could result in about 50 basis points loss to GDP. They're saying every 1% rise in tariff leads to about 0.5% decline in our exports. Morgan Stanley sees a downside risk ranging between 30 to 60 basis points. Citi is again talking about 0.3 to 0.4% impact. And Nomura is the latest note I read as I walked in. Their estimate is 2 percentage points, basically 0.2% sort of an impact to their estimates of 6.2% growth this year. So there is going to be an impact on individual sectors. Of course, it will play out a lot more. I mean, gems and jewelry, whether we're looking at pharma, and pharma is the big sword that's still hanging open. And we don't know because that's one of our largest, export contributions.
And that's the one I was
absolutely. No, pharma, just a quick point on that. As Parikshit was saying, as of now, it is exempt. And it's not just a concern for India, it's a concern for the global industry and for other countries as well, because, President Trump has spoken about, very high tariffs on pharma, but then he also talks about the fact that he'll give 18 months and so on and so forth. The next day, they talk about the fact that it's coming soon. So we don't really know, but what we do know that as of now, pharmaceuticals are exempt under the current regime, which was also made clear in April, and that is the expectation that it's going to go forward. Now, you wanted to make a point.
So pharma, yes. I think you guys have covered it pretty much. It's a big, sword that's hanging on us.
His last comment this week again was, bring pharmaceuticals back to America. So
but the question,
you can interpret it as what that will mean in terms of duties.
Absolutely. But see, essentially the market reaction kind of tells us a story. Even if you are saying 0.6%,
roughly half a percent,
anywhere between 20 basis points.
Market reaction is because of my green shirt, Sriya.
Absolutely.
I don't know what my black shirt is in protest of.
No, sorry.
Pista green, I might add, Prashant.
By the way, the first time I'm wearing it. And
we cited that in the morning today, 8 o'clock, that the biggest support the Bulls will get is from Prashant's shirt, and it's playing out.
Absolutely. And, thank you, Prashant. But see, think about it. 20 to 60 basis points, what we're talking about. Max from 18 to 20 billion or $21 billion is the net impact, which at the R scale doesn't look like a lot. But having said that, we were talking about this just before the show. Nimesh has a different take on why the market is up. I think
so basically one should not read too much into just one day of pullback, because it's an F1 expiry day, and also the Nifty long short position is extremely short by the FIs. It's the highest short in the system in the last 4 to 6 months. So clearly,
did the FIs expect this kind of an explosion?
Something negative can come.
So I think that's a good point, right? Did the FIs expect that these, what happened yesterday may have happened?
Exactly. Yeah. So today's pullback is largely because of technical reasons. So I won't read too much into it. Yeah. But clearly,
so it's possible that tomorrow they might dump the stocks.
Well, whether they will dump or not,
I'll give you a stat. I'll give you a stat. FPI selling, which had stabilized in the last couple of months. July, we're back to selling. Yeah. January was selling of almost 90,000 crores in a month. February was again selling. We stabilized next couple of months, and July we are back down to net sales in the market of about 18,000 crores.
50% we give to Prashant for his green shirt, and 50% for the technical reasons.
Hello and welcome to this special show, Charging Up India's EV Journey. India is racing towards a greener future, and electric vehicles are at the heart of that transformation. The country aspires to become a global electric vehicle manufacturing hub by 2030. However, there's a structural challenge at the core. India remains heavily dependent on imported raw materials and lacks large-scale cell manufacturing capacity. Today, most Indian EV manufacturers still import 60 to 70% of their key components like battery cells, semiconductors and critical minerals. This leaves them vulnerable to global shocks. To secure the future, India must build a resilient, self-reliant EV supply chain, and that starts with developing a robust local battery ecosystem. The government has launched ambitious production-linked incentive schemes to drive domestic manufacturing of critical components. But is that enough? What else can India do? To discuss this, we are now joined by Jyoti Malhotra, Managing Director of Volvo Car India, Arun Malhotra, an auto industry veteran, and Uday Narang, founder and chairman of Omega Seeki. Thank you very much for being with us, gentlemen. Jyoti Malhotra, let me begin by asking you, how has Volvo really been dealing with the supply chain shocks over the last few years? And what kind of resilience have you now built into the system?
See, over the years since COVID, we have seen different type of disruptions, whether it was regarding, I would say, all type of supply chains, whether it's related to shipping and then material imports, all those things. And recently, as you know, specifically in India, these rare earth metal create a lot of havoc. Fortunately, so to say, for us, we bring our kits from abroad and assemble them in India. So directly we are not impacted, but yes, global supply chains have been very badly affected, and this can create a big hassle for us. But when we look into our future, one of the key things is we would like to do something here in India, and for that we need the ecosystem to develop. So hence, I think what you are bringing to fore here is a very, very important topic, and it is a big challenge for us to be a self-reliant when it comes to making EVs in India.
Right. Let me also go across to our other panelists right now. Uday Narang, could you give us a sense of how the current supply chain challenges, especially around rare earth magnets, how is it impacting your company, the EV industry? And there is no sign of when these restrictions on rare earth magnets will be lifted by China.
I think, just to give you a report, I used to be a hedge fund manager for almost 30 years. And so I've been involved in the commodity business before I got into the green energy, sustainability space. There is an absolute, issue on rare earths, but the problem is not from today. The Chinese own not just, the supply chain, but they also own the commodity. So they had a very long-term thinking on this subject. Now, obviously, recently, the issue with motors, with magnets has come up. And you've heard some of our major competitors talk about how it will affect supply chains. But I think for us, clearly, we could see this. We have worked on, magnetless motors. We are working on areas where we can replace rare earths. In the short term, we do have all to deal with this issue. But in the long term, I think, and one of the problems that I face is, why are we so reactive? Did we not know that the rare earths are all owned by the Chinese? Or the supply chain is going to be defective? I think in India now, we've got to be more proactive. We are talking about magnets right now. We have motors and magnets right now. What is next? So I think, for us, we had planned for it. But again, if this continues for long term, which I don't think, I think calmer minds will prevail. We have seen this in this journey. I think you'll find a solution. But I think in the short term, all of us will have to watch our supply chains. But what I want to make a point is that we should not be thinking, what is the next step? What are we going to be affected by? Whether it is semiconductors and controllers, you're talking about rare earths, but in the EV grade steel, copper, aluminum, there are many, many such issues that if we want to make this country green and clean, that we have to actually focus on building. And I think we've got to all work on building a village. It's not, my good friends at Volvo or some other companies, we've got to work together to be able to build that ecosystem where we're not, nobody's got a gun to our head about how we're going to do this.
Absolutely. Let me come back to you there. I'll get in Mr. Arun Malhotra at this point, auto industry veteran. Mr. Malhotra, if you look at successful companies in the EV sector, they manage to localize just about 30-35% of their components. By when do you think can India be able to have a local domestic supply chain for electric vehicle components?
Parikshit, I would like to be optimistic on that. But the reality is, I don't think we are anywhere near it. It'll take 3 to 4 years. We've launched the Advanced Cell Chemistry Scheme, the Production Linked Incentive Scheme. They've announced in 2021. Until today, the Production Linked Incentive Scheme, the outflow has been against 25,000 crores as 4,000 crores. Advanced Cell Chemistry is still to get to action. So I think our challenge has been at the moment is that whatever we have even thought of, the speed of from the pronouncements to the implementation is slow. Now, it could be industry is a challenge, or it could be the bar has been raised very high. So that's one area which is a problem area, and I don't see quick solution indigenously. But I think what we need to do is, like we have the China Plus One strategy, we also need to broad base our partnership base. Whether we're talking of lithium, whether we're talking of rare earth, whether we're talking of semiconductors, and have clear, defined agreements with them. That means if China pulls the knob somewhere, we can go to the next person. Unfortunately, we have not looked at the entire value chain. And the rare earth element is something which is just in news 3 months back. Nobody was talking of it. To that extent, it's a challenging task. And I think the medium-term part is what we have got to do, what our schemes are, put them into action faster. And also the other thing which I think is important is involve industry, academia, and government together. They need to synchronize the effort. We have got these centers of excellence like the Indian Institute of Science, the IITs. I don't think we are harnessing their potential ability well enough. So this is something which is a problem. But I think short-term, medium-term is build strong partnerships, be more proactive, look at alternative materials. That's what I say. But if you're talking of full self-sufficiency, 4 to 5 years down the line.
4 to 5 years down the line. All right. Let me now go across to Jyoti Malhotra once again. Mr. Malhotra, when it comes to electric vehicle batteries, currently they account for 40 to 50% of the EV cost. How do you think India can have a reliable supply chain of electric vehicle battery components and make sure that there is a strong domestic pipeline of EV batteries which can bring down the overall vehicle cost?
Yeah, so I think let's look at it this way. First of all, as I said earlier, I think this whole ecosystem right now is in its infancy, right? And we are still evolving. And as Mr. Uday said, I think we have been so far reactive. The first thing we need to do is that rather than being reactive, we need to be now proactive and not depend on the world if we want to really become self-sufficient. Having said that, I think what we really need right now, we are lacking capacity to produce advanced components, whether it is about the lithium-ion battery itself or power electronics or the intelligent drivetrains that lead to critical challenges. And I think all this is because, first and foremost, there is a high cost of production due to very limited scalability. So I think this thing can be solved at both ends. We also need to push demand. What China has done, if you really see, they have had a huge demand impetus, which leads to a better scalability when we start producing here. So you need to balance on both sides. So that is one of the very important aspects that needs to be taken care of. And then obviously there is also a shortage of skilled workers. If we really want to start taking care of these all important components, luckily for us, as per my understanding, almost 8% of global rare earth metals are estimated to be in India, and we are ranked number 5th when it comes to, I think, in terms of raw material. But I think we are not able to harness it because of various norms, and I think not being very proactive on how do we really use that. And then on top of it, there is also the challenge of absence of testing and validation centers. If we were to really develop these advanced cells and raw materials which are used in battery and cell production, we need the cost of production to come down, which can be done through scalability. We need to take care of that shortage of skilled workers, and that is where I think Mr. Malhotra was talking about. We need to work together with academia and ensure that we are able to bring the right talent and competence in out here, and then develop the testing and validation centers as well. So I think these are some critical things that needs to be done when it comes to taking care for future. And obviously there is also one more layer which is related to software. That is where we have an edge. We have I think engineers here who can develop software which are very, very critical to overall EV ecosystem. That is our strength, but we need to take care of the hardware side when it comes to batteries and power electronics and things like that. Yeah.
Okay. All right. Uday Narang, if I were to ask you one area which is most important for our EV journey, for India's EV journey, would it be raw materials, technology transfer, logistics, or a transparent, consistent policy? What would that be?
Very, 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 very good question and very, very relevant points. But you know what I want? I want a very stable policy. We've been in this journey for a long time. It's been almost 10 years. And I'll tell you what I want as a founder, as an investor, at Omega Seki, we've basically put our own money at work, whether it's Volvo or us or anybody. I think we need a policy that is stable. What we've had is policies, but it's been up and down. I think any long-term business, and I'm going to say we're never going to be like the US or Europe, but what we do want is a clear, stable policy. I think that will give us a roadmap. Listen, we know that 21 of the most polluted cities in the world is in our country. We know that in certain parts, we are now actually with a total cost ownership of EVs and two-wheelers and three-wheelers, and now it's coming in passenger, but even on the trucks, it is coming. Now, what we want is a clear policy, whether it's at the central level and the state level, and make sure that we stay the course. Because for us, there is no other option but to go green in this country. For the future, we're going to be the third largest economy in the world. We're going to be the third largest equities market in the world. But are we going to be the third largest, cleanest country in the world, which our future generations are going to need? And so I think a stable policy from the government is extremely important. But that doesn't mean that we are going to be leaving the government to do all the work. It has to be a public-private partnership. We all got to pitch in. I keep saying to everybody that this is a marathon. This is not a sprint. We're not going to achieve, a complete nationwide. And let's not just talk about Delhi, Mumbai, tier 1 cities. Let's talk about tier 2, 3, 4 cities where we're going to take every part of this nation to be going green. And so I think if we can have the stable policy, it's important. The other points that you talk about are extremely important. Another thing that is very important for more electrification in this country is financing. Financing for electric vehicles is very high. And I think that needs to be worked on. There are multiple issues. And I think that is subject that also needs to be looked at.
All right. Mr. Malhotra, how ready do you think, while we have some large OEMs in the country which are global EV suppliers, EV component suppliers, but what about the readiness of our tier 2, tier 3 suppliers when it comes to the electric vehicle component supply chain?
Oh, Rishit, you hit the nail on the head. I think from an OEM perspective or from a tier 1 perspective, we are still at a fair advanced level. But tier 2, tier 3, there is a lot of work needs to be done. And clearly the hand-holding, whether from the OEMs or the tier 1, has to happen. But the way we look at it, the way EVs are made today, probably the tier 2, tier 3 rules, we have a, you can say, safety of time, or 2-3 years to catch up on that, is to start the journey. But at the moment, tier 2, tier 3 is not the, you can say, the showstopper. It is still has to be worked upon. But the bigger challenge, as Uday was mentioned, was having a stable policy and probably also having a technology agnostic policy. 3 years down the line, we realize that for buses and trucks, we don't need EVs, we need electricity, we need probably hydrogen. So stable policy, and this part of it. And I think this will go a long way to do it. The other part of it is, can we think of alternative research? We have got sodium-ion batteries, we talk about solid-state batteries. Lithium, whether we like it or not, we'll be playing the catch-up game with China, and we'll still be dependent on them. The other technologies available. Can our Institute of Excellence focus on those from the medium and long term? So one is a short-term approach and a medium term, but one is a long-term approach, which has to start right now. As somebody said that we have the rare metals, which is 4th largest in the world. But that's a known fact. But have you done anything on that? Nothing. So short-term, medium-term, long-term policy altogether.
Okay, we're going to take a short break, but don't go anywhere. This discussion on India's EV journey continues on the other side. Welcome back. You're watching Charging Up India's EV Journey, and we still have with us Jyoti Malhotra, Managing Director, Volvo Cars, Arun Malhotra, auto industry veteran, and Uday Narang, founder and chairman of Omega Siki. Thank you very much, gentlemen, for continuing to be with us. Mr. Malhotra, coming to you, we've signed an FTA with the United Kingdom. It will be coming into effect once the UK Parliament ratifies it. That's going to lower the cost of components that go from India to UK, cost of vehicles coming from UK to India, but only in a staggered manner for a certain quota of vehicles. We'll see a Europe-India FTA also being signed very soon, possibly by the end of the year. Could you give us a sense of how these trade agreements help us with the resilient supply chain and bringing down cost, not just of EV components, but also of electric vehicles? Jyoti Malhotra, question to you.
Yeah.
Okay. All right. So as I said, I think the trade agreements are always good. We welcome these trade agreements because it's good to have a free trade. If we see it from this perspective, I think we were talking about how can we develop ecosystem in India and scalability. One of the important things is with trade agreements, then if we have, let's say, a free trade agreement with Europe tomorrow, like we have with UK today, I think our manufacturers here can freely supply and their scalability can really take care of that. And our own manufacturers, if we are producing EVs in India, like Mr. Uday is producing, he can sell not only here in India, but let's say now in UK and beyond once we have trade agreement with Europe and so forth. So I think it is a mutually beneficial policy to have trade agreements in place. It helps us in ensuring that our exporters, our producers here get an access to those markets. But we need to become competitive. Our markets will also open up. And I think it will create a free and fair trade between two countries or continents. And I think it is a very welcome stage. And we are looking forward that we can get into trade agreements, which can make all of us more competitive. And it will ultimately benefit consumers.
All right. Uday, if I were to ask you about your own challenges when you're trying to have a local ecosystem, a local domestic supply chain of your electric vehicle components, give us a sense of the kind of challenges, the hurdles you've encountered with your suppliers.
Well, you know, as I said, it's been a long journey. This is a marathon and not a sprint. And I think we all, for me at least, you know, this is not about Omega Seki or Uday Narang. This is about India first. You know, it's not about making India great again. India was always great. This path has been, you know, a very, very tough part. When we first started, there were issues with battery supply chains, powertrains, motors, BMS. There were problems on everything. And as my good friend, Mr. Malhotra from Volvo talked about, I mean, there was not enough demand. Now, you know, if there was not enough demand, there was not enough suppliers. Suppliers were saying, well, how do I make, you know, a P&L? You know, if the volumes are small, how much money do I put in R&D? So I think that journey changed. You know, for me, you know, the FAME 1, FAME 2, PMI e-drive helped propel in two-wheelers, three-wheelers, now in the one-ton trucks. And obviously the passenger vehicles started coming in. We had enormous problems. Prices of batteries, cell prices were $200 a kilowatt hour. Obviously, supply chains have increased. There's been so much that has changed in every step of the way. But I think this was a journey where we thought, look, no matter what, we've got to work towards, as a community, to build green vehicles. And if you look at the number of green plates that are coming out across this country, it is increasing every day. On supply chains, 100%. There was problems in getting localized motors, localized, you know, there were problems in making sure battery cells were of high quality. There were issues with regard to you know, on the telemetric side. You know, there were issues on mechanical was sorted out, but electronics, there was always an issue on that. I mean, you know, this has now changed considerably because, you know, 7 years ago, the big boys and girls were not there. Yes, there were, but they were not enough. There was not enough commitment. Today, all the big boys and girls are in this game, including the startups. You know, so it gave the runway for suppliers to come in and see a path where increased volumes can come. Right. And in the supply chain has got much, much better. India, in my view, is on a path of becoming a serious global force in the EV business. But we have to build it from ground up. And I think a lot of people said, China does this, Japan does this. We've got to build it the India way. It has to be ethical, sustainable, scalable, resilient. And I think, you know, for us, you know, the supply chain, we have to work as partners. I keep coming back to it. We've got to build a village where all of us, you know, if you look, you know, where suppliers, OEMs, consume, everybody charging infra, battery players work together. It's been a long journey. Right. I think we're going on the right way. You know, Rome wasn't built in one day.
I think what the semiconductor challenge and now the rare earth magnet challenge has shown us is that we now need to map out our vulnerabilities and our dependencies on certain economies, certain countries very well for the next 15 to 20 years. Trade routes, natural resources are increasingly being weaponized, and we have to take a very long-term view of things. My question to Arun Malhotra now. Mr. Malhotra, the government's PLI scheme for advanced chemistry cells, that's had limited impact. There are companies which are manufacturing cells right now locally, but it's at a very, very, I would say, initial level. Why do you think these government schemes have not really supported domestic EV manufacturing, cell manufacturing to such a great extent? The incentives are there, but why are we not seeing cell manufacturing take off at scale?
So, whether it's the advanced cell chemistry or it's the production like incentive scheme, I think one of the challenges is from the time of announcement of the scheme to laying down the ground rules, and the ground rules being understood well by the government and the industry and the entire ecosystem, that takes time. What starts in 21 starts in 24. The other point is you need to have a graded method of raising the bar. If you think of 50% domestic value addition from day one or 30%, it's a challenge. Look at the advanced cell chemistry, the first benchmark which was put for the 3-4 companies which have got license, none cleared it. And they were big names, some of them. So there is somewhat, we also need to be pragmatic. We need to have, focus. One is the clarity of the policy, and the policy laid down into granularity has to be sharper, clearer and faster. And second of all, have a graded system of raising the bar, and then have a continuous dialogue which is happening. So this is something which is a very important thing, and it's both fortunately, surprisingly, for electronics and textiles, it's worked much better. But in automobile, probably the complexity is much more. Putting from the ground level, raising to even reaching above ground level is taking a lot of time. So that's something introspection we need to do, and we need to have that focus clearly sharp.
All right. Now let's take a final set of questions with all our panelists before we wrap. Jyoti Malhotra, if I can begin with you. If you were to be asked one major bottleneck when it comes to the India EV supply chain, what would that be?
See, I think obviously it is our dependency on imports. I think we still need to import a lot, whether it is batteries or battery components, power chains, even chargers for that matter. So I think that is one big bottleneck. But having said that, another area of, I think, improvement would also would be related to taking care of gap in competency, skills, which are also a big gap that we see already. And I think we need to ensure that industry, academia, government, we all come together. And as you were saying, it is important. It is a mission for the country. We need to look at taking care of it from all angles. And for that, one of the key things that is also required is a stable policy. Today, we have seen ups and downs, and not just from central government, although we have very strong EV policies in place. But then what happens is that the change in these policies, whether by central or by state governments, also have a very negative impact. As a multinational, when we are dependent on our headquarters, when we talk to them, one of the things that worries everyone back at headquarters is also about the stability of our policy.
Okay.
So I think we need a policy with a clear sunset.
Okay, we've run out of time, but thank you very much, Jyoti Malhotra, Arun Malhotra, and Uday Narang for joining us on this very important program on what will it take to have a strong domestic ecosystem of EV components. That's all we had time for on this special edition of Charging Up India's EV Journey. Thank you for watching. Goodbye.
Some stories are told in numbers, others in the systems they quietly reshape. The women we felicitate tonight are leaders who carried real weight. They've done the work, they've kept the focus and brought others along. It's time we place those names and that work firmly on the record with the respect they've earned and the stage they deserve. Ladies and gentlemen, a big round of applause for the future female forward icons. And to do the honors, may I now invite on stage K. Sunita, Principal Secretary, Government of Andhra Pradesh and Secretary, Economically Weaker Sections Welfare, a policy maker whose work has consistently moved the dial on access and institutional design. Ladies and gentlemen, a huge round of applause for her. Also requesting Mr. Hitendra Dave, CEO HSBC India, and Shireen to join Sunita ma'am on stage. Ladies and gentlemen, our first icons tonight have etched their name in history with their courage, resilience, and unmatched grit. As part of the legendary Navika Sagar Parikrama 2, Lieutenant Commander Rupa Alagarisamy, alongside Lieutenant Commander Dilna K, became the first Indian two-women team to circumnavigate the globe under sail, completing a grueling 25,400 nautical mile journey across 3 oceans and 4 continents over 8 unrelenting months. Please welcome Lieutenant Commander Dilna and Lieutenant Commander Rupa Alagarisamy.
Wonderful officers have created history. They have circumnavigated the world. They've spent 8 months on a sailboat circumnavigating the world. You can do better with that big round of applause for them. They've made India proud and they've put India quite literally on the map. Let me start by asking the two of you. It's not like you wake up one morning and say, oh, I'm going to get onto a sailboat and circumnavigate the world. It must have taken a lot of preparation for you to be able to do that. To start with, what was that process like of just getting ready physically, emotionally, mentally to put yourself on that 56-foot yacht and travel the world?
I've seen that I've always put myself in tough situations where it's always challenging and I struggle to get to my best self. And this was also one such journey where training for this itself was kind of intimidating, but that never stopped us. And there was no, like I was mentioning before, there was no guidebook of how to train yourself mentally to go through sleepless nights and where you're completely tired and there's no proper food, but you need to survive on a freeze-dried food. But then that's when we realized that it was a choice, and we really trained on keeping our endurance there, and we always thought about why we were there and why we started, and that was a thing which kept us going.
That was what kept you going. Dilna, let me come across to you and ask you, because the two of you didn't actually know each other before you started training for this mission, for this endeavor that you took forward. But in many ways, you were mirroring each other's energy while you were there. So if she had a bad day, you had to be the one that was sort of keeping it all together. What was it like to be out there with the silence, with 20 feet high waves coming at you, sometimes serene waters, nothing in sight? What was that experience like for the two of you as individuals?
So I met Lieutenant Commander Rupa 4 years ago when we started our training in Goa. So there was a selection process which went through where 17 volunteers were there, and we both got selected. So that is when we started sailing, and it's been three years we went for the training, and last 8 months we were out at sea for the circumnavigation. And we spent most of the time at the sea and not than in the land. So training together, going through the life and death situations, going through such challenging situations will actually help you to know the other person better. you know everything about the other person where you can't become enemies. So I know her very well, she knows me very well, and that is the success of this journey, where when I was not okay, she was there to take on, and when she was not okay, I was there to take on, and it was a teamwork, and that was the success of this.
Absolutely. And what phenomenal teamwork. You said that there were many moments where it was almost life and death like. There was a point, I understand, when you were in the Pacific Ocean where you had no navigation systems. I mean, everything failed. You were virtually in a blackout-like situation. What do you do in a moment like that?
So this situation happened in Pacific Ocean at around 2 a.m. when it was a pitch dark night, where one storm was approaching us, and our entire navigation panel went off. We didn't have GPS, we didn't have any wind instrument, we don't have the boat heading, we don't know where the boat is facing. So that was a situation where the training came in. Okay, the last 3 years we have trained for this, for accepting these challenges and move on. So we actually panicked at that moment, but we were able to take on the situations and do the repairs. It took around 3 hours for us to complete the repairs and get on into the sailing. So yeah, that moment, we'll never forget that moment, because it was complete dark. Outside it is complete dark, and inside the boat it is completely dark. So, but the training, Indian Navy's training, have helped us a lot in getting out of all this challenging situation. So the preparation is the key. Actually,
preparation is the key. I'll end by asking you, Rupa, I think I remember reading that when the two of you actually finally made it back to land at the end of 8 months on sea, the statement that they made were, yes, we made it. That's what you said, right? Do you remember?
Yeah, we do remember, and that was Dilna's statement where she said, yes, we made it, because that was a moment of a lot of satisfaction and relief, and we did not mean just the both of us. It was the collective efforts, and that was indeed a collective celebration of the entire team, the Indian Navy, where a lot of officers, friends, families, where all of their support, and it was the we which we meant there.
It was the we, and so are you both all set to do this again?
Definitely.
Definitely. Ladies and gentlemen, a big round of applause. Congratulations, and thank you so much for joining us here this evening. Thank you very, very much. Thank you.
Many congratulations, and we salute your indomitable spirit. Ladies and gentlemen, once again, a huge round of applause. Moving on to our next icon, the first woman chair of the Department of Biotechnology at the Indian Institute of Science. Our next icon's contributions span molecular biology, genetics, and decades of teaching. As a researcher, she helped map complex viral mechanisms. As a teacher, she shaped minds with precision and patience. And as a leader in Indian science, she showed that women could hold the lab and the lecture hall and lead in both. Please welcome Professor Savitri H.S., former Professor, Department of Biochemistry, Indian Institute of Science, Bangalore.
Professor Savitri, congratulations.
The story of our next icon is one of resilience that lifts others with it. A weightlifter, mother and working woman, she rose before dawn, trained with borrowed equipment, and balanced family and finances without missing a step. Her medals are not just symbols of personal strength, they are a statement of collective will, that talent can rise from anywhere and carry everything with it. With the guidance of her son, she now deadlifts 70 kg, leg presses 120 kg, and embraces fitness as a way of life. At 70, Roshni Devi Sangwan, fondly known as the weightlifting mummy, is shattering stereotypes and lifting spirits one rep at a time. Please welcome on stage Roshni Sangwan, India's very own weightlifter mummy.
Roshni ji, congratulations. I don't she's been able to do. She's 70 years old, ladies and gentlemen. She can deadlift 70 kgs. And we're going to get her to do exactly that in front of this audience here at the Future Female Forward Bengaluru edition. Roshni ji, ready? Come on. Ladies and gentlemen, a huge round of applause. Some cheering, please. What a testament. Age is no barrier. And this is a living example of that. जो लड़कियां आपको देख रही हैं, जो महिलाएं आपको देख रही हैं, आप क्या कहना चाहेंगी उन्हें?
उनको यही कहना चाहती हूँ कि कसरत करो और भाई घर में करो, ये बाहर करो, चाहे जिम में करो, पार्क में करो, लेकिन एक्सरसाइज ज़रूरी है। एक्सरसाइज करोगा तो अपनी सेहत बनी रहेगी, नहीं तो नहीं बनी रहेगी। तो इसलिए मैं यही कहना चाहती हूँ कि भाई अपने खाने पीने पर ध्यान रखो और सेहत पर ध्यान रखो। आप तंदुरुस्त रहोगा तो दो मानसा को और भी संभाल सकोगा, नहीं तो नहीं संभाल सकोगा। तो यही कहना चाहती हूँ।
70 किलो आप डेडलिफ्ट करती है, अब नेक्स्ट टारगेट क्या है आपका?
मैं आगे आगे सोच रही कि भारत के लिए गोल्ड मेडल लेके आऊँ। हमारी भारत के लिए गोल्ड मेडल की इच्छा है मेरी, और मेरा बेटा बहुत करवाता है।
बहुत काम करवाता है?
नहीं नहीं, मेरा बेटा काम नहीं करवाता, मेरा बेटा जिम अच्छे से करवाता है। हमारी जिम बहुत अच्छे से करवाता है, और मेरा तंदुरुस्ती भी आई, ताकत भी आई है, और मैं सेहतमंद भी हूँ, और मैं सारा घर का काम भी करती हूँ।
रोशनी जी, बहुत 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 धन्यवाद, आज आप हमारे साथ यहाँ पे आए। And a big round of applause to her son, because he's really responsible for ensuring that his mother is here. So congratulations to you, and thank you so much for what you've done. Thank you, Roshni ji. Thank you. बहुत बहुत धन्यवाद.
Ladies and gentlemen, once again, a round of applause for our weightlifter, Mummy. Thank you so much, ma'am, for joining us. Our next icon has dedicated over 3 decades to transforming the lives of women and girls across Andhra Pradesh and beyond. Educating 800 plus students in RT school, training and empowering 55,000 plus women, enabling 1.17 lakh women to achieve financial independence, trained over 3 lakh women in legal awareness, RT Home has been setting new strides. What began with the rescue of an abandoned child in 1991 has evolved into a powerful movement of protection, education and empowerment. Under her leadership, RT Home has provided shelter to over 6,000 orphaned and abandoned children, rescued over 3,000 from abuse and more than 16,000 from child labor. Ladies and gentlemen, please put your hands together for Sandhya Puchapalli, founder and president, RT for Girls. A powerhouse of purpose, pioneering impact at the intersection of healthcare, entrepreneurship and corporate leadership. As co-founder and chairperson of Portia Medical, she has revolutionized home healthcare in India, bringing quality, accessible care to millions across 20+ cities. A true champion of gender parity, Meena Ganesh's trailblazing journey is exemplary of entrepreneurial excellence and the nation building. She's built companies, mentored ecosystems and stood firm in moments when care had to be delivered with both speed and soul. Please welcome Meena Ganesh, co-founder and chairperson Portia and trustee Bazar Foundation. The next icon we celebrate tonight is a trailblazer in every sense. India's first and only master of wine, a title earned by just over 400 people globally. With over 2 decades in the alcobev industry, she has redefined wine culture in India, making it more inclusive, accessible and aspirational. Founder of the Sonal Holland Academy and India Wine and Spirits Awards, she's shaping the future of wine education and excellence in the country, opening doors for the next generation of women entering this space with passion and precision. Please welcome Sonal Holland, founder and director, Soho Wines. Up next is a change maker who has turned everyday acts, serving a meal, offering a job, creating a space of dignity into a movement. At just 23, she founded Nifty Cafe, creating dignified livelihoods for persons with disabilities and sparking a movement for equal opportunity. Her social enterprise works at the intersection of inclusion and employment, empowering individuals with disabilities and transforming public perception of capability. From the Forbes 30 Under 30 Asia list, the National Award for Empowerment of Persons with Disabilities, to the United Nations Intercultural Innovation Award and numerous other awards, her journey is a powerful testament to the magic of purpose and perseverance. Ladies and gentlemen, please welcome the 4-time TEDx speaker, Alina Alam, founder and CEO of Nifty Cafe, and the team to join us on stage.
At 23, what gave you the foresight, the confidence to believe that there was magic in their abilities?
I was this 22-year-old in college waiting for college placements. That final semester I'll get onto a job, will send some money back home and with the rest party. But God had other plans, and I got to watch this one documentary that changed my life. And I get to meet this character called Nero. Nero was an emperor in the ancient Roman Empire, mighty rich. You see, he would win one war after the other, and one day he wins the biggest battle of his life. And when you win, what do? You party, you celebrate. So Nero decided to throw a party, and he invited the who's who of Tinseltown. He invited kings and queens, princes and princesses from across 7 kingdoms. And as evening befell, he said, "Boss, we need some lights to make the party happening and rocking." So he decided to burn kachada, waste, to generate light. He decided to burn the prisoners of war and the poor people who were captured, who he considered not more than waste. I was this 22-year-old in class, and I realized this one thing, that the problem was not Nero. You see, you could equate Nero with atrocities, injustice, discrimination, all the not so nice things that exist in this world that will always exist. You know what the problem was? The problem was Nero's guests, as to how thousands of them could sing, dance, and drink when fellow human beings burned and died. I realized that I was one of Nero's guests. I did not sit for college placements and decided to go on a journey to find myself. I started Nifty with zero startup capital and multiple rejections. Our first cafe was a table and an umbrella. 90% of our equipments, right from the spoon, second-hand oven, second-hand fridge, tissue papers were donated by absolute strangers. Our first employee, she came in crawling for the interview because her family could not afford her wheelchair. Today, that girl sits on her wheelchair and manages 10 other people with disabilities. She's the manager for our first cafe, and her name is Kirti. Today, from that small table and an umbrella, we're the world's largest chain of cafes, managed completely by these amazing folks. We have Nandish here. He is a national level player, and we are so proud of you, Nandish, and our manager, Janki, only earning member of our family. She ensures that her father is proud of her, and we are so proud of you. Shilpa, our rock star Shilpa. If you go, she's our manager at the Bangalore International Airport. So you go, and her talent is, if you come in for a 10 rupees chai, she will talk you out of a 50 rupees combo meal. Her name is Kalpana. While Kalpana can't hear or speak, she makes the best charts in the world, and she'll customize it as to your preference. And we are very proud of you. Kiran Kumari, we love you. Thank you so much.
Alina, thank you. I really have no words to say. I think you have moved everyone here in this room, and I hope your story inspires many generations not to just be bystanders watching what is happening, but to actually motivate themselves to try and drive change. Congratulations, and thank you so much for being the inspiration that you are. Ladies and gentlemen, a big round of applause for the wonderful team at Nifty Cafe.
Ladies and gentlemen, let's give them a standing ovation, please. Request you all to kindly stand up. Thank you, Nifty Cafe, for joining us tonight. Now, a truly inspiring group. Our next icons are known for their extraordinary bravery, the precision of their teamwork, and their life-saving efforts in one of the most challenging and dangerous environments imaginable. With the first batch of women rescue-trained personnel, Singareni Collieries Company Limited, SCCL, has achieved a historic milestone in its 136-year journey by successfully training its first ever batch of 13 women employees in initial mines rescue operations. This pioneering initiative marks a transformative step towards women empowerment and inclusivity in core operational roles within the organization. The intensive training was conducted at the mines rescue station in mines deep beneath the surface, where risk is constant and precision can mean the difference between life and death. They've carved out space in a role few women globally occupy. Please welcome India's women mine rescuers, Smart 191, that is Singareni Mahila Active Rescue Team 191. Ladies and gentlemen, a huge round of applause for the team. Icons tonight are a force of grace, grit, and incredible discipline. Sisters who've turned sibling energy into national glory. One of them is currently ranked world number 4 in inline freestyle skating and has clinched 10 national titles. Earlier this year, she carved her name in history as the first Indian to win gold in classic slalom at the 2025 Asian Roller Skating Championships in South Korea. The other has been beside her through it all, training, competing, and pushing boundaries in her own right as a national level skater. She's glided past expectations, lap after lap, transforming rivalry into rhythm and personal passion into a shared pursuit of excellence. Please welcome on stage the phenomenal skater sisters Shreyasi and Swarali Joshi.
it's a carpeted floor. I know this is not the most conducive for you, but can we get to see something? Just a glimpse of what you do? I know you've already won many, many medals, and you are on your way to also winning as many medals as your sister here. By the way, she started skating when she was 3. She started skating when she was only in a diaper. So congratulations to their mother for giving them the ability to be able to do this. And she's here with us this evening. Please do stand up, Mom. It takes extraordinary mothers and fathers to behind their daughters. So what's the next target for you, and then I'll ask you.
Actually, like she mentioned, my journey began when I was just 3 years old. And last week, my dream came true when I won the first ever medal for India in the Asian Roller Skating Championship. Thank you. And in the second event as well, I won a gold. So it was a double victory for me.
What are you targeting, my dear?
Firstly, I would like to thank CNBC for this award, and it's a great honor to be in such presence. I'm honestly hoping for our sport to be a part of Olympics, but till then, I would like to be a part of the winning team in the upcoming Asian Championships or World Championships, and would like to win medals for India just like my sister.
Congratulations to the wonderful skater sisters. Absolutely phenomenal. Ladies and gentlemen, a big round of applause. Thank you so much for joining us here this evening.
Many congratulations, Shersi and Swarali. What an extraordinary group of women, each a true testament to the power of human potential, unwavering spirit, and the relentless pursuit of excellence. A heartfelt congratulations to all our honorees tonight. Thank you, Mr. Dave. Thank you, Shireen, for doing the honors.
US President Donald Trump has hit India with a 25% tariff, and this is the shocker, a penalty for buying oil from Russia. But we don't know what that penalty amount is. Now, Trump, while calling India a friend in an otherwise very terse statement where he called India's tariffs most strenuous and India's non-trade barriers obnoxious, quote unquote, Trump followed this statement with another statement calling India and Russia, I quote, dead economies. The Indian government's reaction so far has been measured. Sources say many goods, including electronics and pharma, are likely to be exempt from the higher tariffs. This was in fact the case even in April, when the Trump administration had first announced the set of tariffs. Now, the stock market seemed to be betting on the taco trade. Trump always chickens out, because we've seen a dramatic recovery and a rebound from the lows of the day. So how will this tariff tussle pan out for the markets and for the Indian economy at large? This is the editor's playbook. I'm Shireen Bhan. Joining me on the show today, my colleagues Parikshit Luthra, Prashant Nair, Nimesh Shah, Surabhi Upadhyay and Sriram Iyer. Guys, thanks very much for joining us. Before we begin, let's first listen into President Trump on the tariff imposition on India.
Well, we're negotiating right now, and it's also BRICS. You know, they have BRICS, which is basically a group of countries that are anti the United States, and India is a member of that, if you can believe it. And it's an attack on the dollar, and we're not going to let anybody attack the dollar. So it's partially BRICS, and it's partially the trade situation. It's the deficit. We had a tremendous deficit. So, as you know, Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now, they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens. It doesn't matter too much whether we have a deal or whether we charge them a certain tariff. But you'll know at the end of this week. August 1st is a very big day for this country, because money is going to pour into the United States like we've never seen before.
Well, that's President Trump, and of course he's been posting pretty much overnight on Truth Social. But you know what President Trump said there? Not surprising. He's been calling out India for high tariffs, calling India the tariff king and so on and so forth for months, even before he was elected. So that's not new. What's also not new is President Trump going after the BRICS nations, saying that the BRICS countries and the BRICS grouping is anti-America, they're anti the dollar. We've heard that several times in the past, so that's not new either. What is, however, a cause for concern is the manner in which President Trump was tweeting or posting on Truth Social, the language that was being used in those posts. But more importantly, this business of a penalty, the penalty imposition is the new factor. The fact that there would be tariffs coming in because we hadn't been able to work out a deal by the 1st of August, I think everyone had pretty much factored that in. This penalty amount, which by the way hasn't been specified as of yet, is the one that's taken people by surprise. Now, Parikshit, let me start by talking to you, because you've, of course, been in touch with sources in the government here in India, but also with people in the White House. Let's first address what the White House is saying, because all we know at this point in time, what is official, maybe not certain, but what is certainly official at this point in time is that 25% tariff imposition from the 1st of August, which President Trump has said is going to happen. What we don't know is what this penalty amount is likely to be. What does the White House say?
Well, the White House is clearly saying that the 1st August deadline is clear. The tariffs will kick in from there. So 25% immediately across the board is what the Indian exporters have to be ready for. Number two, what are the exemptions? All the exemptions that are continuing right now, such as steel and tariffs, which have a steel and aluminum, which have a 50% tariff. You've got autos, which have a 25% tariff. Those exemptions continue. Also for certain metals, pharmaceuticals, semiconductors, electronic items, which the US
laptops, smartphones.
Exactly. So those exemptions were earlier. Those exemptions continue
till the 14th of August.
For now, till anything changes further.
I mean, the earlier deadline was the 14th of August. So that's where we currently find ourselves.
Where we currently stand. And finally, the penalty has not been decided as yet. Currently, you don't have a tariff schedule. You only have an across-the-board 25% tariff, which the US is saying. And that leads to uncertainty because, you know, Russia-Ukraine talks are happening. Trump has said if within that deadline, the war is not resolved, there will be secondary sanctions.
Yeah.
So there could be more coming India's way.
Well, you know, we will have to wait to see. But as you pointed out, at this point in time, the White House itself is saying that, look, penalties, we don't know just yet what the amount is going to be. But let's now talk about the Indian government, Parikshit. We saw that statement coming in from the government yesterday that they're assessing the situation and so on and so forth. And whatever is done in the nation's interest. What are you hearing at this point in time? What is the approach likely to be? The sixth round of negotiations were expected to take place with the US team coming to India in the second half of August. Does that stand? Is there expected to be any retaliation at this point in time? What are you hearing?
Shireen, it's quite clear we're not close to a trade deal at all. What Donald Trump's anger shows on Truth Social is his frustration with India. He's wanting access on agriculture and dairy, and India has said that we can't even bring that into the negotiating room. And clearly, Donald Trump is very upset with that. He wants an across-the-board deal with India, unprecedented access, major investment commitments, which India is not giving at this stage. Is India going to retaliate? Highly unlikely. One, because there is going to be more action from Donald Trump in the next few weeks. As I spoke about Russia, Ukraine, he will impose tariffs on economies which buy oil and defense equipment
He said that, yeah.
So there is going to be more coming. So even if we do some sort of placating right now, we will again be hit by some sort of penalty 10 days later. So India right now is going to wait and watch. We've been told by government sources today we'll have to weather the storm.
Yeah, in fact, the term being used is India will not jump the gun.
Not jump the gun. And lastly, we now have to realize that what Donald Trump has done today with imposing a 25% tariff, and if he imposes a penalty, it's going to have a long-term implication. The next US president who comes will not reduce this tariff. That will be the beginning of the negotiation with the next US administration. This is a worry in the government.
Well, you know, it is a worry in the government, but also as we've heard several commentators say that, look, what these tariffs do in a multilateral system, in a system that's governed by the WTO, etc. These are unilateral tariffs that are being imposed by the force of an executive order. You know, we had several commerce secretaries and WTO envoys, former WTO envoys, calling these acts illegal, calling this trade anarchy. But this is the Trump era, and this is an era that we are going to have to navigate. And, you know, to your
end
point,
of multilateral institutions.
Well, I don't know, end of multilateral institutions per se at this point in time, but certainly the rules of the game have been upended. But, you know, here's the interesting thing, Parikshit, and I'll come to Surabhi to really understand what the impact is likely to be if it is what President Trump claims tariffs to be. What's interesting is that India and the US were expected to be the first off the block in terms of signing an agreement.
We gave a lot of concessions.
And we gave a lot of concessions.
The Google tax was removed.
Google tax, the digital tax
Tariffs
was removed.
Tariff
on EVs was reduced. Bourbon, whiskey. All of that was done even ahead of the Prime Minister's visit to Washington, D.C. in February. So India had made its intent on wanting to get an agreement done with the Trump administration very, very clear. And we put a lot of eggs on that table, in that basket already, even ahead of the Prime Minister's visit. And here we are, where he signed deals with a whole host of countries, including, by the way, with Pakistan. That's the development that's taken place overnight. I mean, Pakistan has got a deal with the US. But Surabhi, let's talk about the world as it is. And it may change with a tweet. We don't know. But what are brokerages telling you at this point in time about the impact on the economy if the 25% tariff stays and we don't know what the penalty is?
No, absolutely. Just on the penalty and on Parikshit's point, because I've been following every single tweet wherever he's spoken about Russia, Ukraine, and how he'll penalize Russia's trading partners very carefully all through the week. And in one of those statements, he said, I can impose tariffs of up to 100% in terms of penalties with all those who are doing business with Russia. So let's see what he eventually, hands out to us. Now, just talking about the numbers. So why is this important? There is no denying it. The US is India's largest trading partner, and it has been so for the last 4 years in a row, ahead of China, ahead of UAE, and ahead of a lot of other geographies. The value of bilateral trade as of FY25 has crossed $130 billion. India is earning almost $90 billion in exporting goods to the US. So these are large numbers. You cannot ignore them entirely. If I just talk about now the GDP impact. So the numbers by themselves, absolute numbers are large. But as a percentage of GDP, we're a domestic story, right? And that's where there's some comfort coming in. As a percentage of GDP, US exports amount to about 2.1 to 2.2% as of the latest numbers. So this whole deficit business, which he keeps talking about, the deficit with India, and yes, there has been a deficit, no denying that. So as of the latest numbers, FY25 numbers available, we've exported goods worth almost 87 billion to the US. We've imported worth about 45 billion. That leaves a trade deficit for the US, surplus for us, of about 41 billion. And that's his problem. He wants to wipe that off. But it seems it's not just about the deficit. Now it's about geopolitics, it's about Russia, it's about so many other things. Quickly coming to the estimates. So if things stand at 25% tariff, then what could the implications be for Indian GDP? SBI, some of these estimates came in April because we were at 26%. Some are, as of this morning, very, very new numbers. So SBI is saying a 20-25% tariff impact could result in about 50 basis points loss to GDP. They're saying every 1% rise in tariff leads to about 0.5% decline in our exports. Morgan Stanley sees a downside risk ranging between 30 to 60 basis points. Citi is again talking about 0.3 to 0.4% impact. And Nomura is the latest note I read as I walked in. Their estimate is 0.2, 2 percentage points, basically 0.2% sort of an impact to their estimates of 6.2% growth this year. So there is going to be an impact on individual sectors. Of course, it will play out a lot more. I mean, gems and jewelry, whether we're looking at pharma, and pharma is the big sword that's still hanging open. We don't know because that's one of our largest, export contributions.
And that's the one I was saying about
absolutely.
Pharma.
No, pharma, just a quick point on that. As Parikshit was saying, as of now, it is exempt. And it's not just a concern for India, it's a concern for the global industry and for other countries as well, because, President Trump has spoken about, very high tariffs on pharma, but then he also talks about the fact that he'll give 18 months and so on and so forth. The next day, they talk about the fact that it's coming soon. So we don't really know, but what we do know that as of now, pharmaceuticals are exempt under the current regime, which was also made clear in April, and that is the expectation that it's going to go forward. Now, you wanted to make a point.
So pharma, yes. I think you guys have covered it pretty much. It's a big, sword that's hanging on us.
His last comment this week again was bring pharmaceuticals back to America. So
but the question,
I think, interpret it as what that will mean in terms of duties.
Absolutely. But see, essentially the market reaction kind of tells us a story. Even if you are saying 0.6%, 60,
roughly half a percent,
anywhere between 20 basis points.
Market reaction is because of my green shirt, Sriram.
Absolutely.
I don't know what my black shirt is in protest of.
No, sorry.
Pista green, I might add, Prashant.
By the way, the first time I'm wearing it. And
we cited that in the morning today at 8 o'clock, that the biggest support the Bulls will get is from Prashant's shirt, and it's playing out.
Absolutely. And, thank you, Prashant. But see, think about it. 20 to 60 basis points, what we're talking about. Max from 18 to 20 billion or $21 billion is the net impact, which at the R scale doesn't look like a lot. But having said that, we were talking about this just before the show. Nimesh has a different take on why the market is up. I think
so basically, one should not read too much into just one day of pullback, because it's an F1 expiry day. And also the Nifty long short position is extremely short by the FIs. It's the highest short in the system in the last 4 to 6 months. So clearly
did the FIs expect this kind of an explosion?
Something negative can come.
So I think that's a good point, right? Did the FIs expect that these, what happened yesterday may have happened?
Exactly. So today's pullback is largely because of technical reasons. So I won't read too much into it. But clearly,
it's possible that tomorrow they might dump the stocks.
Well, whether they will dump or not,
I'll give you a stat. FPI selling, which had stabilized in the last couple of months. July, we are back to selling. January was selling of almost 90,000 crores in a month. February was again selling. We stabilized next couple of months. And July, we are back down to net sales in the market of about 18,000 crores.
50% we give to Prashant for his green shirt and 50% for the technical reasons.
point about, the markets, and I think the markets will do what the markets do on the back of many factors, not just this. But I think the larger issue is that, look, what happens to the US-India strategic partnership?
Absolutely.
I think that is the larger question, because this has been a relationship, by the way, which has bipartisan support, whether it was a Democrat administration or a Republican administration. India was seen as a natural ally, as a natural partner, as a strategic partnership. So what happens now to this partnership? I think it has implications beyond just the tariffs and so on and so forth. It has implications that go far deeper, and I think that is something that we are going to have to understand and
trust will take
grapple
a
with,
big
and I don't think we have the answers yet.
Yeah, I think
it's been happening
if you
from,
want
right
to
from
do a deal,
Operation
let's say,
Sindoor onwards, yeah.
there are multiple conversations that are open right now, right? Whether it is trade, whether it is FTA, whether it is FDI. Trump also wants our companies to invest there, and all of those things will happen. For all of that to happen, the most fundamental requirement is trust, and I think that has been shaken with yesterday's move. Everybody was saying that, India and US, like you said, we were the first to get off the block in trade talks. The Prime Minister went in February. But see, he wanted 4 things broadly, right? It's come out in the points that you guys made. One is that we should reduce our oil purchases from Russia and weapon purchases from Russia, and buy both of those things from US, not from Russia, less from Russia. I think we have broadly conceded to it. We can't go from 100 to 0.
No, but
there is a document in the US Congress.
Sourcing from Russia is the highest at 34%.
Correct, but it used to be 59% and 60%. The point
has come down, but still.
We are bringing it down, right? So it used to be 60-70%. It's now down to 36 as of 2024 data. There's a US Congress document showing 36%.
But may I say something on that? When we started in April, this was about trade, tariff, trade deficits. Then we were all arguing whether the use of this formula is correct or not. But over the course of the last 3-4 months, it seems to be beyond trade. Look at what he did with Brazil. It's got a quasi-political tone to it, that I'm putting tariffs because, what you're doing to the
So there are 2 things. We have to look
Here
at
it's
the
about
rate.
geopolitics, because you're doing business with Russia or,
So no, so these are 2. I don't think the tariff rate and the narrative are linked. It's only linked in his own head and in his tweets. It's because he can tomorrow, like in the same tweet, he can say we are good friends and still I will do this to you. Right? And similarly, today you have a problem with us buying oil from Russia. 2 months ago, you didn't have a problem talking to Russia. And our Hardeep Singh Puri is on record multiple times on multiple forums saying we had the blessings of US. US said buy oil from Russia at not beyond a certain price. So that on a diplomatic level, there was that assent.
Forget all of that. This was the Trump regime. Mr. Trump, when he took office, what was the overtures? The overtures were being made to Russia. President Putin was his friend. Zelensky was almost the enemy. So things
what
have
has happened
dramatically.
For all that, US now, according to latest estimates, is collecting about $350 billion in new tariff revenue every year. $350 billion.
And this is something, Prashant, without much impact on the inflation in the last 3-4 months. Zero.
Consumer economy
Exactly.
is
I think that inflation data we have to wait for the next
next couple of months of inflation.
Just a couple of points. I think what Parikshit said towards the end of his comments, which is that once tariffs go up, it's very difficult to come down. Like taxes. Taxes go up. They don't come down. Same thing. A tariff is a tax at the end of the day. That is one. The second point is what Shireen said, which is that when all of this started in March or April, India was supposed to be at the front of the line. So, those graphics will come up on your screen. And I think, and I started this morning with that, which is that this is the disappointment. It's not, because the reciprocal tariff was 26. He said 25. 0.5%, 0.4%, we can nitpick. And those numbers are well known in terms of hit to economy expressed as a percentage of GDP. But the point is that we were supposed to have an advantage over some of the other competing countries, exporters into the US. So we don't have an advantage. Actually, we've gone the other side, right? Look at the table on your screen, EU, Japan, everybody between 15 and 20%, and we are 25 plus something. That something is a question mark.
Undefined.
But I don't want to leave it there. It's very easy to say, look at that number and say, well, we are worse off, etc., etc. So what I also did is I looked at what was the starting tariff rate before Trump came to power. at the end of 2024, what is the tariff rate? And that actually reveals the story. All these other countries, EU, Japan, Indonesia, Philippines, Vietnam, etc., guess what the average tariff? It's 1%, 2%, 3.5%, 0.8%, 4%. So the point I'm making is for all these countries, even as we say that, well, all these countries have got deals, we've not got a deal yet. And we've got a threat of 25%. All the effective tariff rate that they charged US imports into their countries was extremely low. Our effective rate, as the end of the same comparable period, our effective rate, what we charged US imports into India, was about 11.6, 11.7%. So much higher. And so, you know, every soundbite that you hear, he says, well, you know, India is the highest tariff country. I think he said it 100, President Trump has said it 100 times since he's taken over.
Nimesh, let's break it down into sectors. And I go back again, as is, where is. If things stay as is, which are the sectors that will feel the heat?
Well, you know, Shireen, before I talk about the individual sectors, overall on the markets, as I explained, today was a technical factor for the markets to pull back. But, you know, now with this tariffs plus something which we don't know, it's only going to add to the uncertainty. Also, the fact that India is relatively underperforming the last 1 month and we are still expensive. So from a market perspective, there will be a overhang now as far as the tariffs are concerned. Now, coming to the individual sectors, we spoke about textile. That's going to be the biggest hit sector for us. Nearly 28% of the exports are to the US, and that will see an impact. And we are seeing on individual stocks as well that the textile space has seen a bit of a reaction today in the market. So that's the first big sector to watch out for. EMS, while, you know, Parikshit mentioned that it's been out of the gambit at right now. But again, you know, that's the fastest growing sector for India. Last year, we saw $40 billion of exports. Now, I think even if, you know, this is out of the tariff right now, it'll have a cap on the growth rate, and that will have an impact on the companies as well. So again, that's one sector to watch out on the negative side. Ports and logistics is an obvious thing. You know, there's going to be an impact on the overall volumes in the next few months. So that will have an impact on those companies as well. And autos, you know, again, that's the big sector. We gave up some of the things to the US, but still, auto is going to be a big auto components is going to be another sector which will be massively hit because of this tariff. So these are the 4-5 sectors which gets negatively impacted because of tariffs.
Auto we gave up for nothing.
We've got nothing.
We gave up for nothing because Musk ended up fighting with Trump. Now Trump doesn't feel satisfied with Tesla's entry.
So those are the 4 sectors. Now a bit of a neutral to not very negative. I would say cap goods is one. Steel and aluminium, everybody's spoken about it. Oil and gas also is something which doesn't get much impacted. And pharma we spoke about. It's not having a big impact on the pharma as well, at least now because it's been excluded. And we have a bit of a pricing power in pharma. So pharma won't be that big impacted because of the tariffs. We need to say as to ultimately what's the
hit will be
tariff plus something which will
the hit will be more on the branded players, not generics.
Not on the generics.
Can I just ask one? I had a question for Shireen and Parikshit. That's a excellent roundup of what happened, what can happen, and who gets hurt. You know, as Surabhi said, that the surplus that we have is $40 billion, right?
$40 billion.
Around $41 billion, $42 billion is our trade surplus with the US.
Yeah. So the question is this. This all started by saying that, you know, we're running large deficits with countries. So ours is $40 billion as of last year. You know, we spent about $130 billion buying oil from outside last year. So is it possible that we kind of buy $40 billion worth of oil from the US? We've got to buy it from somewhere, right? But and will that solve the problem? And it's just a...
No, the transportation cost will be very prohibitive. That's the problem.
And I guess that's where
bringing the oil from there...
Just 1 second. I'll get Parikshit to come in on this. But, you know, as Sriram pointed out, we have increased significantly. Just in the last 6 months, we've increased significantly our imports of energy from the US. I've had several conversations with the oil minister, Hardeep Puri, and he has made it very clear that India is happy to buy more from the US. There's absolutely no problem
so Shireen, if
buy more from the US and in buying more from the US.
If we do 40 billion,
the goalposts keep changing.
If we do 50, you know, if we do, we got to spend this money anyway. You buy it from, and if that amount solves this problem, then why not? I don't know if it's practical. As Sriram says, maybe it's too expensive.
One is can we, you know, and what that means in terms of costs and so on and so forth. But two, you know, as we pointed out, we gave the US a lot of the stuff that the US was asking for. You know, Harley Davidson, cut. Mangoes, done. What is it called? Bourbon, done. We've done a lot of what the US was. Google tax, done.
On that point,
will the goalpost shift again? Is the question.
Because I'm just saying we can.
I mean, add to what Shireen is saying, Prashant. When it comes to energy, for that matter, when Trump was meeting Prime Minister Modi at the White House, post that, the Foreign Secretary had said that we are going to purchase $25 billion worth of oil and gas from the US. That was a very big announcement. J.D. Vance, when he was here in India, in Jaipur, when he was speaking, he said we want to be the #1 energy supplier and defense supplier. So India does not have much to offer. We're a small trading market. We're not among their top 5 trading partners. What can we give to them is large oil purchases, large defense purchases.
So Parikshit,
looking at long-term supplies of F-35s.
Even on defense, forget the F-35s.
We don't even want that.
Forget the F-35s for a second. But on the defense front as well, there has been significant movement, Parikshit. And you were talking to the Defense Secretary just last week on our program, and he was giving us a roadmap of what could be possible.
So 50
looking for something like a fighter jet program, Shireen. What that will do, it will give the US industry a 15 to 20-year roadmap to continue supplying to India.
But we're doing that for Boeing. I mean, look at the commercial orders. Indigo and Airbus, Indigo and Air India are the largest procurers from Boeing. The largest orders being placed by commercial airlines.
Whether it is Boeing or not.
We just got the Apache helicopters for the Indian Army.
Order diya, uska maal to supply karo pehle.
He wants to sell India those F-35s, and India has a historical reluctance with the F-35s because a similar aircraft or earlier generations of that have gone to Pakistan. He's been dropping hints that we'll make it easy, buy this aircraft, because that's the next big purchase that India has to make for its future, for the next 20 to 50 years.
What is at hand is the 1st of August with a 25% tariff kicking in. We still don't have details or any clarity on what that penalty will be. Will the penalty kick in from the 1st of August or not? We don't know, and that is the big question that we need an answer to. India's position is don't jump the gun. We will have to wait to see whether there is going to be any formal response in terms of measures taken, whether we move the WTO or so on and so forth. I mean, those are all issues that are up for discussion. I would imagine there's a lot of conversation at the back end on that. But what is a fact is that there is a 25% tariff. What is still not a certainty is whether that 25% tariff with penalty comes in on the 1st of August. But we will, of course, be tracking this story here on CNBC TV18. Thank you to all of our viewers who joined us on CNBC TV18 Access. Thank you to all of our viewers who join us on CNBC TV18's YouTube channel and those who tune in to us on television. We will continue to bring you all the latest developments. But from Sriram, Nimesh, Surabhi, Prashant, Parikshit and myself, thanks very much for watching the Editor's Playbook.
idea of making something flying.
Going back to the time when you realized that this was no longer fun, that this was actually a need in the market, there was a gap in the market and a gap that you wanted to address.
Given what we had done as students, I had filed a patent, I had done 7 or 8 of my original ideas. My team was even more accomplished in terms of executing technology. We felt like if we also don't do this, who's going to do this in the country, right? We would be like the tiger out of his cage in a zoo, right? You would go to the zoo because you want to see the tiger, but you would not come anywhere close to it if he's out of his cage, right? So we were like that. So I've been to many fundraising events, many occasions where people would get up, and in one of the events they said, I have goosebumps on my hand listening to your story, but funding goes to e-commerce. We are all very happy bashing the country and its talent, but the more I investigate, the more I find pockets of excellence. We got listed. There are more companies in the deep tech that are getting listed. So that belief that investments in this space are also going to be fruitful is something that's coming to fore now. Tomorrow is here, and it is here faster than you can imagine. Like what happened in Galwan told us that we probably don't have enough eyes on our border. We inducted a wave of systems that can operate and give us more eyes on the border, can tell us that whether there is a presence on the other side or not, and all of that intelligence was something we started doing
eyes
then.
on the border without necessarily increasing the feet on the border, and that's an important point to make.
Deep understanding of technology is what's going to fuel our ability to build the next generation systems. It is going to get to our ability to leapfrog trends and create our own trends.
India's drone revolution is taking flight, and leading the charge is a company called Idea Forge Technology. From defense to disaster response, from mining to power transmission, this IIT Bombay-born startup has gone from building campus quadcopters to commanding nearly 50% share of India's UAV market. Hello and welcome to the Young Turks Reloaded podcast. I'm Shireen Bhan. Today we shine the spotlight on Idea Forge Technology, a full-stack drone company from India for the world. Founded in 2007 by Ankit Mehta, Rahul Singh, Ashish Bhatt and Vipul Joshi, Idea Forge has emerged as a global force in dual-use drone tech, with a drone taking off every 3 minutes and over 7 lakh flights completed. 2025 has also been a landmark year. 137 crore rupee order from the Indian Army, the DGC approval to train drone pilots across the country, and UAVs deployed for everything from leopard rescues to live mining surveillance. Joining us now is the man steering the flight, Ankit Mehta, the co-founder and CEO of Idea Forge Technology. Ankit, what an absolute pleasure to have you join us here on the Young Turks podcast. We were just chatting. I actually can't remember the last time that you were on the show, which was quite some time back.
Quite some time back, yeah. I think at least a decade or more.
So that's what I want to go back to. And let's cut back for the benefit of everyone who's watching this to 2007. Now, that was a time that startups like yourselves were betting on the internet, were betting on things like e-commerce. I mean, that's the time when Flipkart happened, when Zomato kind of happened, 197 and Paytm happened. The decision for you to say, we're going to do drones, when nobody was talking about drones in this country. Defense has always been one of the most difficult sectors to get into. What made you have the audacity of hope to want to do this?
So I think, Shireen, thank you so much for having me on the show. And I think, it's a long journey in terms of the time that we have spent, but it's even longer us building drones. So actually, we built our first drone when we were still students at IIT Bombay, and it was a fun project. One of my co-founders came up to me and he said that I want to make a hovercraft and float it in the Powai Lake, Rahul. And I was like, this sounds like very interesting. Like nobody ever came up to me and said, I want to make something flying. And that was because I used to lead an innovation cell where the mandate was that if somebody has a quote-unquote crazy idea, then the institute was willing to give funding for that. So that's the privilege of studying at IIT Bombay. So we just took that crazy idea. We built a few prototypes. We realized that maybe we need something more innovative for the program that we could get funding for. And that's when we came up with this idea of these 4 rotors. We thought that we've revolutionized aviation, not knowing 60 years back that revolution had already happened, but nothing changed. But I think it was an idea whose time had come. We built our first prototype and we got hooked onto the idea of making something flying. And we kept iterating on that over the next few years. And in 2008, and so what happened was that I graduated in 2005.
Right.
About a year later, I in 6 months I quit a job that I had taken to survive the next 6. And then when I came back, we needed to sustain somehow. So we used to take these projects from IIT Bombay's aerospace department.
Okay.
And those projects used to be our sustenance mode. And those projects were for building avionics for hobby aircrafts that many people used to fly and continue to fly even today, where you have to build a small aircraft with your own hands and fly it, right?
Yeah.
So we built the electronics for it, and we realized that we've built an autopilot which can actually fly the thing autonomously. So to build and to drive that autopilot, we had to build a ground control station as well. So while doing all of this work with IIT Bombay, we helped them secure top honors alongside MIT US in a competition. And that sort of brought us to the light to all the labs in the country, and they decided that they would like to get the tech we had built, which was the autopilot, so that their drone programs could be made successful. So in 2008-9 timeframe, we delivered actually the world's smallest and lightest autopilot to our labs in the country and made many of their drone programs autonomous. So that's how the journey for doing drones began for us in that one sense. And then in 2008, when attacks on Mumbai were happening and we were hearing that naval helicopters are looking into the 3rd and 4th floor of the hotel, we felt like that should not be happening. Maybe drones should be doing that job, right? And that's when we decided that all of this fun, whatever we were doing with this technology, we should convert it into a product. And we launched our first quadcopter drone and the country's first drone in that one sense in 2009. So that's how the journey began.
That's how the journey began. And today you're a listed entity on Dalal Street as well. But Ankit, going back to the time when you realized that this was no longer fun, that this was actually a need in the market. There was a gap in the market and a gap that you wanted to address. When you actually took the first steps towards formalizing this into a business, what were the reactions then? Because I come back to my point that the government is the only procurer by and large. And that is the hardest thing to deal with, because the vagaries of the procurement process have brought many to their knees. What gave you the confidence of saying we can do this?
So sometimes, your ignorance helps you. So I think, we knew building hardware is going to be hard, right? And if you remember, when we first met, we actually met for a slightly different business that we used to do. When we started off, we wanted to make these portable hand crank chargers for mobile phones to survive off-grid. So that's the business we met for, right? So that was the idea we started off with. So hardware we knew is going to be very hard. But given what we had done as students, I had filed a patent, I had done 7 or 8 of my original ideas. My team was even more accomplished in terms of executing technology. We felt like if we also don't do this, who's going to do this in the country, right? So we decided that it's going to be hard. So we were prepared for it to be tough. But, I have this expression for my fate of affairs. In any event we would go to, we would be like the tiger out of his cage in a zoo, right? You would go to the zoo because you want to see the tiger, but you would not come anywhere close to it if he's out of his cage, right? So we were like that. So I've been to many fundraising events, many occasions where people would get up, and in one of the events they said, I have goosebumps on my hand listening to your story, but funding goes to e-commerce. So it's been tough in terms of building this in India, and there weren't too many examples, and most examples were negative when it comes to supplying to the government. But our own experience was, in a way, interacting with the customer very different. Because users actually are very, very keen on adopting technology because they can see that the technology can potentially benefit their operations. They can reduce the risk to their lives. So users, I usually find, are very, very keen on adoption of technology. But our processes are such that it becomes a big challenge for them to adopt innovation. So if I am the only company making drones in the country, I still have to have many peers for the procurement process to get through for them to get the technology, right? So that ability to buy innovation is what we are still, I would say, is still our Achilles heel as a country in that one sense.
It is, and it continues to be a big Achilles heel. But, I want to address the issue of innovation. And I'll ask you this in the context of the big debate that's raging. Can India do deep tech? Is India ready to do deep tech? Now, that's a bet that you made over a decade ago. And so as you look at the commentary that's playing out, and there is some cause for legitimate concern, but I think to my mind, I'm looking for ways to move forward. I'm looking for what should be the solutions to ensure that we actually create a robust culture of deep tech companies in India. How do you look at this debate as it's playing out?
See, I think, it is I feel a little disappointed that the right stories are not used. And we are all very happy bashing the country and its talent. But the more I investigate, the more I find pockets of excellence that have been around for a reasonably long while, right? I mean, it's not like people have not been building technology from grounds up in the country. Even more than us. Like if you look at Tejas Networks, if you look at some other companies, we've been doing deep tech in the country for a really long while. But I think as a wider, absorption of the technology, I think one is that deep tech has always not been the kind of, you can say scale up or expectation that investors had from e-commerce, because the ramp ups, you could burn money and get an outcome in that one sense. But in deep tech, you can't do that, right? There is a limit to which you can burn. The outcome will happen when the technology gets built and the outcomes mature and you have the talent. So I think the understanding of those cycles is very important. And understanding, and this is something that we've been blessed with very good investors, right? And he said that deep tech is the only way everything built above is going to accelerate as well. So it's not like neural compute is not going to help AI, right? So neural compute, if it is deep tech, then AI has to advance, and it will advance even more when neural compute or quantum compute, many of those things are available. But the challenge is that the cycles in which this gets built and this gets into the market and matures are different from the cycles of what gets built on top.
Correct.
So I think, globally, I think we would have to find a balance of knowing that it can't all be this, and obviously it can't all be this, right? Because this needs that layer on top to make it shine.
And the disproportionate attention is focused on the layer on top.
On the layer on top, that is the challenge. And India does not have too many examples of such deep tech, successes for people to feel that it's safe and it can be done in India. But I think now it is changing. We have so many companies that are getting listed. Tejas got listed and got an exit. And we got listed. There are more companies in the deep tech that are getting listed. So that belief that investments in this space are also going to be fruitful is something that's coming to fore now. And I think that self-confidence is also coming to the fore now, which is where I think we should stop beating ourselves too much, right? We should look at these pockets of excellence, because technology is not about, it's not a mystery when you start doing it. It's the step of starting to do it that's the bigger, headache in people's mind, or the bigger battle.
you talked about how we're probably at an inflection point of sorts as far as India's deep tech, relatively younger startup ecosystem is concerned. What I want to understand from you now is the drone landscape in India specifically, and also the global opportunity that's opened up. I think the Russia-Ukraine war, and then of course Operation Sindoor closer to home, has put the spotlight very, very sharply on the fact that this is the new era of warfare. Drone warfare is going to be the future. I mean, you've even got a commentary coming in that do we even need stealth fighters? Drones can do everything.
Correct.
Again, as you look at 2007 to 2025 and the landscape changing for drones, I want to understand from you, how do you see it?
No, I think, I think we have to realize that the world is changing in a way that, doesn't even give us time to adapt to the change, right? When drones came in, at that time, and it has still been a slightly slower pace of induction. But if you look at what the larger drones were doing, even at that time frame in the Afghanistan and the counter-terrorism operations that the US was doing in certain areas, drones were pretty much a daily affair when it comes to military operations. Now that coming to this smaller size of systems was a progression that is, I would say, taken longer than is usual these days. But I think that's no longer going to be the case. Literally now, globally, technology and its adoption is accelerating at a pace that gives us no time to adapt.
Okay.
And therefore, what started off as being a very slow realization that this is tomorrow is now due tomorrow is here, and it is here faster than you can imagine. Like what happened in Galwan told us that we probably don't have enough eyes on our border. We inducted a wave of systems that can operate and give us more eyes on the border, can tell us that whether there is a presence on the other side or not. And all of that intelligence was something we started doing
eyes
then.
on the border without necessarily increasing the feet on the border. And that's an important point to make.
Because at higher altitudes, etc., increasing feet is very hard.
Yeah.
So you need force multipliers, and drone technology is the biggest force multiplier that you can get in terms of observation, at least, right?
And that's what you guys do.
That's what we do, and that's the persistence that is needed as well. Because with persistence, you can actually prevent a lot of issues. In fact, I'll give you an example. Recently, we were there in an enterprise, and we were there for almost a year, and then they said that, okay, we'll probably hold this back for about a couple of months. And they saw that their incursion started to increase, theft went up, incidents started to happen because the deterrence went away.
Right.
So when such a technology becomes a deterrence, you don't realize, and that presence creates a big difference. And now we are getting back into that same enterprise.
You do work closely with the government and with the defense forces. What was going on at that point in time during Operation Sindoor? How was Idea Forge involved in any fashion, if at all?
Yeah, so I think, first of all, I think the terror incident happened. And, the moment the incident happened, we were very clear that we will need to find the perpetrators. And I think as a team, we said voluntarily that if there is any support needed on ground to find these people, we would be very happy to help. And we sent our teams there. They were on the ground trying to help find the people who were... This was all before the actual operations happened.
That's
right?
correct.
So that's something that we did because we felt that that's what was needed for the country in that immediate moment. And we also helped whoever had our assets. Armed forces have our assets. So we also helped them operationalize their asset if they needed anything that they would want to get done from us. On top of that, when the actual operations happen, of course, civilians have to peel back, and we have to make sure that our civil forces are at the safety level. But we know and we are aware that the forces have used the technology. There are pockets where it could not be used. Those are the learnings from the Op Sindoor. But at the same time, there are pockets where they were able to exploit it, and they were able to cause the ability to get the targets on the other side, observe the targets on the other side, and then neutralize them as well through other means, not necessarily from our drones, because our drones are not capable of targeting at this point in time.
You talked about the learnings, and that's what I want to understand from you, because I think there's learnings for everybody involved. What have been some of the learnings on why you were not being able to use those assets in specific circumstances?
So, what was bought earlier did not have the element of electronic warfare resilience, right? Because rightfully so, because at that time that was not the reality of the global environment. But now electronic warfare, particularly starting from the Russia-Ukraine war, has become a very, very strong reality. And therefore, you need to have resilience to that. So in pockets where you are getting jammed, you will obviously not be able to do a mission if you don't have resilience to that baked in today. But now I think that learning has come in. And good part is that we have been observing this from the global environment for the last few years. In fact, one of the very clear strategies that we had highlighted during even our IPO time was that we want to be investing in capabilities like GPS denied navigation, frequency hopping, and resilient communication. So that's a theme that we had been internally running for a while because we knew it is coming. It became real very suddenly, much sooner than anybody else thought it will become, for us as well. And therefore, we were immediately required to test if we have resilience to that capability. And, gladly we do have that capability, and it has been built on our in-house technology.
AI, since we haven't spoken about it yet, what are you doing on that front? How is it changing things for you? Where are you on adoption?
So it's very...
And how does it help the results and the outcomes?
So I think for, surveillance activities, we have been deploying AI-based capabilities such as people detection in both day and night videos for about 3-4 years now. So we have developed that capability with our partners. So that is one part that we've been doing for some time. Now it is moving to the next level where it is going to become multi-object detection. It's going to become triggers based on that, tracking based on that. So on the outcome side, it's going to become more involved. On the input side of things, what is needed to fly the drone. For example, we've recently developed a AI-based visual inertial navigation solution that allows you to operate even when GPS is not there. So those kind of capabilities are also coming on board. In fact, we are also working with third-party partners to host different payloads on the drone so that the type of observation that a customer may need that I may not think of today, somebody else may have already thought about it. They can host the platform on a reliable, high-performance solution that we deliver and give a more meaningful outcome to the end customer.
So over the next, I'm not asking you about the next quarter or even the few quarters ahead, but as you see the India opportunity change, the global opportunity emerge for a company like yours, what potentially could the revenue mix be in terms of both civil use as well as defense use as far as your drones are concerned? I mean, what's the aspiration that you're working with?
See, I'll tell you what the global sort of trends are, indicating that defense at maturity may be about 30 to 40% of the overall business in drones. Civil other uses will be about another 30% of the drone business. And there is a very interesting chunk of mobility, logistics, that's going to occupy a pretty large chunk in the future because that's an area where scale is, I would say, largely private. And it is a very important area of exploration. It is the most regulatory wise limited. And also it is limited by particularly ROI in this case because it is not obvious right now how delivering from drones will be less expensive than what we are getting from a big basket today or a
Blinkit.
So that is something which is not clear yet in terms of ROI on that piece for last mile, but for middle mile and logistics for middle mile from hub to hub, and many of those operations as it becomes autonomous, as it is allowed for operations, it will be something that will bring in a massive revolution in this space as well. So we are looking for very exciting times.
Is that something you're betting on or working
towards?
Yeah,
actually we're building a logistics platform. We're building a drone that can potentially do anywhere between 50 to 200 kgs of payload capacity capable of operating at the highest altitude of even more than 6,500 meters.
Okay.
So we are talking about a very, very capable drone that can do something that both our defense forces would need at very high altitudes, as well as what's going to be required for hub-to-hub middle mile logistics in other areas as well.
So, as somebody who has a patent to his name, as you look ahead from an innovation standpoint, what excites you about what's going on inside Idea Forge today, and what we could potentially see in the next few years as far as tech breakthroughs are concerned?
So I think what is going on inside today, what is actually very heartening for me is that we took a certain directional approach, mindset in terms of what we need to build to be ready for the future. And that's played out really nicely. Like the platform categories we chose, the technologies we chose to focus on, they've actually become very relevant right now in a very massive urgency. So I am actually right now very excited to get everything to finish line.
How close are you to the finish line?
Not too far. Not too far on many of those critical vectors that are needed today. But at the same time, I think I continue to be excited about our ability to keep doing this, to keep rinsing and repeating this, of predicting what will be needed, what will be critical, what will be valuable for us as a business, as well as for the kind of customers we service, and building that stack. I think that's going to be very, very exciting for us.
Well, Ankit, we wish you the very best of luck. Thanks very much for joining us and giving us an explainer on what's happening in the drone market here in India, but more importantly, the trends that we should be mindful of as this industry evolves over the next few years. Thanks very much, and we wish you the very best of luck with the vision for the future and luck with the procurement cycle as well. Appreciate you joining us here on the show. Well, with that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast. From all of us here on the show, goodbye. Thanks very much for watching. If you enjoyed this conversation, then visit us on CNBCTV18.com, CNBC TV18 Access, and CNBC TV18 Prime. Goodbye, and many thanks for watching.
Welcome to Indianomics. The June CPI number coming in at a 6.5-year low of 2.1% has led to a few things. One, most economists have revised down their average CPI forecast for FY26, this year that is, to 3.2 to 3.3% against Reserve Bank's forecast of 3.7%. Second, many are penciling in another rate cut. Third, most are not expecting it in August itself. And fourth, above all, bankers and bond dealers are watching Reserve Bank's liquidity policy. How much liquidity Reserve Bank will add or remove from the system and when will determine bond yields and the rate cut transmission. Now, equity investors in banks are still penciling in about 12% credit growth on hopes of a 10% nominal GDP. That may be up for threat. And they're also penciling in an end to the rate cycle. These are what equity investors are penciling in. So today on Indianomics, we have three experts to help us understand how growth, inflation and liquidity may pan out. I have with me Saugata Bhattacharya, Senior Fellow at the CPR, Center for Policy Research, more importantly, MPC member. Neeraj Gambhir, the Group Executive and Head Treasury Markets and Wholesale Banking at Axis Bank, and Samiran Chakrabarti, Chief Economist at Citi India. Gentlemen, good morning and thank you very much for joining me in what's a very crucial conversation. Saugata, first your thoughts on the CPI number, deflation in food inflation and core as well, pretty much under control.
So hi, Lata, thank you very much for having me on your show. So a couple of observations. Yes, the CPI food overall headline and food inflation numbers came in a little lower than what markets had been expecting, but this has begun to emerge as a trend for the last 3 or 4 the CPI prints, we have seen this happening. This, to my mind, is very much a one-off. One, as everybody now already knows, I mean, this is partially due to the base effect of a very high inflation print, 5.1% in June of last year. So the next two inflation prints are likely to be higher headline prints. Overall, we are in a very good place, very good position in terms of inflation. As you mentioned, I think inflation for the year is likely to be lower than the RBI, the current RBI forecast. So that definitely gives us room, gives room for the RBI, the MPC to continue with the easing cycle. It's just that the pace is unclear. On core inflation, which is what is probably important from a policy making point of view. I think the 4.55% that we have seen in June is likely to peak out, given the fact that base rates, the base effect of core inflation, has been increasing. So I mean, I don't expect a dramatic increase in core inflation, given the fundamentals that are driving core metals prices, commodities prices, etc., seem also to be in a good position. They are very unlikely, particularly crude prices, are unlikely to increase. So I think from the inflationary point of view, I think monetary policy is in a good position. But again, I mean, there are multiple other things to consider.
Okay. Well, Samiran, you're the person in the among the people I spoke to with the lowest inflation expectation for July. Your number is 1.1. So tell us your trajectory. Does it get much below what Reserve Bank has forecast in June?
Thanks, Lata. So yes, we are looking at a 1.5 kind of CPI for August, but this will be which will come out in August for the month of July. But this will probably be the trough on the inflation trajectory. We are now looking at the July-September quarter to be averaging about 1.9%. But at the same time, we think that all the stimulus that is going into the economy, that with a little bit lag will start impacting demand also. So we have actually built in a slightly higher momentum in core inflation for the last quarter of the year. And that's why our last quarter average headline CPI is marginally ahead of the RBI's current forecast at around 4.7%. Altogether, the full year average is about 3.2%. The critical part, which always is very difficult to forecast, is the vegetable price trajectory. But other than vegetable prices, I think most of the non-veggie food prices are behaving very, in a very benign way. So given how the monsoon has panned out, we think that trend is going to continue as well. So overall, it seems to be, at least in the near term, a very low inflation path that we are going to follow.
Okay. Neeraj, what are the markets expecting from Reserve Bank? If the number, as Samiran is putting it, is going to be 1 point something, maybe even lower than 1.5, will they go ahead and cut despite the neutral stance?
So I think given the inflation outcome and given what Samiran has said, I think the markets are broadly in line with the fact that the next reading is going to be a low reading, but after that we'll see some recovery in inflation numbers, some pull up in inflation numbers. But given the expected outcome on inflation, despite that, I don't think the markets are expecting a rate cut in August, as you yourself mentioned in the initial part of this program. The key reason is twofold. First is that Reserve Bank has already front-loaded a lot of monetary policy action. I think given what they did in the last policy, it was much more than what the market had expected. And I think with that size of monetary policy impetus given, I would guess the Reserve Bank would like to wait a little bit longer before taking the next step. Second is that the action on the liquidity front is also a little bit unclear. There is ample liquidity in the system. There is approximately 3 lakh crore surplus in the system currently. If Reserve Bank does not conduct variable rate reverse repo auctions, then all this liquidity will sit in the SDF, which is where the rate is 5.25. But if Reserve Bank continues to do VRRs and keeps on, it will effectively pull the overnight rate up towards the repo rate. So currently the market is expecting Reserve Bank to continue with the VRRs and pull the overnight towards repo rate, which basically means that, there is an implied 25 basis point hike in the overnight rates, right? So these are the two forces which are kind of playing out, which is why you're seeing bond market to be very, very stable at this point in time.
Okay. Yeah, I agree. Moving more towards 5.4, actually, the call rate from below 5/4 some time back. Saugata, I'm going to ask you two quick questions because you're not going to be with us after the break. Our discussion will continue. One is, how should central bankers think of inflation? Should they think of the fact that all through 2025, we are going to have 3% or below inflation, which means the real rate is more than 250 basis points? Or should they think of the 1 year forward, in which case 1 year ahead you may have a 4% plus? What should be the standard way of thinking?
So, I think this question has been settled in multiple papers, theoretical, academic discussions, and Samiran put it very, very clearly. That it's not just the next couple of prints, the next quarter. You have to look at it over the course of the year, probably across the cycle. Again, I still go by the RBI's forecast, but even there, it does seem to be on an upward trajectory after, say, from the third quarter onwards. So obviously, this is not. You hear the argument that it's best to cut the policy rate before start with another easing, make another easing move before inflation starts moving upwards. I don't think that's a correct argument because obviously the monetary policy easing cycle, as the name implies, is over the course of the cycle.
Okay.
So you have to consider that. On top of that, you have to look at various other measures which might impinge on core and headline inflation going forward. The inflation growth trade-off, global uncertainty, volatility, etc. So I think caution that I at least particularly keep talking about. I think that needs to be very much in place in looking at the path of monetary policy.
Okay. Let me pack two quick questions before you leave us. One, do you personally think that there is space? Because if you look at current inflation, there seems to be a lot of space. If you look at 1 year ahead, you can even argue there is no space. And the governor's statements can be interpreted either way in his interview to me. That one question. And the other one, would growth move the RBI more? And are you worried about growth? In the sense, the WPI number came in at deflation. It came in at minus 0.3. So, is there a growth scare as well?
So again, growth is definitely the impulses that you see, the data, the high frequency data that you see, definitely suggests that some ambiguity on growth. It's not very clear. I still go by the 6.5%, the forecast for FY26 growth. If we actually do grow at 6.5%, I think we are okay in this current market with the amount of elevated uncertainty that still remains. We have no idea where the overall tariff situation is going, where the trade situation is going. I think we are in a good position in terms of growth. Of course, we need to support growth given the space that the inflation trajectory even over the course of the year provides. But I think at this point in time, as Neeraj mentioned, I think the liquidity support that the RBI has provided, I think that's a far more critical thing in terms of looking at transmission, in terms of credit growth. In terms of credit growth, which is an important part of the monetary policy cycle target, the objective, I need to point out that it's not just bank credit. The overall flow of resources in the corporate sector, that's very, very, the amount of money that's been raised to the corporate bond market, I think is very, very, very high this time and is expected to remain high. Transmission has been faster in the corporate bond market. So, we need to look at the overall flow of credit, not just from the bank credit side.
Fair point. So you see space for a further fall in rates?
In short, yes. Okay. Yes, I see space, but that obviously depends on multiple factors going forward, particularly inflation.
Okay. Well, thanks a lot for that, Saugata. We'll take your leave. Neeraj, Samiran, please stay on. Quick break, and we are back with more questions. Welcome back to Indianomics. This one has been triggered by the ultra low or unexpectedly low CPI number that we got for June of 2.1, with a large part of the economists community now expecting the full year inflation to be as low as 1990 levels, 3.2%. The resultant impact on what RBI might do in terms of liquidity and rates is what we are discussing. We had Saugata Bhattacharya, the MPC member, plus Neeraj Gambhir and Samiran Chakrabarti speaking to us. Neeraj and Samiran, thank you very much for staying on. Samiran, if you can analyze the impact on credit growth, do you think that the Reserve Bank needs to do more in terms of both liquidity and rates to push credit growth? There are a lot of people who are expecting only single digits. Can Reserve Bank make a difference with liquidity?
It boils down to how you were looking at credit growth, whether you were looking at it from the demand side or you were looking at it from the supply side. Our sense is that the demand side is still weak on the credit growth front, and that's because of two broad reasons. One is that the interest sensitivity of segments of credit demand is often low. There are only a handful of them where the interest rate sensitivity shows up in a big way. And the second is, as Saugata was mentioning, the borrowers are looking at alternative sources of funding, including corporate bond, ECBs, et cetera, as well as a large chunk of equity funding, which is replacing probably debt funding. So I think the demand side would not be the trigger for credit growth to improve, but we should not be ignoring the supply side. There is substantial amount of liquidity that has been given to the banking system. At some point of time, the banks will try to offload this liquidity onto the system. This can happen through the NBFCs who have a larger feet on the street. So through the supply side, the first trigger for credit growth could come in. So I will not be surprised if the credit growth numbers inch up to 12-13% at the back end of the year when the full effect of this monetary transmission takes shape.
Okay. What's your sense, Neeraj? I mean, put on your banker's hat and think, what will a punishing amount of liquidity, every day bankers forced to give money to the Reserve Bank at 5/4 or even maybe if there is a rate cut at 5% to RBI, would that be trigger enough to force bankers to lend? In the last cycle, of course, it was very long ago, in the 2000 to 2004 rate cutting cycle, you did not see credit offtake up until 2004. It took 4 years. And then, of course, credit growth jumped to 25%. But rates falling from some 10% to 6.5% did not increase credit growth. Bankers remained cautious or borrowers remained cautious. What's your sense now?
So my sense is that hoping that this dose of liquidity and the rate cuts that Reserve Bank has done, coupled with the fact that government is doing spending on the capital side, there is some front loading of subsidies. So there is a push towards increasing sort of demand, even though I agree with Samiran, the demand side is looking a bit weak. I think all of these factors will combine to give us a better outcome on credit in the second half of this year. Currently, the credit growth is at about 9 or 10%, somewhere in between. And we will slowly inch up towards 12%. I still don't see it going significantly beyond 12-13% for this year because the demand from large corporates, the demand from overall corporate sector still continues to be somewhat weak. Now, when will monetary policy deliver? I think it's an open question. There is no clear timeline. I've seen at least 4-5 cycles now. Each cycle is very different. And the drivers of credit growth in each cycle are also very different. I think if you remember, between 2012 to 2014, the big driver was infra spending, right? So between 2017-18 to 2020, the driver was retail lending. So every time we've seen a slightly different driver of credit growth. We'll have to see this time around in the revival sort of leg of credit, which sort of segments play their bigger than usual part in terms of driving it back. But I think I would expect that as liquidity settles down in the system, as the rates settle down in the system, they have done to a large extent on the lending side, but also from banks' perspective, the cost of funds steadily comes down. there will be some impetus to bring the credit growth back towards 12-13% numbers by the end of this year.
Okay. A two-part question for you, Samir, and actually I'll put it in two separate questions. One, this 12-13% number is coming into question more because now the nominal GDP is going to be very low. If we are going with a 3.2% CPI and a lower WPI, then the nominal GDP perhaps will not even touch 9. It could be even sub 9. And then the credit growth, if it is 1.1 times nominal GDP or something like that, we may not get beyond, maybe barely make it to double digit. Is that an argument?
So first, we are not talking of kind of average credit growth here. Okay. We are talking more about what the credit growth would be, exit credit growth type of thing. And that, to some extent, will benefit from a bit of base effect of last year when in the latter part of the year, the credit growth actually tapered off. So from there, the favorable base should help. And, there are times when the system is trying to push higher credit. It's not for the first time that we will be seeing that credit growth will be substantially higher than that mechanical rule of X times nominal GDP growth. It could possibly be the case, but my bigger worry actually is that to what extent the non-banking channels of credit and equity would drive the financing rather than the banking credit. Fair. As Neeraj said, that there could be different pockets of credit that could emerge, not the traditional ones.
No, fair point. NBFCs are more nimble. And since there's a banking system is actually negative year-on-year terms in terms of their loans to NBFCs, maybe that route will fire. But Samir, a more general question on growth. The Reserve Bank can be moved to cut if it genuinely perceives danger to growth. Is the 6.5 in danger? Is even 6.3 in danger in terms of growth rate?
Right now, for the April-June quarter high-frequency data, I think we are tracking somewhere around 6.5 only on GDP growth. We will get to see the corporate results now, which have a large bearing on the final GDP number. So we might have tweaked the number a little bit here and there to adjust for it. The open question is that when this tariff-related uncertainty settles down and whether the average tariffs settle down at 20% for US or at 25%, depending upon that, we might see the global headwinds. We have to consider that to what extent that creates a downward bias. But at the same time, I think the markets are generally underappreciating the size of the stimulus. There's a 30 basis point of GDP coming out of tax cut. Our estimate is 40 basis point of GDP is the immediate impact of the 100 basis point rate cut on household borrowing. And then there could be about 30 basis point more coming out of higher credit growth. So altogether, about 1% of GDP, monetary and fiscal stimulus is there in the system. So that should show up in numbers at the latter part of the year is what our call is. So not thinking that the growth outlook is necessarily very bearish.
Okay. There have been economists who are telling me that even in Q1, while latter part, even in Q1, if the normal GDP is C plus G plus I plus net exports, especially service exports have done well. Goods exports were flat even last year. So in terms of input into GDP, exports have not taken away anything, plus government spending much better than last year. So we could get a good growth number. And therefore, we are coming to Neeraj's forecast or the bond market's forecast. If the expectation is that growth is not under threat and the RBI argues in its own mind that when I go to the August policy, I will have a July CPI which will be 1.1 if you're right, Samiran. So there will be more pressure on me in August, so why should there'll be more pressure on me in October, so why give away the rate cut now? So be that as it may, Neeraj, if there is no rate cut in the August policy, but the governor sounds dovish, saying that, if inflation surprises on the downside, etc., how will the bond markets react? Because bond markets have been, completely ignoring any chances of rate cut or low inflation. They're still sitting at 6.3, a good 15 basis points higher than the low before the June policy. Do you see any fall in bond yields?
Okay, let me just answer this in terms of what the expectation of bond market from MPC is. I think the base case or the general expectation is for no rate cut in August. Obviously, the tonality of the MPC and the language around the forward-looking view on inflation, the forward-looking view on growth is what the market will be watching out for. And I think given what we've seen in terms of data and given the commentary that even Shamran talked about, I think there is a case that you could build a case for an October rate cut, but I think between August and October also we'll have some more data. So my guess is that the Reserve Bank would likely wait until October, see data between July, August and October and see how things are playing out, particularly on the growth fund before taking a call on the October rate cut. As far as bond market is concerned, unless and until it gets a very clear signal from Reserve Bank that the next rate cut is going to happen, I don't expect a meaningful slide in bond yields. I think we will be in a very range bound mode, around 6.25 to 6.3%. All the positives have been discounted. Good liquidity has been discounted. If anything, the overnight rates are now going to inch up towards 5.5 possibly. So I don't see a significant positive momentum, but at the same point in time, no reason for yields to actually go up from where we are right now.
Okay. Well, we'll have to leave it at that. I might just tell you that there's one more positive. One person told me before, when I was preparing for this interview, that the borrowing calendar for the next second half may have much fewer 30 to 50 year tenor because, you're getting such an attractive rate at the lower end. The government may rethink or the RBI may advise it to bring it down. Then there is a bit of a rally perhaps at the steeper end of the curve. Let's wait and see. Many moving parts here. Samiran, Neeraj, thank you very much for continuing with this conversation and helping our understanding of what to expect from the Reserve Bank in terms of inflation and growth numbers, as well as how the bond market will behave. That's it on this edition of Indianomics. Thanks for watching.
Let's talk money.
Hello and welcome to this week's edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, it's been a news and noise-heavy first half of the calendar year. Markets have been volatile, yet resilient. They've been dealing with all the war and tariff developments that have been thrown around. But one thing that investors have perhaps rediscovered in 2025 is that making money is not a straight line process. So it's a good time to revisit some of the ground rules of portfolio planning and also talk about why a portfolio shouldn't be too skewed towards any one particular asset class, even if that asset class is equity. Today on the show, I have with me Alek Yadav of Sanctum Wealth, who will tell us the 5 mistakes to avoid in our portfolio. And of course, then he'll also shine a light on how hybrid funds perhaps can help us enhance overall returns just that little bit. Alek, great to have you back on the show. So thank you so much for being here.
Thank you so much. Thanks for having me again.
So I want to start with a dipstick mood check first.
Yeah.
Because this has been, like I said, it's been so noisy, right? All kinds of news.
Yeah.
And you don't know tariff and Mr. Trump is telling you that the whole world has to be reset and geopolitics. What is the feedback you've received from clients? What are they saying? Are they still buying every dip?
Sure. Yeah. So I think there's a little bit of concern that is there amongst investors as well. So that